This PDF is available in my website. They have uploaded it. You can check. So those who are watching online, it is there in my website under downloads. If you scroll down below, you can see CMA Final Mighty 50 for June 25 exam like that. Just download that for your reference, and for you, our team will arrange the handout tomorrow. Okay, maybe today evening or tomorrow morning they will arrange. Meanwhile, you can just look into the screen and you can happily listen to these questions. So first one, and wherever you have doubt with respect to the concept, you ask me, I will explain. Okay. So question number 1, Jaskaran, a registered supplier of Delhi. These 50 questions covers everything across all the chapters, okay, except duty drawback and SCZ. That I have not given because it's not that important and all, but remaining things and all I have fully covered. Jaskaran, a registered supplier of Delhi, has made the following supplies in the month of January 2021. Supply of 20,000 packages at rupees 30 each to Shukija gift shop in Punjab. Each package consists of 2 chocolates, 2 fruit juice bottles and a packet of toy balloons, 6 lakhs. And below they have given the rates. Chocolate rate is 9%, 9% and 18%. Fruit juice bottle rate is 6%, 6% and 12%, and toy balloons is 2.5, 2.5 and 5%. You tell me whether it is naturally bundled or not naturally bundled. First, there is a concept of composite supply. There is a concept of composite supply and mixed supply. This question is based on that. You can open your book and see there. So I have given one chart for composite supply and mixed supply. Just follow that chart so that any question related to composite supply can be answered based on this. This chart is in page number 28. This chart is in page number 28. Page 28. You can see there 2 or more supplies in a single transaction. Yes. Okay. Then only we will apply composite supply, mixed supply. For composite supply, 3 conditions should be satisfied. What are the 3 conditions? All the supplies should be taxable and naturally bundled in the ordinary course of business. Naturally bundled means one cannot be supplied without the another. And the principal supply is identifiable. Means principal supply means that is a predominant element in the transaction. If these 3 conditions are satisfied, then it will be coming under composite supply. If it is composite supply, we will take the rate of principal supply and apply it on the entire transaction. If any one condition is not satisfied, then it will not be coming under composite supply. Then we need to check for mixed supply. All the 3 conditions should be satisfied, then only composite supply. What are the 3 conditions? All are taxable, naturally bundled in the ordinary course of business, principal supply is identifiable, then only it is composite supply. If any one condition not satisfied, it is not a composite supply. But to become mixed supply, only one condition is there, that this should be single price. If it becomes single price, then it will be coming under mixed supply. If it is composite supply, what I told you, amongst the given supplies, you identify which one is a principal supply and you take that rate and apply it on the entire transaction. But when it is mixed supply, we will take the highest rate and apply it on the entire transaction. What if it is neither composite supply nor mixed supply? Then it will be coming under individual supplies. When it is individual supplies, we will take the respective rate for the respective supply and you determine the tax liability. Is it clear? Now, we will apply this to this question. Now, so these 3 products are given. 3 products are given. 2 or more supplies, huh? Yes or no? 2 or more supplies. What is the first condition for composite supply? All must be taxable. Check all are taxable? Yes. Naturally bundled or not naturally bundled? Why not naturally bundled? Sir, any shop you go and ask for chocolate, will they give balloon also? No, no. So it is not naturally bundled. Naturally means one cannot be supplied without the other. AC and installation, naturally bundled. TV and remote, naturally bundled. Are you getting this? And not naturally bundled means it can be supplied separately also and as a combo also. Example, popcorn and coke, not naturally bundled. Separately also you can buy popcorn and coke na. And even battery and inverter, naturally bundled or not naturally bundled? Not naturally bundled, because you can buy the battery alone separately. You can buy the inverter alone separately. Sir, but inverter will not work without battery. That is irrelevant. How you can buy? Whenever you are buying inverter, you have to buy battery also. Whenever you buy battery, you have to buy inverter also. No. So that's the reason why it is not naturally bundled. Are you understanding this? In this case, it is not naturally bundled because they can sell it separately also. Therefore, it is not a composite supply. Agreed. And to become mixed supply, what is the condition? Single price. Is it for a single price? Yes. 20,000 packages at a price of 30 rupees, single price. So it will come under mixed supply. When it is a mixed supply, what we need to do? We need to take the highest rate. Between these three, what is the highest rate? 18%. So therefore, this 6 lakhs will be taxable at 18%. Is it clear? So that 6 lakhs will be taxable at 18%. Just keep that in mind, that this 6 lakhs will be taxable at the rate of 18%. Now we need to know whether it is intrastate supply or interstate supply. First rate we determine. Now whether it is intrastate or interstate. Where is the supplier located? See the question. Visible to everyone? Question visible, no? So where is the supplier located? Delhi. And usually supply involves movement of goods. What will be taken as the place of supply? Today only we discuss. Supply involves movement of goods. What will be taken as the place of supply? Ending point. What is the ending point? Punjab. Intra, intera? Inter. What is the difference between intrastate and interstate? If location of supplier and place of supply in the same state, then it is intra. If location of supplier and place of supply is in two different states or two different union territories, a state and a union territory, then it will be coming under inter. So it is interstate and chargeable to IGST, which means it should come in IGST column. Okay, be careful whenever you get the rates like this, CGST, SGST, IGST like that. Even answer also you need to prepare separately, CGST, SGST and IGST. Okay, you understood this first transaction? Now second transaction. 10 generators hired out to Moraji Banquet Halls, Chandigarh, including cost of transporting the generators, 1,000 for each generator from Jaskar's warehouse to Moraji Banquet Halls. There are two transactions. One is hiring of generator, that is one. Second transaction, transportation of generator. See the below rate. Renting of generator is 18%, but transportation of generator, they have given the transportation of generator from Jaskaran warehouse to customer premises is arranged by Jaskaran through a goods transport agency who pay tax at the rate of 12%. 18% and 12%. Both are taxable. What are the three conditions for composite supply? All are taxable. Satisfied? Now tell me whether it is naturally bundled or not naturally bundled. Not naturally bundled. Hiring of generator and transportation of generator is naturally bundled or not naturally bundled? Not naturally bundled. So this is generator. This is generator. Without generator, how will I transport generator? You understood what I am telling? This is generator pa. This is vehicle pa. Generator I have to keep and transport. Without generator, how I can transport generator? Are you understanding? Naturally bundled or not naturally bundled? Are you getting this? Okay. So therefore these two cannot be independently provided. How I can give generator? Catch. Like that can I give? No, I have to transport. So therefore renting of generator and transportation of generator is naturally bundled. One cannot be supplied without the other in the ordinary course of business. Then second condition also satisfied. Actually this is the place where in exam you will get confusion. You have to spend some time there, analyze, and lot of times the knowledge of the business you should be having, general knowledge. That alone we don't have, sir, what to do? So this usually when you take generator, chairs, etc. on rent, this pandal, shamiana, they will only bring it, they will only deliver, install, again they will remove and they will take it to their place. Correct? Because it is their asset, they need to protect their asset. So in the ordinary course of business, the one who is giving the generator on hire, he will only bring the generator, because generator cannot be transported normally. You would have seen lot of shops, in one vehicle they will keep a generator. Have you observed that? That concept, okay? Because generator is so weight, we cannot call Bahubali to carry the generator and come to our place, okay? So transportation they only will do, so it will come under naturally bundle. And what is the principal supply? Generator is the principal supply. That is, renting of generator is the principal supply. Principal supply means predominant element in the transaction. Okay. So all three conditions satisfied, means it will become composite supply. When it is composite supply, what is the rate that we need to take? Rate of principal supply. What is the rate of principal supply? Service of renting of generator, what rate? 18%. So therefore this is also taxable at the rate of 18%. Now renting of generator. Renting of generator means it's a service, correct? For services, what will be taken as the place of supply? For renting of goods, we don't have any specific provision. General provision will be applicable. Sir, how to know whether it is general provision, specific provision, what is the place of supply, etc. I gave one chart for place of supply in case of services. You can see that chart, which is in page number 96, 97, 98. Page number 96, page number 97, 98 and 99. In 4 pages, I have given the summary related to place of supply, you can see. Summary related to place of supply there. What is the service that right now we are discussing? Renting of generator. Renting of generator means performance based service in relation to goods. See here, performance based service in relation to goods. So section 12. Why section 12? If both supplier and recipient are located in India, then it is section 12. What should be taken as the place of supply? General provisions. What is the general provisions? Location of recipient. B2B location of recipient. B2C location of recipient in the records of supplier. Otherwise location of supplier. Previous page you can see general provisions. Section 12 subsection 2 general provisions. B2B location of recipient, B2C location of recipient available in records, then location of recipient, otherwise location of supplier. Okay. Now coming back to this question, you tell me what is the location of recipient? Chandigarh, clearly it is there, Chandigarh. What is the location of supplier? Delhi. Intra or inter? Inter. So therefore with GST, IGST. Next, third transaction. Understood now? These two transactions. Look into third transaction. 500 packages each consisting of 1 chocolate and 1 fruit juice bottle given as free gift to Delhi customers on the occasion of Diwali. Cost of each package is 12, but the open market value of such package of goods and of like kind and quality is not available. ITC has not been taken on the items contained in the package. Now you open your book. In this, for supply, whether this activity is supply or not a supply, we need to check. For that, I gave one table. What are the activities which are treated as supply? Supply includes, like that one table is there. Page number 8. Page number 8, summary of section 7 subsection 1. These are the 4 activities which are included in the meaning of supply. Okay. Now, I want you to interpret this transaction. Third point. You read the question once again. 500 packages each consisting of 1 chocolate, 1 fruit juice bottle given as free gift to Delhi customers on the occasion of Diwali. Is it for consideration or without consideration? Whenever it is without consideration, you need to refer 7.1c. Whenever there is no C, see 7.1c. Okay. So see there, 7.1c. Can you find that 7.1c? 7.1c, there are 4 activities which will be coming under supply as per 7.1c. What are the 4 activities? D, R, I, P. What is a D, R, I, P? See the previous page. See the previous to previous page, 7.1c. What are the 4 activities? Previous to previous page, one chart is there, na big chart. In that chart you see D for what? Disposal of business asset on which ITC has been availed. Now, look into this question. Is it business asset? Not business asset. Chocolate, fruit juice bottle is not their business asset. Then what it is? Adu okay pa. Is it their asset or not? No, it is not their asset. Their liability. Where will you keep this chocolate fruit juice bottle? You are having a shop. In your shop you have chocolate fruit juice bottle. Where will you classify in financial accounts? Inventory. Inventory will come in which place? Asset only na. Your inventory is your asset, correct? You came directly to CMA final from some foundation or inter you studied, na? So current asset or fixed asset, both are asset. So it is your asset. Are you disposing of? Gift you are giving for consideration or without consideration? Without consideration. So what does it says? Disposal of business asset. Yes, business asset disposed of, on which ITC has been availed. Check whether ITC has been availed. No, input tax credit has not been taken on the items contained in the package, which means that point will not come. Disposal of business asset point will not come. Then second, R. What is R? Related party transactions, including transaction between distinct person. Related party transactions, so whether customer is related, appa? No, customer is not related and all. So therefore that related party transaction will not come. Then import of service by a person from related person, is it import of service? No. Then principal agent transaction, is it principal agent transaction? No, consequently not a supply. Is it clear? So what is the need of learning supply chapter? This is the need of learning supply chapter. They will give a transaction. When they give a transaction, we will be thinking about composite supply, mixed supply, etc. and all. First of all, it is not a supply, and you will write in the exam chocolate, fruit juice bottle, chocolate is 18%, fruit juice bottle 12%, not naturally bundled, and it is for a single price 12 rupees. Therefore, it will come under mixed supply, highest rate. You will be going in some direction. First of all, it is not a supply. That's why always you need to check the base. Okay. See, in exam, the questions will be like, you know, horror movies and all, some suspense thriller movies. In thriller movies, the director will be making us to focus on one character. This character will do the murderer, this character will do the murderer, like that and all, it will focus. On a climax, it will be revealed that one character whom you will think as buffoon, he will only be the villain. You would have seen many movies like that. Be careful. All the questions in exam are like thriller movies only. So they will take you in a different direction, but actually that may not be the answer. Got it? So don't forget the basics. Any question or any transaction that you see in GST, follow this checklist. First you need to check whether it is a supply or not. If it is not a supply, just write not a supply and leave it. If it is supply, then move on to whether it is taxable or exempted. Okay. And if it is exempted, write that it is exempted and leave it. If it is taxable, write taxable, and then the third aspect you need to check is whether it is FCM or RCM. If it is FCM, who will pay GST? Supplier. If it is RCM, who will pay GST? Recipient. Also finally check registration. Even though supplier pay GST, but what if supplier is unregistered? GST not payable. Okay. Next. Look into fourth point. You understood our third point? Fourth point. Catering services provided free of cost for elder son's business inaugural function in Delhi. Cost of providing said service is rupees 55,000, but the open market value of such service and service of like kind and quality is not available. Again, is it supply or not a supply? Why? Free of cost means you need to check 7.1c. In 7.1c, what are the four activities? DRIP. Is it disposal of business asset? Catering services provided free of cost for elder son's business inaugural function. How service will become business asset? So business asset point will not come. R, related party transaction. Yes. Why related party transaction will come? Sir's son is related, family. So family will come under related. Who are all will come in family? Spouse and children, whether or not dependent. Spouse and children always will be treated as family, whether or not dependent. Brothers, sisters, parents, grandparents. will be treated as family if they are wholly and mainly dependent on that person. Is it clear? So in this case, son is given, enough, always treated as related. So it's a related party transaction. In case of related party transaction, even though there is no consideration, it will become supply under 7(1)(c). Okay, now carefully listen. It will become supply under 7(1)(c). And today only I told you morning that whenever there is a related party transaction, we need to determine the value as per rule 28. As per rule 28, what we need to see? First we need to see, I'll tell you where this information is in. So I have given a summary related to valuation rules. Which you can see in page number 131. 131. See here. In case of related party transaction, first we need to see what? Open market value. If open market value not available, like, kind and quality. If like, kind and quality also not available, cost plus 10%. Now in this question you see, cost of providing service is 55,000, but the open market value and service of like, kind and quality not available. OMV not available, LKQ not available. So we need to go for cost plus 10%. What is cost? 55,000. 55,000 plus 10%. How much? 60,500. Okay. And catering services. What is the rate of GST given for catering services? 18%. Intra or inter? Intra. Why intra? Location of supplier Delhi and place of supply. It's a performance based. Catering is a performance based service. Location of performance will be taken as the place of supply. What is the location of performance? Delhi. Therefore, it will come under intra-state supply. Is it clear? Next. You are required to determine the GST liability, CGST, SGST and or IGST as a case may be of just current for the month of January with the help of following additional information furnished by him for the said period. Point number 1. Penalty of rupees 10,000 was collected from Sukija gift shop for payment received with a delay of 10 days. What is this penalty? Treatment. Interest, late fee or penalty for delay in receipt of consideration will be included in the value and chargeable to GST. But this interest in the absence of information is assumed to be inclusive of GST. So this 10,000 rupees should be added to this 6 lakhs. Why? Because Sukija gift shop only na. So 6 lakhs we need to add this 10,000, but be careful whether they have given this 10,000 as excluding in GST, whether they gave this 10,000 excluding GST, no, which means usually interest is assumed to be inclusive of GST. What is the rate of GST for this interest 10,000? Actually this 10,000 is related to the 6 lakhs na. This 6 lakhs is taxable at what rate? 18%. Means this 10,000 also taxable at 18%. 10,000 into 18 by 118. How much? Do the calculation and tell me. 10,000 into 18 by 118. 1,525 will be taken as the GST liability. Okay. Next. So interest has two treatment. Interest, late fee or penalty has two treatments. First, interest on loans, advances, deposits is exempted. Interest, late fee or penalty on account of delay in receipt of consideration. This is on account of delay in receipt of consideration. It will be included in the value of supply. What is the value of supply? 6 lakhs. To that 6 lakhs we need to add 10,000. But this 6 lakhs is excluding GST. But this 10,000 rupees should be assumed as inclusive of GST. Generally all amounts should be exclusive of GST. Only interest in the absence of information is assumed to be inclusive of GST. Then now we need to do the computation. See the answer. First transaction 6 lakhs correct on that 6 lakhs 18% is how much? 6 lakhs into 18%. 1,08,000 plus this 1,525. 1 lakh 9,526 IGST. Okay, 525 526 Can you do this calculation? 10,000 into 18 by 118. What is the exact number that you will get? 10,000 into 18 by 118. Point. Then rounded off to nearest to 1 rupee. So 5, correct. Okay. So 1,09,525. Next, second one also IGST liability 18%, 2,50,000 into 18%. Next one not a supply. So we need to just write it as nil. And then next last one, catering services. How much is the value? You only said 60,500. On that 60,500, it's intrastate supply, means CGST, SGST. What is the rate of GST? 9% and 9%. So 60,500 into 9%, 60,000 into 60,500 into 9%, 5,445. So this is the total GST liability. Is it clear? So like this, you need to prepare a table, and whatever explanations that I gave, either you can write inside the table itself, or you can write like notes also separately. But I recommend you to write the notes inside the table itself, then and there, because you don't have to write too much information. So just in this paragraph itself, first paragraph itself, supply of 20,000 packages to Shukija Gift Shop Punjab hyphen, it is a mixed supply because it is not naturally bundled, and the highest rate is 18%. Therefore, it is entire supply is taxable at 18%. Just in simple lines itself, you try to complete it. Okay. Then I gave the detailed explanation there, but in exam you don't have to write this much information. That's what I mean to say. You understood the first question? Clear? First question is on the concept of composite supply and mixed supply, and even supply is also covered there. Okay. And I have connected that to place of supply. Question number 2. GR Limited of Germany supplies luxurious car worth rupees 1 crore to IND Limited of India before the car reached Indian port, but after crossing the territorial waters of India, IND Limited sells it to T1 Limited by way of transfer of documents. What is this sale known as? High seas. Sale on high seas. Now, who will be clearing? IND Limited or T1 Limited? T1 Limited, because whenever IND Limited transfer the document of title, now who will be called as importer for customs purpose? T1 Limited. So they will only file the bill of entry and they will clear the goods from the customs. Okay. So T1 Limited clears the said car for warehousing. So what T1 Limited did? They cleared the car by filing inbound bill of entry. Why inbound bill of entry? Warehousing. So in case of warehoused goods, whenever we deposit the goods in the warehouse, inbound bill of entry. Whenever we take the goods from the warehouse, ex-bond bill of entry. Okay. So they deposited the goods in warehouse and store the said goods in the customs bonded warehouse. Then T1 Limited sells the said car from the warehouse to T2 Limited. Now who will pay the customs duty? T2 Limited, because they are only clearing the goods from the customs by filing ex-bond bill of entry. So T2 Limited. And T2 Limited clears the said car from the customs bonded warehouse. Answer the following with brief reasons. Is GST leviable on import of goods from GR Limited by IND Limited? Applicable or not applicable? Not applicable. Why GST is not applicable? First of all, they are not clearing. They transfer the documents of title to T1 Limited. Due to that reason, they are not required to pay any customs duty or IGST. Is it clear? Again, when they transfer the document of title to that also, it is sale of warehoused goods, sale of goods on high seas basis, that is also excluded from supply. Is it clear? So see this. GST on import of goods is levied at the time when customs duty is levied on the said goods under Customs Act, that is on importation. Importation gets completed when goods become part of mass of the goods within the country. Thus, GST not leviable on import of goods from GR Limited by IND Limited since the import of goods is not complete. Second, is GST leviable on supply of goods by IND Limited to T1 Limited? What is your answer? No. Why? Sale on high seas. Sale on high seas is excluded from supply. Excluded from supply. Okay. Consequently, GST not leviable. GST not leviable on supply of goods by IND to T1 as supply of goods by the consignee to any person by endorsement of document of title after the goods have been dispatched, but before clearance for home consumption is treated neither as supply of goods nor as supply of service. So, it is not a supply. Then third one, is GST leviable on supply of goods by T1 Limited to T2 Limited? What T1 Limited did? Transfer the warehouse receipt, correct? That also we have one exclusion. What is that? Warehoused goods under customs sold. Spelled slow, the W, warehoused goods under customs sold. So, GST not leviable on supply of goods by T1 Limited to T2 Limited, since supply of warehoused goods to any person before clearance for home consumption is treated neither as supply of goods nor as supply of services. Then next one, last, is GST leviable on clearance of goods by T2 Limited from the customs bonded warehouse? Yes, in the entire transaction, who is really called as importer? T2 Limited. They are only going to file the ex-bond bill of entry and pay the customs duty along with GST. Which GST? IGST. So yes, GST is leviable on clearance of goods by T2 Limited from the customs bonded warehouse, as customs duty is levied on warehoused goods at the time of clearance thereof from the warehouse, and as mentioned in point number 1, GST on import of goods is levied at the time when customs duty is levied thereon. So those who are clearing the goods from the customs for their home consumption, they are only required to pay the customs duty. Clear? So this question is actually connecting GST and customs. 2 points, okay, mainly GST, that exclusion from supply, sale on high seas and sale of warehoused goods. Next. You understood now these two questions? Any doubts in this? Now, question number 3. X Limited is located in Ludhiana. It is GST registered with aggregate turnover of 20 crores. Means definitely they are registered. It is in the business of manufacture of cast glass. It has received the following services from different persons during December 2021. Okay, so they have given some transactions. What is it we need to determine? Discuss the applicability of reverse charge to the above transaction. So we need to check whether it is FCM or RCM. Now, what are the list of services which are covered under RCM? List of goods under RCM already we learned today. What are the list of services which are covered under RCM? Remember, Sir, CG, got, salads. So first you need to remember what are the list of services which are covered under RCM. So you can see that I have given as one summary table. You can check the book. This is in page number 32. Page number 32. List of services which are covered under RCM, that is given in notification number 13/2017. I told you to remember a mnemonic: Sir, CG, got, salads. S for security lending as per SEBI by lender of securities to borrower of securities. I am a lender of securities, you are borrower of securities, I am lending the securities to you. In that case, you need to pay me lending fee. On that lending fee, I will not pay GST, you will pay GST. Then I, import of services, recipient will pay GST. R for renting of motor vehicles. Another R for renting of residential property. So SIRR, S for security lending, I, import of service, RR, renting of motor vehicles, renting of residential property, that is immovable property. Okay. Then next, C for copyright services, and G for GTA services, goods transport agent service. See, these are all the services which are there in RCM. First of all, if the question is not about this service, you don't have to break your head, it will be always FCM. You got it? Sir, CG. Again, yes, security lending. I, import of service. R, renting of motor vehicles. R, renting of immovable property. Then C, copyright services. G, GTA services. Then GOT. G for government services to business entities. O for overseeing committee. Overseeing committee is appointed by RBI for the purpose of restructuring the non-performing assets. RBI will pay GST under RCM. Okay. Then T, TDR, FSI, long-term lease. TDR is transferable development rights, floor space index, and long-term lease of land. What is considered as long-term lease of land? Lease for greater than or equals to 30 years. That is known as long-term lease of land. Sir, CG got salads in that, yes. That is sponsorship services, A for agent services, then L for legal services by individual advocate or firm of advocate, then A for arbitrator services, then D for director service, and finally S for security agency services. Now, check the question. First one is service by Department of Post by way of express parcel post. Department of Post means government. Government providing services to business entities covered under RCM. But we have some exceptions. So go to that place. Government services to business entities. In that government services to business entities, so only other services to business entities is covered under RCM, not Department of Post. Okay. So in case of renting of immobile property to an unregistered business entity, in case of supply of goods or services by Indian Railways, you write down some more points also. Department of Post, Department of Post, airport or port services, airport or port services, and number 5, transportation of goods or passengers. So these are the activities, these are the 5 activities on which FCM only will come, RCM will not come. Okay. So Department of Post, even though it is service provided by government, but it will not come under RCM, it will be FCM only. So there are 5 activities which will come under FCM even though provided by government. What are they? Number 1, renting of immobile property to whom? Unregistered person, unregistered business entity. Then Indian Railways, Department of Post, airport or port services, transportation of goods or passengers. Okay. Next. So therefore it is FCM or RCM? Department of Post by way of express parcel post, FCM, it will not come under RCM. Then for transportation of goods, X Limited pays 1 lakh to Indian Railways. Again, Indian Railways is government. Generally government to business entity will come under RCM, but we have exception. So Indian Railways will always be, see there, in case of supply of goods or services by Indian Railways, it will be FCM. Then next, X Limited GST registered has taken commercial property on rent from Punjab government, for which company pays GST, company pay rent of 2 lakhs. Again, it is services provided by government to business entity, correct? Ayya, Punjab government means government to business entity. Business entity registered or unregistered? So FCM or RCM? RCM, very good, because if that X Limited is unregistered, it will come in the first point in case of renting of immobile property to an unregistered business entity. Is it clear? Next, X Limited has taken security services for factory complex from Mumbai government, for which payment of 50,000 is made. Again, government to business entity. Is it covered in the list of 5 points? So RCM, very good. Those 5 cases only FCM, otherwise generally government service to business entity will be RCM. Then X Limited has taken security services for office from Task Force Security Limited, a private sector company, for which payment of 95,000 is made. Is it services provided by government? No. Security agency service, like that also one point is there. Just turn the page, last point, security agency service. Security agency service, Sir CG got salads. Last point, security agency service. For security agency services, what is the condition for RCM? See the condition for RCM. Supplier should be other than body corporate. Other than body corporate means, who is body corporate? Private limited company, public limited company, or body under an act of parliament will come under body corporate. Who is other than body corporate? Individual, HUF, firm will come under other than body corporate. So see the first condition. First condition is that supplier should be other than body corporate, and recipient should be registered but not opting for composition scheme, or not registered only for deducting TDS. Now, who is the supplier in this case? Task Force Security Limited company, correct? Supplier is body corporate. For RCM, supplier should be other than body corporate. Here a supplier is body corporate, it will come under FCM. Okay. So first one is FCM, second one is FCM. First one RCM not applicable, second one is FCM. Third one and fourth one will be RCM, and last case FCM. RCM is not applicable. RCM not applicable means FCM only. Okay. Understood this third question also? Got the clarity? Next. Question number 4. Sarvasugam Charitable Trust, a trust registered under section 12AB of Income Tax Act, provides the following information relating to supply of its services for the month of August. Usually a trust, either a charitable trust or a religious trust, which owns the buildings that will be given on rent, will be exempted provided they are giving it. So first there should be a trust, and that trust should be a religious trust and precincts of a religious place meant for general public. First it should be a precincts of religious place meant for general public. What is the religious place meant for general public? Religious place meant for general public. What is that place? Temple. Only temple? Mosque. Only mosque? Church. Only church? Gurudwar. Correct? There are many places, religious places, because India is rich in lot of religions, lot of faiths people are having. So everything is a religious place, correct? So that particular religious place, precincts means surroundings, will be given on rent by a trust, okay, will be exempted. You tell me for what purpose they will be giving it on rent? Hall, marriage hall, okay, not only marriage, hall. You do marriage, you do reception, or you do engagement, or you do name keeping ceremony, anything. Not only marriage, but all functions you can do, religious functions, and they will be giving their hall on rent. If the charges per day is less than 10,000, less than 10,000 means 9,999 per day, then it will be exempted. Next, for what other purpose they will give? Shops. For shops also, less than 10,000 rupees per month, then it is exempted, that is 9,999 per month, then it will be exempted. Then what else? What else? Temple. Other religious place. Religious place and all they will not give for exhibition and all, too much it is. Accommodation pa. What we will do? We'll go and sleep somewhere on the road. We take a room, no. Have you been to Tirumala? You take a room and you will stay, na. Almost many religious places, so they will be providing the shelter. For that you need to pay accommodation. That is also exempted if it is less than 1,000 rupees per day. Means 999 rupees per day. 3 exemptions. First, what is the exemption which I told you? There is a religious place meant for general public, that is registered as a trust, and its precincts is given on rent. If it is for accommodation, less than 1,000 rupees per day, exempted. If it is for hall, less than 10,000 rupees per day, exempted. If it is for shops, less than 10,000 rupees per month, exempted. Okay, I will show you this exemption which is in your book. Just go to page number 68. Page number 68. So, renting of the precincts of religious place meant for general public registered as a trust, accommodation less than 1000 rupees per day exempted. What if it is exactly equal to or greater than 1000? Entirely taxable. Same way hall, per day less than 10,000 exempted. If it is greater than or equals to 10,000 per day, entirely taxable. For shop, less than 10,000 per month, it will be exempted. Greater than or equals to 10,000 per month, entirely taxable. Now, we will apply these points. Renting of residential dwelling for use as residence to an unregistered person. What is your answer for this 18 lakhs? Exempt or taxable? Exempt or taxable? One stand you take. Whether it is correct or not, we will see later. Exempted or taxable? Exempted. Why exempted? What made you to tell exempted? Renting of residential property for residential purpose to an unregistered person. Today we discussed one exemption. Do you remember? I have a residential property. Residential dwelling means what? Residential property. For what purpose I am giving on rent? Residential purpose. To whom I am giving on rent? Unregistered person. Not only to trust, to every person it will be exempted. So this 18 lakhs will be fully exempted. Next, renting of rooms for pilgrims. Charges per day 1200 rupees. Exempted or taxable? Why? 1000 or more, it will be taxable. Renting of room for devotees, charges per day 750. Why? Therefore, it is exempted. Sir, pilgrim, devotee, is it relevant, sir? That is not relevant. Whether they give it to devotee or whether they give it to pilgrim or they give it to one atheist who is not at all believing in God and he is coming for the sake of his parents, that is irrelevant. What we need to see is per day, what is the charges. Okay. Next, renting of Kalyana Mandapam, charges per day 15,000. Why? 10,000 or more, therefore it is taxable. Renting of halls and open space, charges per day 7,500. Exempted. Why? Less than 10,000. Renting of shops for business, charges per month 9,500. Less than 10,000 per month, so exempted. Renting of shops for business, charges per month 12,000. Taxable. Compute the total value of taxable supply. What you should do? This taxable alone you separate. 8 lakhs, 12 lakhs, 20 lakhs plus 7 lakh 50. So 27 lakh 50,000. This is how usually you get question on exemptions. They will give the list of transactions, amounts, whichever is taxable you need to take total, and that will be value of taxable supply. Got it? Next. And before writing this table, in the table itself we have given exemption, why it is exemption. This paragraph, if you have time you write, otherwise not required. This is about the provision, okay. But in the table itself, if you fill the information, that is sufficient, okay. Question number 5. A2X Services Limited, registered under GST, is engaged in providing various services to various educational institutions. Is the services provided by education institution or to education institution? To education institution, okay. And the company provides the information in respect of service provided during the month of April. Related to services provided to education institution, we have one exemption. So open your book, you can see that in education services, page number 61, page number 61, see here, any service provided by an education institution to its students, faculty and staff will be exempted. Idu by or to? By. Service provided by education institution to its students, faculty and staff will be exempted. Any service, whether they give food to the students, or they provide transportation to the students, extracurricular activities, co-curricular activities, library fees, uniform fees, ID card non-wearing fees, attendance fees, any name, whatever money collected by education institution will be exempted. This is by education institution. When it comes to education institution, services provided to education institution, in that first one, if they provide transportation services, catering services, security or housekeeping services to education institution, means here what happens? Education institution is not providing, education institution is receiving. There is one person who is doing transportation service to education institution, or there is a person who is providing catering service, or there is a person who is providing security or housekeeping service, but the security or housekeeping should be within premises. These three, to which education institution is exempted? Only category 1. What is category 1 education institution? Up to 12th standard or equivalent. Why equivalent? In Tamil Nadu, 12th is part of school, but in Andhra Pradesh, Telangana, Karnataka, 12th is not part of school. 11th and 12th is part of a separate board. They call it as intermediate education or PUC, pre-university college, like that. That's the reason why they use the word equivalent. Whether it is called as school or not called as school, up to 12th standard will come under category 1. Is it clear? Category 2, that's the second point I told you. What is it? Education as a part of curriculum for obtaining qualification. UG, PG, professional, that will come. And finally, approved vocational education institution. Now, this first category institution only, these three services are exempted. What are the three services? Transportation, catering, security and housekeeping. Fourth point you see, admission to or conduct of examination is exempted for all three category institutions. Then supply of online educational journals. Admission to means what? Bringing admission to the institution. And examination, conduct of examination. What is conduct of examination? Setting the question paper, giving my premises on rent for conducting the exams, etc. That is conduct of examination. All three category institutions it is exempted. Last point, online educational journals and periodicals. You tell me for which institution online educational journals and periodicals will be required. School children will read journals, vocational education will read journals, who will read? Only category 2. So for them only it is exempted. Is it clear? For category 1 and 3 not exempted, taxable, only for category 2. So you have to remember in 3 simple points. Any service to education institution. First, transportation, catering, security and housekeeping within premises to category 1 institution is exempted. Then admission to or conduct of examination, all three category institutions exempted. Online educational journals and periodicals only category 2 institution will be exempted. Now, you apply this and you are going to answer me. Okay, first point. Transportation of students and staff of Lowell, a deemed university. Nice name, no? So, what is your answer? Taxable or exempted? Why? Deemed university means it will come under category 2. Therefore, it will be taxable. Next. Catering service provided to rank CBSE school. Catering service to category 1 will be exempted. Security services to win CBSE school for its annual sports day held at Sai Sports Campus Complex owned by Government of India. Exempted or taxable? Taxable, because see there, security and housekeeping services should be in premises, means within premises. But here it is for a sports complex outside, not within the campus of the school. Okay. Next, supply of online periodical science journal to merit CBSE school for its higher secondary students. So, online educational journals and periodicals is exempted only for category 2. Here it is school, therefore it will be coming under taxable. Service in relation to placement of students to skill a government recognized vocational training college. Service in relation to placement of students. Where is it given? See, what we have is 5. First one is what? Transportation. Is it transportation? Number 2 is catering. Is it catering? Number 3 is housekeeping and security. Is it that? Is it admission to or conduct of examination? Is it online educational journals and periodicals? Means other activity. Other activity we don't have any exemption. Whatever exemption is only for 5 points. Other activities will be. So accordingly it will be taxable. So out of this only that second transaction alone is exempted and remaining and all will become taxable. Okay, taxable, and here also it is taxable, here also it will be taxable. Is it clear? Here they have not given the amounts. That's why we are just writing taxable exempted. If they give the amounts, we will put it like a table. Whatever is taxable, we will do the total and arrive at the value of taxable supply. Okay. So this one is related to education services. Question number 5. Now we are moving on to question number 6. Before that, there is one query to one friend in online related to this second question. Sir, T2 Limited is paying customs duty, correct? Because they file the ex-bond bill of entry, pay the customs duty and clear the goods. Along with customs duty, they pay IGST. Can that IGST be taken as credit? On import, we pay customs duty and IGST. Can the IGST component be taken as credit? Yes. IGST can be taken as credit. And what they can do with that IGST credit? They can set off against any GST liability. They can set off against CGST, SGST, UTGST, IGST, any liability they can set off. Okay. Next. Look into this question number 6. In the following cases, based on the information given and a query, give your comments on the taxability under GST and the rate of GST applicable if any. Renting of vacant land to a stud farm for rupees 1,50,000. Is it supply of service? Will GST be leviable? So what is your answer? Renting of vacant land to a stud farm. First of all, we need to understand, for renting of land, do we have any exemptions? Okay. So we have only 2 exemptions for renting of land. For renting of land, we have only 2 exemptions. First exemption is that I have a land and that I am giving on lease. So who is me? Government. Government giving land on lease to government authority or government entity, that is exempted. Whatever may be the lease, long term lease or short term lease, etc., and whatever may be the type of land and whatever may be the consideration, everything will be exempted. Okay, this is the first exemption. For land we have only 2 exemption, carefully listen. For immovable property, already I told you exemption, residential property, commercial property. For land we have 2 exemptions. So let me check whether I have given that. I have given. Page number 67 you can see. Page number 67. So there are only 2 exemptions for renting of land. What are the 2 exemptions? Number 1, upfront charges and annual lease rentals with respect to lease of land. By whom? Government. To whom? Government authority or government entity is exempted. Will it come under that category? No. This is a vacant land to a stud farm, not by government. Okay. Next. Second one, upfront charges including preferential location charges with respect to long term lease. What is long term lease? Greater than or equals to 30 years of industrial plots or plots for development of infrastructure for finance business. By whom? State government Industrial Development Corporation. You would have heard of SIDCO. Have you heard? SIDCO. State government Industrial Development Corporation. What type of land they are giving? Industrial land. For how many years? Greater than 30 years. And what is exempted? Only upfront charges is exempted. Is it covered under that point? No. So therefore under land we don't have any exemption. But we have an exemption, one more point. Any service in relation to agriculture or agricultural produce is exempted. Now will it come under that point? Just check. Go back, See the first transaction, agriculture related services, page number 53. Page number 53. See the first point. Any service in relation to agriculture or agricultural produce is exempted. What is the meaning of agriculture? Agriculture means cultivation of plants and rearing of all life forms of animals except the rearing of horses. Stud farm means horse farm. Got it? Generally, if I have a land which I am giving on rent for agriculture, the money received will be exempted. But agriculture excludes rearing of horses. So, stud farm means horse farm. So, what is your answer? Is it taxable or exempted? Taxable. You got the clarity how to interpret? Okay. Next, second one. A contract awarded by Kolkata Municipal Corporation for repair of a particular road to Messrs. B Limited with terms and conditions that entire work should be completed within 30 days. However, there is a delay of 10 days to complete the work. KMC charged liquidated damages of 1,20,000 and the same recovered from Messrs. B Limited. Applicable rate of GST 9%, CGST, SGST 9%. Who is liable to pay GST on what amount and total tax liability? Here government, municipal corporation, Kolkata Municipal Corporation means government. Remember, government collecting liquidated damages is exempted. Consideration for tolerating an act collected by government is exempted. Where is it given, sir? Government services it is given. So go to that RCM. In RCM we saw government services point. Government services to business entities, page number 33. Page 33. In that you see that point number 8 in the exemptions. Consideration for tolerating an act is exempted. So whenever government gives you a contract and you complete it late, for which you have to pay some damages, that money collected by government will be exempted. So this particular transaction is exempted and there is no tax liability. This is exempted. Next, third one. Messrs. X Limited paid penalty under section 49 of CGST Act 2 lakhs to the department in the month of October. Is it taxable under GST? Ayyo, on penalties and all there won't be any GST. Penalty under any law, fines and penalties under any law, there won't be any GST. Remember this. Traffic fine, no GST. You got it? Then Companies Act, some penalties will be there. GST Act penalties will be there. Income Tax Act penalties will be there. All these penalties, there won't be any GST on that. Okay. So again, there is no GST. First of all, it is not a supply. Not a supply. Such payment is not a supply of service. Fines and penalty chargeable by government or local authority is not leviable to any GST. Next. Messrs. M and Co, a sole proprietor, is in the business of selling furniture. Its owner took a set of furniture to furnish his house permanently. Will the transaction be supply in terms of GST Act? I have business. In that business I have a furniture. That furniture I took from my business for my house. Will it become supply or not a supply? What is your answer? Is it disposal of business asset? From business point of view, see, is it disposal of business asset? Yes. On which ITC should be availed. If ITC is availed, then only it will become supply. ITC on furniture, not availed. So will it become supply or not a supply? Not a supply. That point you remember now, disposal of business asset on which ITC availed. Yes, it is disposal of business asset only, but ITC is not availed. Consequently, it is not a supply. So transfer of furniture by owner without consideration is not a supply because ITC is not availed. Got it? Sir, but sir, owner and business is same only, na sir? No. We have business entity concept in accounting. You know that? What is that business entity concept says? Business is different from the owner. That's the reason why when owner deposits capital, we pass a journal entry. Correct? Am I right? To capital account like that we create. And whenever the owner withdraws money, drawings like that we create. Correct? So even though the owner is running the business, but for accounting always we will treat owner and business as different persons. Okay. Next. Look into question number 7. There is one query. Fifth question, fifth point. Fifth question, fifth point. Okay. Won't come under service to prospective student category? No. Definitely no. Because it is not service provided to student. It is not service provided to student. It is service provided to college. Read carefully. Services, I am providing service. What service? Placement service. Okay. To whom I am providing? To a college. So will it come under service provided by educational institution or to educational institution? To educational institution. Okay. Next. Question number 7. This is related to banking sector. Romeo Small Finance Bank Limited is engaged in providing financial related services and of various types of loan facilities to its constituents, furnishes the following information relating to various service provided and the gross amount received during the month of December. Now listen, for banking we have certain exemptions for banking sector. What is the first exemption for banking sector? Just now I told you, interest on loans, advances, deposits is exempted. What about other consideration? Processing fee, documentation charges, etc. and all will be taxable. Now read the first point. Commission received for debt collection service, taxable. We don't have any exemption with respect to it. Discount earned on bills discounted. Why? Interest or discount on loans, advances, deposits is exempt. Penal interest recovered from the customer for delay in payment of loan. Now listen, wait. If the loan interest is exempted, the penal interest is also exempted. If the loan interest is taxable, then penal interest is also taxable. What is penal interest? If you are not repaying a EMI, they will be collecting some interest, that is called as penal interest. Generally interest on loan is exempted. Correct? Generally interest on loan is exempted. So this penal interest is also exempted. Okay. Next. Commission received for service rendered to government for collection of taxes. We don't have any exemption with respect to that, therefore it will be taxable. Interest earned on reverse repo transaction, interest, therefore exempted. Then service to merchants accepting credit card, debit card payments using point of sale machine of bank. In 30% cases the amount per transaction was up to 1800, while in other cases the amount was exceeding 2000. So we have one exemption here, that is processing fees. Processing fees on card transactions is exempted if the swipe amount does not exceed 2000. So in 30% of the cases the amount per transaction was up to 1800, means on that processing fee GST will be exempted, whereas other cases the amount was exceeding 2000, on that processing fee GST is taxable. So this 20 lakhs, 30% will be exempted. What is 30% of 20 lakhs? 6 lakhs is exempted. What is the remaining portion? 14 lakhs. That 14 lakhs alone will be taxable. Got it? Are you getting this? Next. So this 14 lakhs will be taxable. Remaining is exempted. So what is the value of taxable supply? 10 plus 5 plus 14. 10 plus 5 plus 14, 29 lakhs. On the 29 lakhs, the rate of GST is 18%. So 5 lakh 22,000. Got it? All the services related to banking sector I have given in the exemptions for banking. You can see quickly, we can complete the discussion. Page number 54. Page number 54. So these are the various exemptions for banking sector. First one I told you, transaction in money. If the transaction in money is for a separate consideration and if the consideration is represented by way of interest or discount on loans, advances, deposits, then it will be exempted. What if it is credit card interest? That will be taxable. Generally interest on loans, advances, deposits will be exempted, but credit card interest will be taxable. What is credit card interest? When you use your credit card and convert into EMIs, you pay the interest now. On that interest there will be tax. Any other consideration? What is any other consideration means? Documentation charges, commission, demand draft charges or check bounce charges, anything, okay, any other consideration including interest in case of credit cards will be taxable. What if transaction in money is without consideration? It is neither goods nor services. Next point, there is a bank which is providing services to basic savings deposit account holders under Pradhana Mantri Jan Dhan Yojana. Under PMJDY scheme, there will be some nil balance accounts. To that nil balance account holders, if bank provides any service, that service will be exempted. Then foreign exchange transaction between whom? Between banks is exempted. Between forex dealers is exempted. Between bank and forex dealer is also exempted. Then when it will be taxable? Between bank or forex dealer and the customer. Then only it will be taxable. This is the point which I was referring to. Service by an acquiring bank. There is an acquiring bank to any person in relation to settlement of an amount up to 2,000 in a single transaction. Basically, what acquiring banks will do the processing. For example, you use your debit card, credit card and swipe the money. So they will, Paytm is an acquiring bank and lot of acquiring banks are there. What they do, they take money from your account and credit in the vendor account. For doing this, they will collect 1.5% or 2% as the processing fee. On that processing fee, GST is payable or GST is exempted. GST is exempted provided the transaction amount does not exceed 2,000. So that is GST on processing charges for a transaction up to 2,000 rupees is exempted. Then next one, there is a business facilitator or a business correspondent who are like agents of the bank. Business facilitator and business correspondents are like agents of the bank, and if they are appointed in rural area, the commission earned by them will be exempted. What if they are appointed in urban area? Then the commission will be taxable. So not only business facilitator, business correspondent, even they will have sub-agents. Agent of business facilitator and correspondent, that is also exempted. So 4 people you should remember. Who are the 4 people? Business facilitator, agent of business facilitator, business correspondent, agent of business correspondent. Where are they working? If they are appointed in rural area, for which the commission earned by them will be exempted. Okay. Then next one, there is an intermediary. 6th point, there is an intermediary of financial service located in a multi-service SEZ. There is only one multi-service SEZ in India, that is Gift City, Gujarat. Gujarat International Fintech City is a multi-service SEZ. In that multi-service SEZ, there is one intermediary who is providing services to their customers outside India. Okay. Then whatever money received by them will be exempted. Won't it become export of services? No. Why it will not become export of service? Already I told you, in case of intermediary services, the place of supply will be location of supplier. In order to become export of service, the place of supply should be outside India. But in this case, the place of supply is India. That's why it will not become export of service, but it is exempted. So these are the various exemptions for banking sector. And based on that, this question, this type of question will be coined. Okay. Next, look into question number 8. This is mix. So far whatever questions we saw was like sector wise, banking sector one question, and then renting one question, like that they will give. Sometimes what they do, they will mix multiple sectors and they will give a common question that covers multiple transactions. Okay. So see this, Messrs A to Z, a proprietary firm registered under GST, is engaged in providing various services under one roof. The firm provides the following information pertaining to supplies made or input services availed by it during the month of March 2022. Amount collected for loading, unloading, packing and warehouse of potato chips. What is your answer? Huh? So amount collected for loading, unloading, packing and warehousing of potato will be potato chips. Taxable or exempted? Taxable. Why it is taxable? First of all, it is not agricultural produce. Generally, any service in relation to agriculture or agricultural produce is exempted. But first of all, potato chips are processed, it will not come under agricultural produce. So you can see the meaning of agriculture and agricultural produce. I have given this now, just read it once. The meaning of agricultural produce, page number 54. Okay. So what is the meaning of agricultural produce? Agricultural produce means any produce out of agriculture on which either no further processing is done or such processing is usually done by a cultivator or producer which does not alter its essential characteristics but makes it marketable for primary market, then only it will be called as agricultural produce. Means the primary produce out of agriculture. From agriculture we get something, the primary produce out of agriculture. For example, tender coconut is an agricultural produce and some processing is done. So we peel off the layer and inside we have coconut, that is also agricultural produce, and we sun dry and remove the shell, we get copra, that is also agricultural produce, because it does not change the essential characteristics. But potato chips is processed, that will not come under agricultural produce. So generally any service in relation to agriculture or agricultural produce is exempted, but this potato chips is not agricultural produce, due to that reason it will be taxable. Then next, fee paid for yoga camp conducted by a charitable trust registered under section 12AB of Income Tax Act 1961 for employees of the firm. What is your answer? Exempted. So why it is exempted? There are certain exemptions with respect to charitable trust. In that one point says, if there is a charitable trust providing some list of charitable activities, it is exempted. What is that charitable activity? So number one, first charitable activity is public health. So any health related activities if they provide, that is exempted. Number two, advancement of religion, spirituality, yoga. Okay, under that yoga it will come. There is a charitable trust which is providing yoga camp, therefore it is exempted. You can see that information in charitable activities. So it is there in page number, where is it? 59. Page number 59 you can see. Services by an entity registered under section 12AA of Income Tax Act by way of specified charitable activities. What are the specified charitable activities? I told you, first point, public health. Second point, advancement of religion or spirituality or yoga. Number three, educational programs to orphans or physically, mentally traumatized persons or prisoners or persons over 65 years. But where the persons over 65 years should be? In rural area. Then last one, environmental preservation. And why this particular transaction is exempted? It will come under advancement of yoga. Read the question again. Fee paid for yoga camp conducted by a charitable trust registered under section 12AB of Income Tax Act for employees of the firm. Okay, next. Third point, interest received on fixed deposits with Apna Bank by the firm. What is your answer? Interest on loans, advances, deposits will be exempted. Then professional services provided to foreign diplomatic mission located in India. Actually, foreign diplomatic mission, there is an exemption, but it is not services provided to foreign diplomatic mission, service provided by foreign diplomatic mission. Same page above, page number 59, there is one, services by specified organizations. In that services by specified organization, you can see foreign diplomatic mission. So it is confusing. They gave service provided to foreign diplomatic mission, but only service provided by foreign diplomatic mission is exempted. This is service provided to foreign diplomatic mission. So generally service provided to foreign diplomatic mission will be taxable. Recovery agent service provided to ABC Finance Limited NBFC located in Delhi. This is also taxable. For recovery agent we don't have any exemption. So it will be taxable. Because they are asking determine the GST liability of measures A to Z for the month of March 2022. First we are writing taxable and exempted. If it is exempted, there is no question of payment of GST. If it is taxable only, I told you first you need to check supply. What is the next thing that you need to see? Is it taxable or exempted? Then you need to see whether it is FCM or RCM. First we are talking about taxability, then we will see about FCM RCM. Next, security services provided to XYZ Limited. So do we have any exemption for this? No, it will be taxable. For security service we saw one exemption only. What is that? Security and housekeeping service within the premises to category 1 education institution. Then receipts from running an education institution, a senior secondary school, for services provided to its students, including receipts for providing residential dwelling. I told you, any service provided by education institution to its students, faculty and staff will be exempted. So accordingly, even boarding, that is hostel facility provided by education institution, is also exempted. So this 35 lakhs is fully exempted. Then supply value including cost of fuel for provision of renting of motor vehicle service to NPS Limited. Renting of motor vehicle, we don't have any exemption here particularly. We have some exemptions, but that is not applicable here. So therefore it will be taxable. Okay. Now, so here see this. Wherever it is taxable, now you need to check whether it is FCM or RCM. Okay. So look into this. Amount collected for loading, unloading, that is taxable na. What are the list of services covered under RCM? Sir, CG, got salad. Is it covered under that? No. So therefore it will be FCM. By an exam also you understood now what you need to do. First you need to check whether it is taxable or exempted. And thereafter you need to check whether it is FCM or RCM. Okay. Now, what is the next one taxable? Professional services provided to foreign diplomatic mission located in India. Do we have anywhere in RCM this? Sir, CG, got salads? No. So, good, FCM. Next, recovery agent service provided to ABC Finance Limited NBFC located in Delhi. FCM or RCM? We have list of service under RCM na. In that I told you agent services. Go to your book and see the agent services. See the agent services. In that agent, can you find recovery agent? Page number 34. Okay. So recovery agent to bank or NBFC. So here you can see recovery agent is covered under RCM, recovery agent service. So recovery agent to bank or NBFC is covered under RCM. Means who will pay GST on that? Recipient will pay. A to Z will not pay. Is it clear? Next. Security services. For security service I told you what is the condition? Supplier should be other than body corporate. Here who is the supplier? Proprietary firm. So other than body corporate. Recipient should be registered but not opting for composition scheme and not registered only for deducting TDS. In this case, recipient is registered person. So therefore it will come under RCM. Then last, renting of motor vehicle. For renting of motor vehicle also we have RCM. See there, renting of motor vehicle. Page number 32. Renting of motor vehicle is also in RCM. What are the three conditions for RCM? See the first condition. First condition is what? Supplier should be other than body corporate. Correct? Supplier is other than body corporate. Proprietary firm. Correct? Recipient should be body corporate. So check who is the recipient. NPS Limited. Body corporate. Then rate of GST should be 5%. So for renting of motor vehicle given below rate of GST 5%. So it is also covered under RCM. Now in the hands of A to Z, what will be the value of taxable supply? In the hands of A to Z. See, when the question is determine the value of taxable supply, full stop. You have to just take taxable, total it and write. When they give the question, so far if you see previous question and all, compute the value of taxable supply, like that only they gave. They did not check, compute the value of taxable supply in the hands of the bank, compute the value of taxable supply in the hands of the supplier, like that they did not ask. Are you getting this? But in this question, they are asking compute the value of taxable supply in the hands of A to Z. So means supplier point of view. So whatever is RCM, don't add it to supplier liability. Is it clear? So which and all should be taken to supplier liability? 15,000, then 50,000, that's it na? 50 and 15, only 1 and 2. All other cases it will be RCM. So therefore it will be not added to the A to Z liability. Got it? Now this is the place where you do the mistake. What you do, this taxable and all is there na? That also you will put it in the column, because of which you will lose marks. Got it? Read the question carefully, then you will know what to answer. Okay? Clear here this question? Any doubt in this? Okay. Look into question number 9. So one student has messaged that I am degrading CMA and promoting CA, etc. and all. Nothing of that sort. I don't have any such feeling. Okay. First of all, it is like I am not a person to argue about CA or about CMA, because I don't take any side. If I take the side, then I should do only CMA in my life. I have done both CA as well as CMA, which means I cannot take a stand that CMA course is only best, CA course is only best. First of all, both the courses have its equal importance, and CMA course, if you really wanted to make your finance, core finance as your career, because CMA course is based on 3 pillars: costing, finance and taxation. So therefore people will go for it. Some people who want to go for accounting, taxation and audit, they go for CA. It's about the choice. And difficulty, yes, I do agree. CA course is difficult because more number of people are there and they want to cut down the pass percentage, etc. CMA course, they want more people because CMA course more of jobs only. So they need more people, so they give more pass percentage. Now, why will I take a stand? Why will I tell? But CA Institute also I am scolding. CMA Institute also I am scolding, for your information. And only those students who attend my CA class will know, they know how much I am scolding CA Institute. And CMA Institute also I am scolding. As a teacher I need to scold. Why? Because they are not doing proper justice to the students. Are you getting this? If they do, why will I scold? I am scolding both. I am not scolding the profession. Okay? I am scolding the institute in terms of conducting the examinations, etc. and all. Okay? Fine. So please, just for the sake of putting something, don't put in YouTube and all. I am not of that kind, pa. Then coming back to this question number 9. Swasya Nursing Home, a clinical establishment, offers the following services. So this is related to healthcare services. Okay. So for healthcare services, you can quickly look into the exemptions for healthcare service. You check page number 56. Healthcare services following are exempted. First point, healthcare services provided in a clinical establishment by an authorized medical practitioner or by a paramedics, including ambulance services, will be exempted. So therefore, what is the meaning of healthcare services? Generally healthcare services means pre-treatment. Before treatment, what they do? Diagnosis, X-ray, scanning, test, all these also coming under healthcare. Treatment, that is surgery or operation. Then post-treatment. What is post-treatment? Care, keeping the patient in observation. All this is healthcare. For what purpose? See here, pre-treatment diagnosis, treatment, post-treatment for any disease illness, injury, pregnancy, including transportation in ambulance. They have given two places ambulance. One is transportation as a part of healthcare. Another is separately also they have given ambulance. So, if you receive ambulance service, whether the hospital is providing healthcare service or not, but the ambulance service alone will be exempted. You understood? You book an ambulance to go to an hospital, but in that hospital they are telling we will not provide you the treatment because we don't have the facility, you go to a different hospital. Now first hospital ambulance is also exempted even though they are not providing any treatment. Is it clear? Now from first hospital to second hospital, another ambulance you are going, and the second hospital is providing the treatment, that is part of healthcare service, that is also exempted. But remember, only transportation of patient in an ambulance is exempted. What about transportation of dead body in ambulance? Not a supply, excluded from supply, death related, funeral, burial, etc. Okay. What about transportation of passengers in ambulance? Taxable. Ambulance is going, dropping the patient, while returning it has to come empty na. So some 5 passengers they have boarded and they collected 200 rupees from passenger. Taxable or exempted? Taxable. Only transportation of patient is exempted. Okay. Then next, but does not include cosmetic surgery, plastic surgery and hair transplantation. That will not come under healthcare service. Correct or not? How it will come under healthcare? Yeah? It is related to beauty of a person. That is not healthcare services. And other than, suppose if these 3 are carried out to restore the anatomy of body parts affected due to congenital defects, by birth itself there is some issue for which they receive cosmetic surgery services, exempted, or developmental abnormalities, injury or trauma, then also it will be exempted. Next, provided in a clinical establishment, authorized medical practitioner, paramedics including ambulance services. But remember, all services provided by hospital will be exempted except room charges. Room charges is exempted provided the room charges is up to 5,000 rupees per day. If the room charges exceeds 5,000 rupees per day, then entirely it will be taxable. See here. Room charges collected by a clinical establishment for providing healthcare services, ICU charges, CCU charges, ICCU charges or NICU charges, it will be exempted. Any other room charges, if the charges does not exceed 5,000 rupees per day, then it will be exempted. If the charges per day exceeds 5,000 rupees, entirely taxable. But this is only for other room charges. For this ICU charges and all, whatever may be the amount, that will be exempted. Then next one, previously we had cord blood banks as exemption. Now it is removed, which means it will be taxable. Also biomedical waste treatment operator, like that one point was there. Now it is omitted, which means it will be taxable. Next exemption you see, healthcare services in relation to animals or birds is also exempted. Okay, veterinary clinic services. Then if there is a consulting doctor who is providing service to hospital, not directly to the patient, to the hospital. Consulting doctor collect money from hospital, hospital collect money from patient. Hospital collecting money from patient is also exempted, and hospital making payment to consulting doctor is also exempted. Then whether IVF treatment also will come under healthcare services? Yes, IVF or infertility treatments and all are there. Now that is also healthcare services. And the healthcare service can be in any recognized system of medicine. What are the recognized system of medicine? Allopathy, naturopathy, Siddha, Unani, homeopathy, these are all some recognized system of medicines. Then services by rehab professionals. Who is a rehab professional? The one who is providing care or counseling, okay, related to the mental illness will be coming under rehab professional. They are not called as authorized medical practitioner. They will not do MBBS. They will be doing MSc psychology, okay. And these rehab professionals, if they are working in medical establishments, that medical establishment may be government or trust or private, it will be exempted. If they are working in educational institutions, then also whether it is government, trust or private, it will be exempted. If they are working in rehab centers, if it is government or trust, it is exempted. If it is private, it will be covered under taxable. Then next, there is a hospital which is providing food to inpatients. What is your answer? It will be exempted. And there is a hospital which is providing food to outpatients, visitors or staff, then it will be taxable. Got it? And who are inpatients? Those who are admitted in the hospital. Who are outpatients? Who come for consulting. Okay. Then hospital is giving its premise on rent to outdoor caterer. Even that is also exempted? No, that is taxable. That's not a healthcare service. Then, so hospital is selling medicines to inpatients. Is it healthcare service? Yes. So exempted. What if they are selling medicines to outpatients? It will be taxable. Outdoor caterer not allowed to supply food to inpatients. Sir, won't the outdoor caterer give food to inpatients? Usually no. But if they are giving food to inpatients, means it is approved by hospital. So therefore it will come under exemption. See this. Outdoor caterer not allowed to supply food to inpatients in hospital. If it is sold to inpatients, it is treated as authorized by hospital and it will come under exemption. These are the various points for healthcare services. Now you need to answer this question. Swasthya Nursing Home Clinical Establishment offers the following services. Number 1, rooms provided to inpatient where the room charges per day is 6,500. What is your answer? Taxable. Why it is taxable? Because it exceeds 5,000. Entirely taxable. Okay. Plastic surgery conducted to repair cleft lip of a newborn baby. Generally, cosmetic surgery, plastic surgery is taxable. But if it is to restore anatomy of body parts affected due to congenital defects means by birth, then it will be coming under exemption. Air ambulance service to transport critically ill patients from distant location to Swasthya Nursing Home. Ambulance service for patient is always exempted. Let it be air ambulance or road ambulance. Air ambulance means what? Helicopters, flights, etc. Okay. Next, supply of food to inpatients as per the advice of the doctor or nutritionist from its restaurant Annapurna Bhavan located in the basement of Swasthya Nursing Home. What is your answer? Exempted. To inpatient. To inpatient. Huh? Even if it is from a outdoor caterer to inpatient, it is approved by hospital. That's why it will come under exemption. Okay. Then the food is prepared by its employees. Here it is not outsourced. Their employees only preparing, means it is hospital only. And nothing is outsourced to any third party vendors. Okay. Next. So it is exempted. Homeopathy medical treatment. Exempted. Why? Recognized system of medicine. So first one alone is not exempt. Remaining and all will be coming under exempt. There is one more paragraph. Swasthya Nursing Home also operates a cord blood bank which provides service in relation to preservation of stem cells. What is your answer? Taxable. Previously cord blood bank was exempted, but now they have made it as taxable. Okay. Exemption available to cord blood banks is now no longer be exempted, so therefore it will be coming under GST. Now they are asking determine the GST payable. They have not given amounts. That's the reason why we will write separately taxable or exempted like that. Next. This is related to change in rate of tax. In time of supply, there is one section, that is section 14, which talks about change in rate of GST between 3 dates: date of completion, date of invoice or date of payment. Between these 3 dates, if there is a change in rate of GST, how to determine the time of supply? That is given in section 14. We will first read the provision and then we will come back to this. Okay. So please look into that section 14 points. It is in time of supply chapter, page number page number 19. Yes, page number 91 you can see. Time of supply in case of change in rate, and basically when this section 14 will be applicable only in case of services, also in case of supply of goods by a person opting for composition scheme or specified actionable claim. What are the specified actionable claims? HC blog, we discussed now. H for horse racing, C for casinos, B for betting, L for lottery, O for online money gaming, and G for gambling. Okay. Now see this. First we need to check the date of completion when the service is provided. Whether the service is provided before change in rate or after change in rate, we need to see. If the service is provided before change in rate, it is simple always. Invoice date or payment date, whichever is earlier. Okay, pa? Between 3 dates, first there is a change in rate. In that you need to see whether the supply is before change in rate or after change in rate. If the supply is before change in rate, then we need to see completion date or payment, invoice date or payment date, whichever is earlier. So date of invoice or date of payment, whichever is earlier. Suppose if the completion is after change in rate, if the completion is after change in rate, both invoice and payment before change in rate, then whichever is earlier. If one before, one after, whichever is later. Got it? Just 3 points. Completion before change in rate, whichever is earlier. Invoice or payment, whichever is earlier. Completion after change in rate, but both invoice and payment before change in rate, whichever is earlier. One before, one after. Payment before, invoice after, or invoice before, payment after, whichever is later. Now, what should be considered as the date of payment? That is crucial. If the payment is credited within 4 working days from the change in rate, then we need to take, so date of entry in the books or date of credit in the bank account, whichever is earlier. If the payment is not credited in the bank account within 4 working days from the change in rate, the date on which the payment is actually credited in the bank account only should be taken. Please look for this information in the question, because this is where we usually make a mistake. Say this: date of payment for section 14 is date of entry in the books or date of credit in bank account, whichever is earlier, when if the payment is credited within 4 working days from change in rate, or date of credit in bank account if the payment is credited after 4 working days from the change in rate. Is it clear? Now, applying this, keep this page, we are going to solve this question. Carefully see this. Mr. Mahendra Sharma, an interior decorator registered at Ahmedabad, Gujarat, provided service to one of his clients, XYZ Company Limited. Interior decorator service. Registered at Pune, Maharashtra. The provision of service is complete on 10/8. Date of completion 10/8. Okay, date of completion 10/8. Now, you just take your notebook, somewhere rough page, you write down this information. DOC 10/8. DOC 10/8. Date of completion 10/8. Okay, next. Date of completion is 10/8. And payment was entered in the books of Mr. Mahendra Sharma on 11/8. Wait, don't conclude, because if the payment is credited within 4 working days, then only entry date or credit date, whichever is earlier, will be taken. Now continue further. With effect from 16/8, the rate increased from 5% to 12%. So write down next one. Change in rate. First one you have written date of completion. What is the date of completion? 10/8. Next, change in rate. What is the change in rate? 16/8. 16/8. Supply before change in rate, after change in rate? 10/8. Before 16/8, after 16/8? Before 16/8. 10 will come before only, no? I will leave you here. Don't worry. After this question, I will leave you. But 10 will come before 16 only, na? Correct. So supply is before change in rate. When supply is before change in rate, what is the provision? Invoice date or payment date, whichever is earlier. 1 point. Okay. So for that reason only we need to know when the supply happened, whether the supply is before change in rate or after change in rate. Accordingly, the time of supply will change. Now, however, the payment for the service received was credited in the bank account on 17/8. Whether the payment got credited within 4 working days from the change in rate. What is the change in rate? 16/8. When the payment got credited? Within 4 working days. Next day itself the payment got credited. Correct? So what should be taken as the date of payment? Entry date or credit date, whichever is earlier. Write down DOP. Write down DOP. What is DOP? Entry date. What is the entry date? 11/8. 11/8. Right. 11/8. Or 17/8. Whichever is earlier. That is 11/8. You got date of payment. What is the next thing that you need to know? Invoice. Invoice for the same was raised on 23/8. Write down DY 23/8. DY 23/8. You got all the dates. First one, date of completion. You need 4 dates pa. Date of completion, change in rate, date of payment, date of invoice. You got all this data, correct? Now, whether the completion is before change in rate or after change in rate, before change in rate. When the completion is before change in rate, we need to take invoice date or payment date, whichever is earlier. What is invoice date? 23/8. What is payment date? 11/8. Whichever is earlier? 11/8. So therefore, time of supply, write down, time of supply is 11/8 or 23/8, whichever is earlier. 11/8 or 23/8, whichever is earlier, that is 11/8. As on 11/8, old rate or new rate? Old rate. What is the old rate? 5%. That is 5%. You understood the answer? Clear? See here. So the time of supply will be 11/8 and the rate will be 5%. Mr. Mahendra Sharma claimed that he is liable to pay IGST 5%, but department took the view that he is liable to pay at 12%. Is department correct or Mahendra Sharma correct? Mahendra Sharma is only correct. Understood up to this? Now another part. Say this. Would your answer undergo any change? In the above case, if the payment was credited to the bank account on 14/8 instead of 17/8, will it change? Change in rate when pa? Payment got credited within 4 working days. Yes, even before change in rate itself, payment got credited. Correct or not? So our answer will not change. Our answer will remain the same. Because again, what will be taken as the date of payment? 11/8 or 14/8, whichever is earlier will be 11/8, means entire story will be same. You got it? So answer will not change. If the payment is credited to bank account 14/8, so consequently with the other things remaining the same, the time of supply and applicable rate of tax will remain the same. So we completed in Mighty 50 10 questions. So the remaining 40 questions we will see later. So please look into question number 11. Question number 11. See that Musicara Private Limited, owned by Nitish Dani, a famous classical singer, wishes to organize Nitish Dani music concert in Gurugram, Haryana. Musicara Private Limited, registered in Ludhiana, Punjab, enters into contract with a event management company, Supriya Private Limited, registered in Delhi, for organizing the said music concert at an agreed consideration of 10 lakhs. So this is the transaction. So while reading this transaction, you need to identify what is the service about. The service is about organizing an event. For organizing an event, what is the place of supply? If it is section 12, we need to see B2B or B2C. If it is B2B, location of recipient. If it is B2C, then location where the event is held. If the event is held outside India, then location of recipient. But in case of section 13, it is always location of event. So this is the provision that you need to remember. So you need to refer to the place of supply chart. I told you, services. Place of supply, in case of services, you can see that chart. So in the book what you have, so place of supply provision, that summary we discussed. What is the page number? You can see here, organizing an event, page number 97, page number 97, service in relation to organizing an event. What should be taken as the place of supply? If it is B2B, location of recipient, section 12, B2C, location where the event is held. If the event is outside India, then location of recipient. Whereas in the case of section 13, always it is location where the event is held. So coming back to this question, so it is B2B or B2C. Who is the supplier? The supplier is Event Management Company Supriya Limited, and recipient is this Musicara Private Limited. Where is Musicara Private Limited? Registered in Punjab. So organizing an event, first you need to identify the service, then you need to identify who is the supplier, then you need to identify who is the recipient. Okay, service is organizing an event, supplier is Supriya Private Limited, Delhi, and recipient is so this Musicara Private Limited, Ludhiana, Punjab. Okay, so therefore it is B2B. B2B, we need to take location of recipient as a place of supply. So Punjab will be taken as the place of supply in this case. That is the first transaction. So Punjab will be taken as place of supply. And what is the nature of supply? It is intrastate or interstate. What is the location of supplier? Location of supplier will be Delhi. Place of supply will be Punjab. Therefore it will be coming under interstate supply and chargeable to IGST. So therefore IGST will be applicable in this case. Then look into the next transaction. Continue further. Supriya Private Limited books the launch of Hotel Dum Dum, Gurugram, registered in Haryana, for holding the music concert for a lump sum consideration of 4 lakhs. For this 4 lakhs, what will be taken as the transaction? What is the transaction there? Booking of hotel, correct? Booking of hotel means it will come under service in relation to immovable property. What will be taken as place of supply in case of service in relation to immovable property? You can see here. So page number 96, service in relation to immovable property as per section 12, location of property will be taken as place of supply. What if the property is located outside India? Then location of recipient will be taken as place of supply. But in case of section 13, always location of immovable property will be taken. So coming back to this question, so service is booking of hotel, that is service in relation to immovable property. Who is the supplier? Hotel Dum Dum in Gurugram. Who is the recipient? Recipient is Supriya Private Limited, Delhi. What will be taken as place of supply? Location of immovable property. Where is immovable property located? Gurugram. So hotel also Gurugram, place of supply also Gurugram. Therefore it will be coming under intrastate supply. So therefore this 4 lakhs will be chargeable to CGST, SGST. So you can see here hotel accommodation 4 lakhs, place of supply will be Gurugram, Haryana, and CGST 9% and SGST 9%. Understood, Nayar? Then next, continue further. So Musicara Private Limited fixes the entry fee to the music concert at rupees 5,000. 400 tickets for Nitish Dani music concert are sold. So related to concert, we have exemption. If the ticket price does not exceed 500, it will be exempted. So musical performance, theatrical performance, concert, pageant, then even sporting events, like that we have some list. So total 9 points you need to remember, 9 entry tickets. For these 9 entry tickets, if the ticket price does not exceed 500, it will be exempted. First 4 related to performance. What is that performance? Theatrical performance, dance, music, concert, these 4. Next 4 events. What are those 4 events? Circus, pageant, and award function. Okay. Then sporting event, 4 events. Then finally one place, that is planetarium. For these 9 entry tickets, the ticket price, if does not exceed 500 rupees per person, it will be exempted. But here it is how much? 5,000, means it exceeds 500. So entirely it will be taxable. What is the service here? Admission to event, correct? Entry ticket, admission to event. For admission to event, what will be taken as a place of supply? Let it be section 12 or section 13. Service in relation to admission to an event, always place of supply will be location where the event is held. So coming back to this, what is the service? Service is admission to an event. Who is the supplier? Supplier is Musicara Private Limited. Who is the recipient? People who come purchasing the ticket, audience. And what will be the place of supply? Location of event. Now read where the event is held. So wishes to organize Nitish Dani music concert in Haryana, Gurugram, Haryana. So Haryana will be taken as the place of supply. And where is Musicara Private Limited located? Where is that they are registered? Punjab. So location of supplier Punjab, place of supply will be Haryana. Therefore it will be coming under interstate supply. You can see here. So place of supply will be, this is related to entry tickets, na? So what is the value of the entry ticket? 400 into 5,000. So 20 lakhs. 20 lakhs, and the place of supply will be, so Gurugram, Haryana, location of supplier Punjab, place of supplier Haryana, therefore it is interstate supply, chargeable to IGST. Then one more line they have given. You are required to determine CGST, SGST, IGST liability, that already we determined. Will your answer be different if the price per ticket is fixed at 450? Yes. If the ticket price does not exceed 500 rupees per person, then this ticket will be exempted. Then next one, question number 12. Determine the place of supply for the following independent cases. Festival event. An event management company at Mumbai organizes 2 business promotion events for Prabhu Enterprises registered in Ahmedabad, Gujarat, at New Delhi and in Malaysia. Now, what will be taken as a place of supply? What is the service? What is the service? First, you need to identify the service. What is the service? Event management means organizing an event. For organizing an event, whether it is 12 or 13, where is the supplier located? Who is the supplier? Read the question. Who is the supplier? Festival event is the supplier, and where is it they are located? Mumbai. Who is the recipient? Prabhu Enterprises, and where is it they are located? Ahmedabad, Gujarat. So both are in India. So section 12. Section 12, B2B or B2C, we need to check. There are 3 services for which we need to check B2B, B2C. What are those 3 services? TOT. TOT. T for training and performance appraisal. You can see the table. Training and performance appraisal. That is a place where we check B2B, B2C. Training and performance appraisal services. Again, O. O for organizing an event. T for transportation of goods or transportation of passengers. These places only where we apply B2B, B2C. So this is organizing an event. For organizing an event, what should be taken as a place of supply? B2B, location of recipient. It is B2B because both are registered, correct? So B2B, location of recipient. What is the location of recipient? Ahmedabad, Gujarat should be taken as the place of supply. Is it clear? Understood, pa? Next. Suppose if they are unregistered, then B2C. So at that time we need to see location where the event is held. Where the event is held, New Delhi and Malaysia, but it will be taken as New Delhi only, because if the event is held outside India, then again we will come back to location of recipient only. But here it is B2B, that is the answer, okay. Then continue second point. Global Planners, Jodhpur, Rajasthan is hired by Mr. John, unregistered person based in Kochi, Kerala, to plan and organize his son's wedding at Mumbai, Maharashtra. Will your answer be different if the wedding takes place in Singapore? First, identify what is the service. Organizing an event. Again, B2B or B2C? B2C. B2C, because the recipient is unregistered. So what should be taken as place of supply? Location where the event is held. Where the event is held? Mumbai, Maharashtra. That will be taken as a place of supply. Will your answer be different if the wedding takes place in Singapore? Yes. If the wedding takes place in Singapore, then location of recipient. What is the location of recipient? Kochi, Kerala will be taken as a place of supply. Understood here? Next one. Third. Dhirubhai Private Limited, New Delhi, imports a machine from Japan for being installed in its factory at New Delhi. To install such machine, Dhirubhai Private Limited takes the service of an engineer who comes to India from Japan for this specific installation. Now, what is this service? Services, installation service. Installation service, 12 or 13. Where is the supplier located? Outside India. Who is coming to India to do the service? Correct? And where is the recipient located? In India. Section 13. As per section 13, performance-based services in relation to goods. Physical presence of the goods required. We need to take location where the services are actually performed. Physical presence of the goods not required, then we need to take location of goods. In this case, whether physical presence of the goods required or not, yes, to do the installation. Otherwise, how we can do installation? Through remote can we do installation? I mean, I am in some other place, can we do installation? Abracadabra, install, means it will get installed. No, So the machine is required for installation, means physical presence of the goods is required. So what will be taken as a place of supply? Location of performance. Location of performance, where the installation is taking place, New Delhi, that will be taken as the place of supply. So see here, location where service is actually performed, that is New Delhi. You got it? So this is why I told you place of supply chapter is very important, because if you know the provision, you will be able to arrive at the answer. If you don't know the provision, you cannot write. Okay, the appropriate provision you should know. Okay, then next one, 4. Mr. Gogoi, an architect, New Delhi, provides professional services to Mr. George of New York in relation to his immobile property located in Pune. What will be taken as a place of supply? What service first of all? Architect services. Architect service means service in relation to immobile property. What will be taken as a place of supply for service in relation to immobile property? Location of property. Where is the property located? So in India, that is Pune. So that will be taken as the place of supply. But we need to apply 12 or 13. 13. Why 13? Because architect is in Delhi, but the recipient is in New York. So therefore, location of property will be taken. The property is in Pune. What if the property is in New York? Still it is location of property only, not location of recipient. That is for 12 only. Okay. So check the book properly. So in case of section 12, that is both supplier and recipient in India, there only we see if the property is outside India, then location of recipient. Otherwise, for section 13, always it will be location of property. Even if the property is outside India, that location of property only will be taken as a place of supply. Don't get confused. Okay. Then next, look into 5th one. Mr. Jigar, an unregistered person based in New Delhi, hires a yacht from a company based in London, UK for 20 days. What will be taken as a place of supply? 12 or 13? 13. Why 13? The one who is giving the yacht on rent is outside India. The one who is taking it on rent is in India. So section 13. What is it? Hiring of means of transport. For hiring of means of transport, we have a specific provision. You can see that in page number 99. Point number 14. Hiring of a means of transport. In case of hiring of a means of transport, if it is aircraft or vessel, always general provisions. Whereas in case of other vehicles, up to 1 month, then it will be location of supplier. Beyond 1 month, it will be general provisions. 13 subsection 2 means general provisions. Could you identify that? Hiring of a means of transport, aircraft or vessel, always general provision. Other vehicles up to 1 month, location of supplier. And beyond 1 month, it will be general provision. Now come back to this question. Here, yacht is other than aircraft or vessel. Is it given for up to 1 month or beyond 1 month? Up to 1 month for 20 days. Then what will be taken as a place of supply? Location of supplier. Who is the supplier? So that is a company based in London. So therefore London will be taken as the place of supply. Is it clear? So what I have observed in the past exam questions of yours is that they have given these 2 type of questions also. So first they have given this type, wherein they give a situation. In that situation, we need to identify the place of supply and determine whether it is intrastate or interstate, like that. Like this also one question, and it involves computation also. This type of question also they have given. Another type of question what they have given is that, like this, some 5 or 6 situations they gave, and you need to write what is the place of supply in this case. Like this type of question is also there, okay, in your past exam. So any type of question can be tested on place of supply. Now we are moving on to question number 13, that is related to valuation. So up to this 11 and 12, any doubt related to place of supply? See, you should be thorough with these 4 pages. So section 12, section 13, what will be taken as a place of supply? I gave you a summary. So that table you should be thorough with. Okay. Then coming back to question number 13. Shri Krishna Private Limited, a registered dealer, furnishes the following information relating to goods sold by it to Shri Balram Private Limited in the course of intrastate. Price of the goods is 1 lakh, municipal tax 2000, inspection charges 15,000, subsidies received from Shri Ram Trust. First, what should be taken as the transaction value? The price involved in the transaction will be taken as the transaction value. So 1 lakh will be transaction value. Municipal tax. What is the treatment of municipal tax? As per section 15(2)(a), taxes, duties and cess by whatever name called other than GST should be included in the value. So kindly open your book, page number 120. Open that page. Generally, what should be taken as the value for payment of GST? The value will be transaction value. What is transaction value? The price actually paid or payable will be taken as a transaction value. To this price actually paid or payable, totally there are 5 inclusions. In that 5 inclusions, see the first inclusion, 15(2)(a). What does it say? Tax, duties, cess, other than GST, if charged to the recipient, should be included in the value. So coming back to this, is this municipal tax other than GST? Yes. And whether it should be included in the value? Yes. Now what they have done in the given price, go to the last paragraph. According to GST law, determine the value of taxable supply. Items in point number 2 to 6 are not considered while arriving at the price of the goods given in point number 1. Means in this 1 lakh, this 2,000 is not included. So therefore we need to, first as per provision, it is to be included. In the given price it is not included. So therefore we need to add. Then next, inspection charges. Inspection charges will be done before delivery of goods or after delivery of goods? Before delivery only inspection will be done. So we have 15(2)(c). 15(2)(c) says supplier incurring the expenditure and charged to recipient. When it should be charged to recipient? Before or at the time of delivery of goods or supply of service, then it should be included. So consequently, these inspection charges to be included, but in the given price it is not included. So therefore we need to add. Then subsidy received from Shri Ram Trust, as the product is going to be used by blind association, 50,000 rupees. So this particular subsidy is what, we have subsidy related one point. What does it say? Subsidies directly linked to price from other than central government or state government should be included in the value. Now coming back to this, is it from CGSG or others? Others. Shri Ram Trust, others. Therefore it is to be included in the value. In the given price, it is not considered. Not considered means they have not reduced. Usually subsidy is an income that will be reduced. So they have not reduced. They have not reduced means it is to be included. In the given price it is already included, so no need to add again. Is it clear or not? Not considered means what part? Not considered means they have not reduced. Okay. Not considered means they have not reduced. If it is considered, what they would have done? They would have reduced, because subsidy is an income. They are getting that income, okay, for that reason. So see the explanation. Subsidy received from Shri Ram Trust, as the product is going to be used by blind association, it is includable, as only subsidy received from government is not includable. Already included as the given price is without considering the subsidy. Is it clear? Next, what if they give that the subsidy is considered, the given price is after considering subsidy? Then what they would have done? While arriving at 1 lakh, they would have reduced 50,000. So we need to add back 50,000. Is it clear? So in this case, they have not reduced, means already in 1 lakh this 50,000 is included, so ignore. Then late fee for delayed payment, though Shri Balram Private Limited made late payment, but these charges are waived by Shri Krishna Private Limited. Now look into the inclusion. 15(2)(d). What does it say? Interest, late fee or penalty for delay in receipt of consideration should be included in the value. But only when it is actually charged it should be included in the value. But they are waiving off now. Generally late fee to be included, but in this case they are waiving off. As they are waiving off, it is not required to be included. Then continue further. Shri Balram Private Limited paid to Radhe Private Limited. Who is Balram Private Limited? Recipient. Correct? Shri Balram Private Limited is recipient. Paid to Radhe Private Limited on behalf of Shri Krishna Private Limited. Weighment charges 2000 rupees. For this also we have an inclusion. What is that? Recipient incurring expenditure on behalf of supplier. Actually, who should incur this expenditure? Supplier. But who incurred it? Recipient. So it is an indirect consideration to the supplier. Therefore, it should be included in the value. Now do the calculation. 1 lakh plus 2000 plus 15,000, that is 1,17,000 plus 2,000, that is 1,19,000 will be taken as the value. Understood, pa? So this question covers all the inclusions. Taxes point, recipient incurring expenditure on behalf of supplier, incidental expenses, late fee, subsidy, all 5 inclusions are there in this question. So this one question covers all the 5 points. Okay, next. Look into question number 14. Rolex Forex Private Limited, registered in Delhi, is a money changer. It has undertaken the following purchase and sale of foreign currency. Determine the value of supply in each of the above cases in terms of Rule 32.2a and Rule 32.2b. I told you for 5 transactions we have special valuation rule, Rule 32. In that, foreign exchange transactions. Kindly open that particular page. It is in page number 135. Page number 135. Valuation in case of foreign exchange transactions. For that, we have 2 rules. Rule 32.2a and Rule 32.2b. These are 2 options. We can decide between either option 1, that is 32.2a, or option 2, 32.2b, and this option needs to be decided in the beginning of the financial year, and that will be applicable throughout the financial year. Now look into the first option. What does the first option says? Check whether one of the currency exchanged involves Indian rupee and RBI reference rate is available on that day. Then you need to see the difference. Difference between what? Either the purchased or sold currency and the RBI reference rate into units of currency. Suppose if RBI reference rate is not available, you take the gross amount in Indian rupees into 1%. What if both the currencies are foreign currencies? Convert both the currencies into Indian rupees using RBI reference rate, multiply with 1%, whichever is lower. List of the following. Purchased currency converted into rupees using RBI reference rate into 1%, sold currency converted into rupees using RBI reference rate into 1%. Now, go to that question. In this question, what is that they have given? 1000 US dollars are purchased from Rajesh Enterprise at the rate of 68 rupees per dollar. What is the exchange rate? 68. And what is the RBI reference rate on that day? 68.6. So one of the currency exchange involves Indian rupee. Correcta? Correcta, pa? Don't sleep. Please concentrate. Okay. So one of the currency exchange involves Indian rupee. Whether RBI reference rate is available on that day? Yes. So we need to see the difference between exchange rate and the RBI reference rate multiplied by units of currency. What is the exchange rate? 68. What is the RBI reference rate? 68.6. What is the difference? 0.6. 0.6 into how many dollars? $1000. That is 600 rupees will be taken as the value. Understood? What if it is next question? $2000 are sold to Srinidhi at the rate of 67.5 per dollar. RBI reference rate is not available. Then what we need to do? 1%. See the gross amount in Indian rupees. $2000 into 67.5 into 1%. How much? So that will be taken as the value. Got it? That is 1350. Okay. Now, what if both the transactions are in foreign currency? What we should do? Say $1000 exchanged for 400 pounds, like that they have given. What should we do? Convert both that $1000 as well as 400 pounds into Indian rupees. How? Using RBI reference rate. Thereafter you multiply with 1%. So whichever is lower will be taken as the value. Is it clear? Maybe that type of question also may be given in exam. Now, second option, they are asking answer these 2 questions as per rule 32.2a as well as rule 32.2b. Now we will understand what is that rule 32.2b. Rule 32.2b is like slab rate model. Okay, see there. What does that slab rate model says? If the gross amount is up to 1 lakh, that is first slab. Beyond 1 lakh and up to 10 lakhs is second slab. Beyond 10 lakhs will be third slab. Up to 1 lakh is first slab. Beyond 1 lakh and up to 10 lakhs is second slab. Beyond 10 lakhs will be third slab. For the first slab, what will be taken? 1% of gross amount. What is the gross amount? Say for example 80,000. 80,000 into 1%. 80,000 is in first slab na. 80,000 into 1% is what? 800 or 250, whichever is higher, that is 800. Suppose if it is 20,000, that is also in first slab, not 20,000. 20,000 into 1% is what? 200 or 250, whichever is higher will be 250. Exactly 1 lakh, still it is in first slab. For exactly 1 lakh, how much we will take? 1 lakh into 1%, 1000 or 250, whichever is higher will be 1000. Which means when you are going into second slab, what is the fixed amount? 1000 plus whatever is excess beyond 1 lakh on that 0.5%. For example, 6 lakhs pa. For first 1 lakh it will be 1000. For remaining 5 lakhs into 0.5%, that is 2500 plus that 1000, that will be 3500. Are you listening? Then suppose if it is 8 lakhs, try first 1 lakh, 1000, remaining 7 lakhs, 7 lakhs into 0.5%, 3500, 3500 plus 1000, 4500. Got it? Now exactly 10 lakhs, first 1 lakh, 1000, remaining 9 lakhs, 9 lakhs into 0.5%, 4500, 4500 plus 1000, 5500, which means when you move to third slab, what is the fixed amount? 5500. And in the third slab, beyond 10 lakhs, what will be taken as the percentage? 0.1%. For example, you take 25 lakhs. For first 1 lakh, it will be for first 10 lakhs, it will be 5500. And for remaining 15 lakhs, 15 lakhs into 0.1%, that is 1500 only. 1500 plus 5500, that will be 7000. Got it? Like that. What is the maximum value? 60,000. Okay. Suppose if it goes to somewhere like 250 lakhs. For first 10 lakhs, it will be 5500. Remaining 240 lakhs. 240 lakhs into 0.1%, 24,000. 24,000 plus 5500, that is 29,500 only. So maximum is not touching. Is it clear or not? Suppose if the transaction is like 800 lakhs, 900 lakhs like that, then the maximum will be 60,000. Okay. So that will be taken as the answer. Now coming back to this. First question. What is the gross amount in Indian rupees? Do the calculation. $1,000 into 68. 1000 into 68 is what? 68,000. Means it is in the first slab. For first slab, how much we need to take? 1%. So 68,000 into 1% is what? 680 or 250, whichever is higher, that is 680. Then go to the second question. What is the gross amount in Indian rupees? 2000 into 67.5. Do the calculation. 2000 into 67.5 is how much? 1 lakh 25,000. 35,000. For 1 lakh it will be 1000. Remaining 35,000. 35,000 into 0.5%. How much? 175. So 1000 plus 175, 1175 will be taken as the answer. Is it clear? 680, 1175. So this question is related to that foreign exchange transactions. Okay. Then next one. Both the rules we did. Okay. I think this question they gave in model test paper. Recent one model test paper they have released for June exam. In that they gave this question. Okay. Next, question number 15. LIC of India provides you the following information for the month of January. You are required to compute the value of taxable supply of services under Rule 32 sub Rule 4 of determination of value of supply. Already we discussed in the supplementary discussion. What is that? Insurance company, different policies, how much should be taken as a value. General policies, total premium collected 12,000 lakhs, out of which first year premium is 5,000 lakhs. How much should be taken for 5,000 lakhs? Value 25%. So 5,000 lakhs into 25% is what? 1,250 will be taken as the value. Is it clear? Then next, out of 12,000, if 5,000 is first year, what is the remaining? Subsequent year, 7,000 into 12.5, that is 875 lakhs. Then single premium annuity policy, premium is 850. How much? 10%. So 850 into 10%, 85 lakhs. Then only risk cover policies, 500 lakhs. Full 500 lakhs. Full 500 lakhs. Life micro insurance policies where the sum assured does not exceed 2 lakhs. Premium 10 lakhs exempted. Because all micro life insurance is exempted if the sum assured does not exceed 2 lakhs. So therefore, under that exemption, this premium 10 lakhs will be exempted. Then variable insurance policies, premium collected 8,000 lakhs. Out of this 8,000 lakhs, 80% of the amount is allocated for investment on behalf of policy holder, for which policy holder is given separate breaker in premium receipts. Now, whether the amount allocated for investment is intimated to the policy holder? Yes. Then how much should be taken as the value? 8,000 minus 80%. What is that remaining 20%? 1,600. So total taxable value will be 4,310 lakhs. Got it? So this is on that rule 32 life insurance business. Then next, look into question number 16. Sacrosanct Manufacturers Limited, a manufacturer of bottle caps, is registered in Dhanbad, Jharkhand. It imports a bottle cap making machine from Japan. Sacrosanct Manufacturers Limited avails the service of Zumro Logistics, a licensed customs broker in Kolkata for getting the said machine cleared from the customs station. That is their work. Sacrosanct Manufacturers Limited also authorizes Zumro Logistics to incur on its behalf the expenses in relation to clearance of imported machine. So generally, supplier incurring the expenditure and charge it to recipient should be included in the value. But if the supplier is incurring the expenditure on behalf of recipient as a pure agent, that expenditure should not be included in the value. Is it clear? Pa, I am your supplier, pa, you are my recipient. I incur some expenditure. For the purpose of providing service, I incur the expenditure, and that expenditure I recovered from you. Whether it will be included in the value? Yes, it should be included in the value. Whereas it is your liability. You are my recipient, your liability. I incurred it and I recovered from you, which means it should be included in the value. No, because actually it is whose expenditure? Recipient expenditure. On behalf of recipient, supplier is incurring. It should not be included. For example, say, so one person is coming to you and asking you to file, sir, you file my GST return. And you said, okay, fine, I will file your GST return. You have to give me 5,000 rupees. He said, yes, sir, I'll give you 5,000 rupees. While filing GST return, you came to know in GSTR 3B, there is a liability of 2,000 rupees. And you called him, boss, your ITC is less than your liability, so 2,000 rupees you have to pay. He's telling, sir, I am outside, you make the payment, and thereafter along with 5,000 you collect that 2,000 rupees also, like that he said. Now you collected 7,000. Now what should be taken as a value? 7,000 or 5,000? 5,000. Why 5,000? That 2,000 is whose expenditure? Recipient's expenditure, but you incurred, so it should not be included in the value. Got it? That is a concept of pure agent. Here, Sacrosanct Manufacturers is asking Zumro Logistics to incur on its behalf the expenses. What expenses? In relation to clearance of the imported machine. Whatever expenses for clearance of machine means what? Customs duty or charges, everything. Who should incur? Customs agent, customs broker should incur. Okay, that is Zumro Logistics. For clearance of the imported machine from the customs station and bringing the same to the warehouse at Dhanbad. So transportation cost also they need to incur on behalf of recipient. These expenses would be reimbursed by Sacrosanct Manufacturers to Zumro Logistics on actual basis. In addition, Sacrosanct Manufacturers will also pay the agency charges to Zumro Logistics. Now, what should be taken as a value? First, these agency charges will come. That is the basic. amount, okay, that is for their work. For their work, they will collect that 5 lakhs will come. What about customs duty? Who should pay customs duty? Recipient. Manufacturer who is importing the machine only should pay na. So this customs broker is paying, means it is on behalf of recipient. So it should not be included in the value. Then port charges, dock dues, who should pay? Whomsoever is importing machine, they only should pay. But these people are paying. So again expenditure as pure agent. Again transportation cost, who should incur? Recipient. See, all these are clearly given in the question itself. Sacrosanct manufacturers authorize Zumbro Logistics to incur on its behalf the expenses in relation to clearance of imported machine from where to where? Custom station, and bringing it to the warehouse at Dhanbad. You got it? Then, so this transportation charges also will not come. Unloading, again unloading, whose job? Client job, but incurred by the supplier, it will not come. But these three are for the purpose of providing the services. Hotel expenses, traveling expenses, and telephone expenses, because that is not given here. What and all is given? Only expenditure for clearance and then bringing up to warehouse. Correct? So remaining amount and all will come under in the course of supply. You got it? First you need to check whether it is expenditure incurred as a pure agent. If yes, it will not be included. Remaining expenses and all will be included. Accordingly, this 45,000, 50,000 and 2,000 will be included. So do the computation. 5 lakh plus 45,000 plus 50,000 plus 2,000. How much it comes to? 5,97,000 should be taken as the answer. Got the clarity? Then, but all these expenses should be shown separately in invoice. What if these expenses are not shown separately? Together if they give a single amount, whether the pure agent benefit we will get? No, we will not get the pure agent benefit. Means entire amount will be taken as a value. See the next paragraph. Compute the value of supply made by Zumbro Logistics with the help of given information. Would your answer be different if Zumbro Logistics charges 13 lakhs as lump sum consideration for clearing the imported machine from the custom station and bringing the same to the warehouse of sacrosanct manufacturers? What will be your answer? This benefit of pure agent will not be applicable. So entire 13 lakhs will be taken as the value as per section 15. Got it? Now see this. This is the concept of pure agent. As we discuss this, I am also explaining it here. First, expenditure is incurred by supplier and charged to recipient. You can see. Come back to page number 120. So supplier is making supply of goods or services to the recipient, and whatever payment that recipient makes, that will be taken as a transaction value. Now supplier is incurring some expenses and recovers it from the recipient. First we need to see, is it expenditure on behalf of recipient, pure agent? Yes. Then such expenditure shall be excluded from value. What if it is in the course of supply? Then it will be included in the value. When the expenditure is said to be on behalf of recipient, the concept of pure agent is applicable if it is liability of recipient which is incurred by supplier. Total 4 conditions should be satisfied. Condition number 1, the recipient should authorize the supplier to incur the expenditure. So in that GST example, so recipient is asking you to incur the GST payment and then recover from him. So supplier should enter into agreement with the recipient to act as pure agent. Supplier should recover only the actual amount. How much GST you paid on behalf of your client? 2,000. So how much you should recover? If you recover more than 2,000, you are not a pure agent. Is it clear? Then supplier should not hold the title. That GST receipt should be in whose name? Your name or client's name? Client's name. Supplier should not use the said goods or service so procured for his personal purpose. Your personal GST paid or client's GST paid? Client's GST paid. Then only it will come. Okay, 4 conditions. First, contractual agreement. Number 2, only the actual amount should be recovered. Supplier should not hold the title and it should not be used for the personal purpose. Got it? So that is about this question number 16. Then question number 17. So can you all get up and sit once? Stand up. What afternoon curd rice you had? Sit, 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 sit. நல்லா தூங்குறீங்க உட்கார்ந்து. Online they left. They left the discussion. So morning 11 o'clock, few students were there. By 1 o'clock and all, everyone thought, okay, Sunday, like that they went. And afternoon and all, no one is there. Maybe they can watch later on also. But time is important. Now you are covering this in half a day, so that you don't have to spare extra time. I don't know whether you tried this in YouTube and all. When you sit, no, if the lecture is for 2 hours, it will take 4-5 hours for you. 4-5 days also it happened. Okay, it happens, really it happens, because you know, when it is at home, when we sit, we have a facility to pass, and we will get like that one notification, we'll open that, some WhatsApp, and some issue will come, we will call, and thereafter the mood to come back, very difficult here. Then, okay, we completed 5 questions, so we will open Instagram for some time, scrolling and all. It will, we think 5 minutes, 10 minutes, but it will go for 2 hours, really. And thereafter again we come back, you know, that mood will not be there. So recorded classes when we are watching, it is very, very difficult. But no other go, lot of people will be dependent on that. That's why I always conduct face-to-face class. Any revision, anything, I do that, so that some students who sit here, they will find he is watching me or he is making me to listen, so that you will listen. Okay, fine. Coming back to this. Okay, some students are watching. Good, good, very good. Keep it up. Mr. Lakshmi Narayanan is a registered supplier in the state of Orissa. This is CMA past exam question. This is a CMA past exam question. Mr. Lakshmi Narayanan is a registered supplier in the state of Orissa under the regular scheme. Following are the details of transaction entered into by him during the half year ended on 31st March 2021. Particulars: intrastate supply of product Sun, GST rate 12%, 30 lakhs. Intrastate supply of product Moon, GST payable by the recipient under RCM 10 lakhs. Remember, whenever my outward supply is covered under RCM, for ITC purpose it will be treated as exempted supply. Got it? I am making sale to you. I will not pay GST. You will pay GST. But for me it is treated as exempted, which means I cannot take ITC on my inward supply. Got it? Then export of product Sun without payment of GST. So export is what? Zero rated. Zero rated. Even though I am not paying any GST, still I can take ITC. Yes. Carefully listen, pa. The general rule is, if my outward supply is taxable, I can take ITC on my inward supply. If my outward supply is exempted, I cannot take ITC on my inward supply. Clear? Now, so we have a special case, that is zero rated supplies. When my outward supply is zero rated. Why zero rated is called as zero rated? Because the rate is 0. No, not like that. What is the reason? The burden will become 0. How burden will become 0 in case of zero rated? First I will pay IGST. That IGST paid I will get as a refund. Simple pa. First I am paying IGST. That IGST paid on export I will get as a refund. Means what is my burden? That's why it is zero rated. Okay. Then second option is what? I will export without payment of IGST. Then I will get the refund of ITC on my inward supply. Then also my burden will become 0. Got it? So even though my outward supply is zero rated, I am not paying any GST, but I can take ITC on my inward supplies. Is it clear? Then next point, that is this point. So whenever you are exporting a product without payment of GST, but export is zero rated, you can still enjoy ITC. So it will be classified as what turnover? Taxable turnover, exempted turnover, taxable turnover. Sir, why are we discussing all these things, sir? Because there is one point which says, whenever you have the common inward supplies, okay, which is partly used for taxable and partly used for exempted, okay. So see this discussion. So I have some inward supplies. So here itself I will write I have some inward supplies. I have some inward supplies. You don't have to make note, just listen. I have some inward supplies which is partly used for taxable and which is partly used for exempted. Okay. So when it is partly used for taxable, partly used for exempted, definitely we cannot take full credit on this inward supplies. Correct? Huh? Say, for example, this inward supply is 10 lakhs excluding GST at 12%. Okay. Then what is the ITC that we have? 1,20,000. Am I right? Whereas taxable turnover is say 40 lakhs and exempted turnover is say 20 lakhs. Tell me how much ITC I can enjoy. What is the eligible ITC? This is total ITC, but this is not my eligible ITC. Why it is not my eligible ITC? Because I am using this inward supply partly for exempted. So what should I do? First, ITC availed. How much is the ITC availed? 1,20,000 minus ITC reversed. What is that ITC reversed? 1,20,000 into what is my exempted turnover? 20 lakhs divided by what is my total turnover? 60 lakhs. To that extent I need to reverse. Is it clear? Why? Because 20 lakhs portion is exempted for that reason. So 1,20,000 into 20 by 60. Please calculate and tell me. 40,000. So 40,000 needs to be reduced. So what is my net eligible ITC? 80,000 will be taken as eligible ITC. Is it clear? So eligible ITC will be only 80,000. This is how we need to compute the ITC when we have partly taxable and partly exempted. For this purpose, they have given this data. So one product is taxable. So it will come under taxable turnover. Okay. One product, moon, GST payable by recipient. Even though GST is payable by recipient, but for supplier it will be treated as exempted. Taxable to whom? Recipient. For supplier it will be treated as exempted. So it will come under exempted turnover. Then where 0 rated you will keep. Even though it is 0 rated, you will keep it under taxable turnover. All this is for ITC computation. Okay. Next, legal services received from an advocate for product son. How much? 2 lakhs. Son is what? That's what? Taxable, exempted. Taxable. Son is taxable. So legal service is fully used for taxable. Can we enjoy the ITC? Any proportionate calculation is required. Fully we can enjoy ITC. Got it? Ayya, son is in 2 places. Both the places it is taxable turnover. When inward supply is fully used for taxable outward supply, can we take ITC? So therefore on these legal services, whatever GST we paid under RCM, we can take ITC. First 3 is your outward supply. This is your inward supply, received, inward supply. Got it? On that inward supply, legal services is covered under RCM. Advocate services, arbitrator service is covered under RCM. So whatever GST we pay under RCM, we can avail it as ITC. Fully can we avail, or should we do a computation like this? Fully you can avail. Why fully you can avail? Because it is used fully for taxable turnover. You got it? Or taxable outward supplies. Got the clarity? Next one. Common inputs used for supplies of above. Common means for both taxable and exempted. We have partly taxable, partly exempted. Proportionately we need to reverse. And all amounts given above excluding GST wherever applicable. GST rate on service is 18%. All conditions for availing ITC have been complied. Turnover during the earlier financial year was 35 lakhs. Why they gave this line? Turnover during the earlier financial year was 35 lakhs. Because for legal service we have an exemption. What is that? Services provided by individual advocate or firm of advocate to a business entity whose turnover during the previous year does not exceed threshold limit for registration, then the service is exempted. What is their turnover during the previous year? 35 lakhs. means it is more than 20 lakhs. Therefore, whether this legal service is taxable or exempted, taxable. For that purpose, they have given this. Understood? Now, can we do this question answer? So, you take your notebooks, one rough page you take. Just some rough page you take, we will do. So, what is the computation we need to do this? You are required to compute the net GST liability. Whenever there is a computation related to net GST liability, you need to do it in 4 statements. Okay, 4 statements. First, we need to compute the gross GST payable on outward supplies. Okay, that is first statement. Second statement is GST payable on inward supplies under RCM. Third statement will be computation of ITC, availed, reversed and net eligible ITC. Fourth statement will be computation of net GST payable. Can we do it as per that? Yes. So, I will just write, you make note first. What is the first statement you need to do? Computation of, write down, computation of gross GST payable on what supplies? Outward supplies. Computation of gross GST payable on outward supplies. That is your first statement. In this, you need to write particulars, value, CGST, SGST, IGST. Because sometimes there will be intrastate supplies, sometimes there will be interstate supplies. Okay, for that reason. Now, what is the first one? Intrastate supplies of product son. Okay, so write down in particulars, sale of product son. Sale of product son. What is the value? In value column you write down 30 lakhs. And in CGST, SGST column, why CGST, SGST column? Because it is intrastate. In CGST column you take 30 lakhs into 9%, because the rate of GST given is 18, means CGST 9, SGST 9. 2 lakh 70, 2 lakh 70, got it? Next. Intrastate supply of moon. So, sale of product moon under RCM. Write down in particulars, sale of product moon under RCM. In particulars column write down, sale of product moon. You want me to write? I can tell you can write na. How many times I only should do? You try, no. Only when you try you will know how to present in exam. Okay. So, first you have written sale of product sun. In particulars, you did the value, you have written the tax component. Next, sale of product moon under RCM hyphen treated as exempted for ITC purpose. Treated as exempted for ITC purpose. All these things you need to write in the particular column. Treated as exempted for ITC purpose. Value how much? 10 lakhs. Don't take any liability because it is payable by recipient under RCM. So, don't add it to your liability. Is it clear? You are supplier. Don't add it to liability. Just write that. Okay. And here it is given as 12%. Sorry. So, you change that 30 lakhs into 6% and 6% because clearly it is given as 12%. So, you go by 12%. Wherever the rate is not given, then we need to take 18%. That too for services only it is 18%. So here it will be 12% only. So 6%, 6%. So then it is not 2,70,000, it will be 1,80,000, 1,80,000, 1,80,000. CGST column 1,80,000, SGST column 1,80,000. For product sun. For product moon, no liability. Then next, export of sun. Next line in particulars, export of sun. Which option they are going, with payment or without payment? Without payment. Without payment. Hyphen treated as what? Taxable. Taxable for ITC purpose. Treated as taxable for ITC purpose. Value 5 lakhs. GST, no GST. Only 3 transactions. Now you total this. 1,80,000, 1,80,000, 0. Correct? 1,80,000, 1,80,000, 0. What is this? Gross GST payable. Gross GST payable under FCM. Gross GST payable under FCM. We finish the first statement now. Now, next statement. So, next second statement is computation of GST payable on inward supplies. GST payable on inward supplies under RCM. Computation of GST payable on inward supplies under RCM. Again same, particulars, only CGST, SGST, IGST, value not required. Value not required, just CGST, SGST, IGST. Now we will analyze the inward supplies. What is the inward supply that we have? First inward supply, legal services received. Okay. So whether it will come under RCM? Yes. Write down legal services. In particulars, write down legal services. And what should be taken as the liability? 2 lakhs into 18%. Why 2 lakhs into 18%? Rate is clearly given for services as 18%. And whether it is intrastate or interstate. So they have not given anything. So we can take, mostly legal services will be intrastate only, within the state only they will receive. So therefore we will take the assumption that it is intrastate. Okay. So 2 lakhs into 9% and 9%, CGST, SGST column. So how much? 18,000, 18,000, 18,000, 18,000. Next. We don't have anything else. Only one transaction is in RCM. So that over. Then next, we'll go to third statement. What is the third statement? Computation of ITC. Computation of ITC availed, comma, reversed and net eligible ITC. Net eligible ITC. So our friend is telling my cases are always in Supreme Court G. If that be the case, interstate only, because Supreme Court means you may take an advocate from other state also. So but usually we are taking assumption that it is intrastate, but in question it has to be given. But that question, what they did, they have done lot of mistakes in that answer. Okay. So I am just telling you what is the perfect way of arriving at the answer. They have not considered intrastate, interstate. Everything they did in one computation itself. See this. They have not considered intrastate, interstate, everything is one computation itself they completed, okay. But that is not acceptable. You should just present it properly, okay. Next. So in this computation of ITC availed, reverse and net eligible ITC, again same particulars, CGST, SGST, IGST. First, legal services. For legal services, we can take ITC na. Any blocked credits? No, legal service is not there in blocked credit. And is it used in the course or furtherance of business? Yes. Can we take ITC? Yes. But GST we paid under RCM, it's okay. Whatever GST we paid under RCM, we can take as ITC. So in the same month or next month, same month we can take ITC. Only thing, invoice should have been issued. If the supplier is unregistered, the recipient should give the invoice. That's what amendment today we have learnt, okay. Now, what is the CGST, SGST component? 18,000, 18,000, we can avail as ITC. Then common inputs. What is that common inputs? What's the value of common inputs pa? 20 lakhs. On that 12%, 25 lakhs. On that 25 lakhs, 12% means 6%, 6%. We will take it as intrastate. We will assume it as intrastate. So 25 lakhs into 6% is how much? 1 lakh, 1,50,000, 1,50,000 and 1,50,000. This is called as ITC availed. ITC availed. 1,68,000, 1,68,000 and 0 minus ITC reversed. What is the ITC reversed? How much is exempted turnover? Go to the first statement. Which transaction is exempted? Which transaction is exempted? Go to the first statement in your answer. Sale of moon is only exempted. How much is the turnover? 10 lakhs. What is the total turnover? 35 lakhs. 45 lakhs means 10 divided by 45 is what you need to reverse. Is it clear pa? Exempted turnover divided by total turnover. But listen, whether entire 1,68,000 we need to reverse, 1,50,000 only we need to reverse, 1,50,000 only we need to reverse, because that legal service is exclusively used for taxable. But in that attempt, CMA Institute made a mistake. They reversed on entire 1,68,000. Okay. And sir, what should we do if it is our exam? Don't worry, don't worry, because at that time and all, no one knows properly anything, and therefore it was like that. Suggested answers and all was not released, not made available public, etc. That was immediately before they converted to this MCQ. CMA Institute converted everything into MCQ, you know that? Objective exam. At that time, crazily people cleared. If they write now and all, gone, they will not qualify, okay. So at that time, amazing, they used to sit in the exam hall and send me message, sir, what is the answer for this, sir, like that. Really, bloody idiot, you are in the exam, no, you are sending me message. No sir, they are allowing mobile and all, because it was in a computer lab. Some engineering college, computer lab, they were allowed. They are sitting there and Telegram they are opening and they are taking photo and sending me. Sir, tell me the answers are like that. I told, and that idiot should have written answer and come back na. He is circulating that. Everyone. Okay. So Tharun sir said this is the answer, you answer like that. Many people cleared at that time, like discussion, group discussion only they cleared, okay. And now and all, it is, everything is made up public, and if there is error also, immediately lot of faculties are there in north also, south also, many people are there, they will reply immediately to CMA Institute, and thanks to social media, it is now working to a greater extent, things will fall in line, don't worry, okay. So now they will not make mistakes and all of this sort, but that old question, I am just answering as per the today's relevant provision, okay. So ITC reverse, what should be taken? 1,50,000 into what by what? 10 by 45. How much? 1,50,000 into 10 by 45. 33,333. Yes. So that much we need to reverse. Is it 10 by 45 correct only? Yes. 10 divided by 45. Say this. What they did is, total ITC on inward supply 25 lakhs into 12%, 3 lakhs, and that 3 lakhs into 10 by 45, 66,667. Okay. So this I have amended. Suggested answer is not there. Suggested answer is full. Full they have taken and then they have reversed. Next. So what will be your net eligible ITC? Net eligible ITC. Sir, total turnover is 35 lakhs. Sir. 45 only, no? 45 is correct only, pa. 30, 10, 5, 45. Correct only. Total, exempted to total. Exempted is 10, total is 45. How much? 667. 1,34,667, 0. Now last statement we need to do. What is that last statement? Computation of net GST payable. Computation of net GST payable. While doing the computation of net GST payable, first, what is the format? Simple. Gross GST. First we need to take gross GST. What is the gross GST? Gross GST 1 lakh 1,18,000. 1,80,000. 1,80,000, 0. This is your gross GST. Don't add RCM liability. First reduce ITC, then add RCM liability. But ITC balance is less than the gross liability na. What if the ITC is like 1,80,000? What if 1,80,000 is the ITC? Then can we reduce entire 1,80,000? Yes. But there is one rule. Rule 86B. What does that rule 86B says? If your taxable turnover in a month exceeds 50 lakhs, then you have to pay 1% of your liability through cash. Only 99% of the liability you can adjust from the credit ledger. But that is not applicable here. Why not applicable here? What is your taxable turnover? Only 35 lakhs. 45 lakhs minus 10, 35 lakhs. In that also export should not be taken in taxable turnover. Got it? So purely taxable turnover is only, what is your purely taxable turnover? See there, 30 lakhs, only 30 lakhs. It does not exceed 50 lakhs. Due to that reason, rule 86B will not be applicable. Anyhow, rule 86B not applicable here because we don't have that much of ITC, but I'm just telling you for application purpose, okay? Minus ITC utilized. What is that ITC utilized? 1,34,667. Now add back RCM liability. What is that RCM liability? Statement 2. Already we did 18,000, 18,000. This will be taken as the net GST payable. Net GST payable. So what is the net GST payable? 63,333 and 63,333 will be taken as the net GST payable. So you can check the answer here. So 63,333, 63,333, what is the net GST payable? 1,26,667. Sir, 666. Okay. Total. That 63,333 plus 63,333 total is 1,26,666. Same answer only we get. Only thing presentation you follow. Okay. For the presentation sake only I gave you. So this format you keep in mind. Whenever you get a question on computation of net GST payable, just apply this format, you will get the correct answer. Okay. Now we are moving on to question number 18. Sakshita Private Limited, a registered supplier, furnished the following details relating to supplies effected during December 2021. Sale price charged to customers within the state 10 lakhs, service charges levied in the invoices 11,000, packing, weightment, commission, prompt payment discount indicated in invoice 1% if payment made within 1 month. The tax rates are given here. Additional information, 60% of the customers did not make the payment within 1 month from the date of supply. Hence the supplier recovered the prompt payment discount offered to them. Determine the GST liability first. So this is a question related to valuation. So first see what is the sale price. How much is the sale price? 10 lakhs. That will be taken as the transaction value. Service charges levied in the invoices. Service charges means normal expenses. Who incurred? Supplier, and recovered from the recipient. So it is to be included in the value. But in the given price they have not given anything, means it is not excluded, not included. So we need to add. Then next, packing and forwarding expenses incidental to sale. It is expenditure to be included. In the given price not included. So we need to add. Weightment charges shown separately in invoices. These also all expenses. All these are before delivery only na. Packing, weightment, service charges, everything. So we need to add these three. Now, commission charged to buyers. So that is also to be included. So all these expenditure to be included. What about the prompt payment discount? Are we giving the discount or not giving the discount? Indicated in invoice 1% if payment made within 1 month. Means it's a post supply discount. But terms are agreed before at the time of supply? Yes. So 10 lakhs plus 11,000, 14,200, 7,800, 15,000. So total 10 lakh 48,000. But prompt payment discount is 1%. 1% into 10 lakhs. How much? 10,000. 10,000. What they are doing is that first they are giving the discount. Carefully listen. Carefully listen. 60% of the customers did not make the payment within 1 month. Hence the supplier recovered the prompt payment discount. Means what? First the discount is already given. And if you are not making payment on time, it is recovered. Means at the time of supply itself the discount is given na. Even though it appears to be post supply discount, but in this case they have already given the discount, means it's a pre-supply discount allowed as deduction. So therefore minus 10,000, minus 10,000. So therefore the value of taxable supply will be 10,38,000. On the 10,38,000, it is clearly given that it is what? Intrastate, interstate, intrastate, within state. Therefore CGST is 6%, SGST is 6%. Is it clear? Now simple question. Only twist is what you know, that usually we think it as post supply discount, but it is a discount given at the time of supply itself. Now what is the treatment of the discount recovered? The discount recovered, what is the treatment? That will be included in the value whenever it is recovered. Means for that, what is the document that is given by supplier to recipient? Debit note. Is it clear? So see the note. Prompt payment discount is deductible because it is not the time of supply. It is immaterial that 60% of the customer did not make the payment within the eligible period of 1 month. When the supplier issues debit note and recovers the same from buyer, the same will be taxable then. Whenever it is recovered, at the time supplier has to give a debit note and they need to pay GST on that. Is it clear? That line we have to write in exam. Got it? Next. Question number 19. PQR Company Limited, a registered supplier of Bengaluru, Karnataka, is a manufacturer of goods. The company provides the following information pertaining to GST paid on input services. So all these are inward supplies on which GST paid. Now all the above input supplies except 3 has been used in manufacture of taxable goods. Compute the amount of net input tax credit available. So we need to compute the ITC. If it is a blocked credit, we cannot take ITC. Otherwise, we can take ITC. Okay. So look into the first one. Life insurance premium paid by the company on the life of factory employees as per the policy of the company. Do we have any blocked credit for insurance? Yes. So please open your book. You can see the blocked credits point. CMA final exam blocked credits are very, very important because quite a long time, almost every attempt they have tested on blocked credits, input tax credit. You cannot imagine your question paper without input tax credit. That too in input tax credit, blocked credits will definitely be tested. So you can see here insurance, page number 161 you take. Page number 161. See there, 1, 2, 3, fourth point, food and beverages, outdoor catering, beauty treatment including cosmetic, plastic and hair transplantation, life insurance and health insurance is blocked credit. However, we have 3 exceptions. What are the 3 exceptions? Exception number 1, if it is provided by employer to employee under a statutory obligation, then ITC is available. Now, in this question, is it under the statutory obligation or as per the policy of the company? Policy of the company, not statutory obligation. So therefore, that exception will not come. Second exception, if inward supply, outward supply in the same category, are they in the business of insurance? No, they are in the business of manufacture. If they are in the business of insurance, their inward supply also insurance, outward supply also insurance, they can take ITC. Third exception, inward supply is part or component of the composite or mixed outward supply, that is also not applicable here. So first of all, they are not providing any insurance services, they are only receiving the insurance services. So it's a blocked credit. ITC available or ITC not available? ITC not available. Then second one, raw material purchased for which invoice is missing but delivery challan is available. No, they cannot take ITC. One of the condition for availment of ITC is that the person availing ITC should be in possession of tax paid document. If the invoice is missing, they cannot take ITC on that. Okay. So whatever explanations I am giving, that 1 or 2 lines you need to write. Okay. Next, raw material purchased which are used for 0 rated outward supply. Can they take ITC? Yes. Just now in the previous question I told you, when our outward supply is 0 rated, we can definitely take ITC on our inward supply. So ITC is available. Works contract service used for repair of factory building which is debited in the P&L. Generally construction expenditure is block credit, but we have an exception. What is that? If it is charged to P&L, we can take ITC. Company purchased the capital goods for rupees 4 lakh and claimed depreciation of 44,800 on full amount of 4,48,000. So can they take ITC? No. Why? Because they computed depreciation on the tax component. That's why ITC not available. In the month of September 2020, PQR Company Limited avail input tax credit of 2,40,000 on purchase of raw material which was directly sent to the job workers premises under a challan of 25/9/2020. The said raw material has not been received back from the job worker up to 30/4/2021. Now listen, if the goods sent on job work is not received within 1 year, that is the processed goods are not received within 1 year, then it is deemed as supply on the day it is sent to the job work. What is the date on which it is sent to job work? 25/9/2020. As on 34, whether 1 year expired or not expired? Not expired, September, September. You know na, January, February, March and all. September to April, how 1 year will get over? September to September only will get over 1 year, correct? So we are still in April only, okay? So it is not more than 1 year. So whether we need to treat as supply and pay any GST? No. So there is no treatment for this, just ignore it, okay? So what is the ITC? 50,000 plus 30,000. So total 80,000. Hence ITC reversal not required for the last line. Why? Because it is received back within 1 year. Correct? Understood this one? Any doubt in this? Doubt, Amma? 1 year. Goods sent on job work should be received back within 1 year. And it can be extended for a further period of 1 year. For capital goods, it will be 3 years and it can be extended for a further period of 2 years. Okay. Then look into this question number 20. Arise India Private Limited, a company engaged in manufacture of various goods, has its corporate office at Mumbai and manufacturing units in Pune and Chennai and service center in Kolkata and Bengaluru. So they have business in 4 states: Pune, Maharashtra, Chennai, Tamil Nadu, Kolkata, West Bengal, and Bengaluru, Karnataka. And where are their head office located? Corporate office is in Mumbai, Maharashtra. Okay. Now, the corporate office registered as input service distributor. All the units and centers of Arise India Private Limited are operational in the current year. The corporate office intends to distribute the ITC for the month of October. The following details are available for such distribution. So, this is a question related to input service distributor. Okay. Now, remember, when the head office is in the same state and the branch also in the same state, CGST credit distributed as CGST, SGST as SGST, IGST as IGST. But for the branches in the other state, so all credits will be distributed as IGST only. Okay. So now, when you prepare the table in the answer, what you need to do? Where is the head office located? Mumbai. And one branch is in Pune. Both Pune and Mumbai is in the same state. Sir, how do we know that in exam? We may not know Mumbai and Pune in the same state or not. So they will give in the question itself like this. So the manufacturing units Pune and Chennai and service center Kolkata and Bengaluru registered in Maharashtra, Tamil Nadu, West Bengal, like that they will give. Mostly they will give, don't worry. Okay. But in case, this is little bit general knowledge you should be having. Okay. Now, in the same state, what we need to do? So like this, you need to prepare a template. First, Pune unit. For Pune unit, it will be 3 columns: CGST, SGST, IGST. But all other units, you don't have to make 3 columns, only 1 column. What is that? IGST. So what is the next unit? Pune unit, particulars, Pune unit, Chennai unit. Chennai unit is fully IGST. Next unit, Kolkata, that is also IGST. Bengaluru, that is also IGST. Okay. Next, what is the first one? Unit or center, Pune. For Pune, they gave turnover for the quarter ending September. Sir, on what basis we need to distribute the ITC? Either previous year turnover or the previous quarter turnover. Right now, it is for which month? October month. October month, they can take either previous financial year or the last quarter. What is the last quarter ending? September. So they are distributing based on quarter data. Anything can be taken. So Pune 20 lakhs, Chennai 30, Kolkata 10, Bengaluru 40 lakhs. And eligible ITC on input service attributable to a specific unit or center for the month of October. The specific ITC means what? That particular division related ITC should be distributed to that division only. When it is common ITC only, it should be distributed to all the divisions based on turnover ratio. So for Pune, what is this specific credit? CGST 30, SGST 30, IGST 30. Please update that. So specific ITC for Pune 30,000, 30,000 and 3 lakhs. Correct? It's clearly given by the question itself. Next, Chennai, what is the specific ITC for Chennai? 24,000, 6,000, 6,000. Should we separately distribute? No. Group everything as IGST and give. 24 plus 6 plus 6, how much? 36,000 for Chennai. So entire 36,000 is given for Chennai. For Kolkata and that is Kolkata and Bengaluru, we don't have any specific ITC. Got it? Then next, below that table, input services used by all units and centers, means it is common. Eligible ITC, ineligible ITC, they have given. Should we distribute both or only eligible ITC we need to distribute? See, head office will distribute the entire credit to branch office. Then the branch office will decide what is eligible, what is ineligible. Is it clear or not? For head office, whatever they get, they have to give. Eligible, not eligible, blocked credit, not a blocked credit, they will not check. Fully they will distribute. Is it clear? Their job is distribution job. So whatever they get, they need to distribute. So both eligible and ineligible, both will be distributed. Is it clear? So do the total. What is the total of this eligible and ineligible? 1,20,000 plus 40, 1,60,000, 1,60,000 and 2,40,000 plus 80, that is 3,20,000. So the entire credit will be distributed. Is it clear? But to Pune unit, it will be distributed as CGST, SGST, IGST. But all other units, it will be distributed as IGST. Correct? Now, first you take CGST credit. How much is the CGST credit to be distributed? 1,60,000. In that 1,60,000, what is the Pune unit ratio? 20 divided by total. What is total? 20 plus 30, 50 plus 10 plus 40, 100. So 20 by 100 or 2 by 10. So 1,60,000. See this. Common services, 1,60,000 into 2 by 10. Okay. SGST how much? 1,60,000 into 2 by 10. IGST how much? 3 lakh. 1,60,000 only na pa. 1,60,000, 3 lakh 20. So 3,20,000 into 2 by 10. You understood or not? Hey, this is just like your overheads pa. Costing overheads distribution is there na. Like that it is. So if you are not understanding this, it's too much. So your calculator will do the job. You don't have to do anything. Okay. So 1,60,000 into 2 by 10, 1,60,000 into 2 by 10, how much? 32,000, 3,20,000 into 2 by 10, 64,000. Now you don't do separately like this. Take everything together. Do the total of this. What is the total of this? 1,60,000, how much? 3,20,000. 3,20,000 plus 3,20,000, 6,40,000. 6,40,000 into, for Chennai what is the ratio? 3 by 10. So 6,40,000 into 3 by 10. Okay. Then how much? 1,92,000. Then again 6,40,000 into, for Kolkata what is the turnover? 10 lakhs. Therefore 1 by 10. 64,000. Then last 6,40,000 into Bengaluru, what is the turnover? 4 by 10, that will be 2,56,000. That's it. Easy. Next, inputs used by Pune unit and Kolkata center. What we should do? Inputs used by Pune unit and Kolkata center. What we need to do? Distribute between Pune and Kolkata based on the ratio of Pune and Kolkata. Absolutely wrong answer. It is not input distributor or capital good distributor. What is the name? Input service distributor. So inputs and all cannot be distributed. Is it clear? Inputs cannot be distributed. What is the name of this person? Input service distributor. So inputs cannot be distributed, capital goods cannot be distributed. Only input service related credit only can be distributed. Be careful, okay. Next, input services used by Chennai unit and Bengaluru center. Then, now you are correct. Distributed to Chennai and Bengaluru. Do the total. What is the total? 70,000. And what is the ratio? For Chennai and Bengaluru, 3:4. Correct? 7. So 3/7, 4/7. So say this. Services to Chennai and Bengaluru. So for Pune there is nothing. For Chennai, 70,000 into 3/7, that is 30,000. And for Bengaluru it is 70,000 into 4/7, that is 40,000. Only those two turnover ratio we should take, that is 30 lakhs and 40 lakhs. So 3:4, that is 3/7, 4/7. Now if you do the total, you will get the answer. That is the answer for this question, okay. Pray God that you should get this question and all, this type of question. There is nothing, only little bit trap and all is there, but otherwise you can do. But it will eat your time. Lot of computations is involved, so it will eat your time, but otherwise you will get the correct answer for sure. Finished? So the answer will be like this, but I have just given it in one column, but you need to separate it like CGST, SGST and IGST. Next, look into question number 21. On 25th August, Messrs. Agarwal and Agarwal, a registered supplier of taxable goods located in Bengaluru, Karnataka, purchased one machine for 12,39,000 including IGST from one supplier of Maharashtra who issued the invoice on the same date. Agarwal and Agarwal put the machinery to use on the same day and avail ITC for the eligible amount. But this statement is actually irrelevant. Whenever they use, they can take ITC in the same month. I mean, not necessary that they have to take ITC only in the month in which they are put to use. That is only for income tax depreciation. Depreciation you will compute based on put to use, but for availment of ITC and all, put to use is relevant. You purchase the asset, you are not using also, you can take ITC, okay. Then, so therefore they have taken the ITC, and Agarwal and Agarwal use the machine in the process of manufacture of taxable goods. However, Agarwal and Agarwal sold this machine to Suresh Kumar of Andhra Pradesh on 20th August of next year. What is the date on which it is purchased? 25th August. And when are they selling? 20th August next year. How many quarters they have used? 4 or 5? August. August means July, August, September, 1 quarter. Then October, November, December. Next year, Jan, Feb, March, April, May, June, July, August, September. 5 quarters. You understood? Sir, how sir? 1 year only na sir? You see it like quarter, calendar quarter. Calendar quarter. That too quarter or part thereof. First August comes in, quarter ending September. Then October, November, December. Next year, Jan, Feb, March, April, May, June. Then again few days in the next quarter, July, August we are using. So 5 quarters, okay. For 5 quarters we need to reduce. Which computation? Today only we discussed 18 subsection 6. What we need to do? ITC availed minus 5%. For how many quarters? 5 quarters. What is the ITC availed? What is the ITC availed? 12,39,000 into 18/118. Why 18/118? Because this 12,39,000 is including IGST. So 12,39,000 into 18/118, how much? 1,89,000 minus 5% into 5 quarters, that is 25% you reduce. 1,89,000 minus 25%, how much? 1,41,750, or GST on sale value. What is the price at which they are selling to Mr. Suresh Kumar of Andhra Pradesh? 7,50,000. 7,50,000 into 18%, how much? 1,35,000. Whichever is higher, 1,41,750 750. So they have to pay GST of 1,41,750. Can this 1,41,750 be availed as ITC by the recipient? Yes. Whatever GST paid by supplier, the recipient can take ITC. Okay. Then next one. Question number 22. Quanto Enterprises is not required to register under CGST Act. So they are not required to register. However, it applied for voluntary registration on 17 September. Registration certificate has been granted to the firm on 25th September. So means from when they are required to pay GST? 25th September. Now the CGST and SGST liability for the month of September is 24,000 each. Now whenever you are getting registered voluntarily, whatever is the closing stock before the date of registration certificate, on that GST paid can be availed as ITC. What is the closing stock? Inputs as such held in stock, inputs in the form of WIP held in stock, inputs in the form of FG held in stock. Again I am repeating, in this question, what is the date on which they are getting registered? 25th of September. As on 24th September, they will have closing stock. That closing stock only they will use for making sale from 25th September. Means logically on that closing stock, whatever GST paid, they would not have taken ITC. Why they would not have taken ITC? Because at the time they are unregistered. Now only they are getting registered. So they can take ITC. On what? Inputs as such held in stock. As on 24th September, whatever inputs is there, on that GST paid can be taken. Then inputs in WIP. We should see WIP in stock. In the WIP there will be inputs content on that whatever GST paid. Now we need to see finished goods in stock. In that finished goods, what is purchased? Inputs. On that input GST paid can be taken as ITC. Is it clear? But very important condition is that all these inputs should have been purchased within 1 year prior to the closing stock date. Means 24th September, within 1 year only these inputs should be purchased. If these inputs is purchased beyond 1 year, means old stock and all, they are not giving the credit benefit. Is it clear? Are you getting this? Now interpret the closing stock details. Quanto Enterprises provide the following information regarding capital goods and inputs held in stock as on 24th September. Now you understood the relevance of 24th September. Before the date they got the registration certificate. Now inputs procured on 2nd September lying in stock. Is it within 1 year prior? Yes. And inputs as such held in stock. Can we take ITC? Yes. So this 4,500 we can take ITC. Inputs received on 21st July contained in semi-finished goods held in stock. Is it within 1 year? Yes. So this also we can take as ITC. Value of inputs contained in finished goods held in stock 2 lakhs. Such inputs were procured on 19th September last year. Invoice for the goods was also same date. Can we take ITC? No, because it is beyond 1 year. 24th September, what is within 1 year? Within 1 year is 24th September of previous year only, correct? 19th September of previous year is beyond 1 year. You got it? So that's why we cannot take ITC on that. Next. Inputs valued at 50,000 procured on 13th September lying in stock. Can we take ITC? Yes. Same month. Same month, not previous year, same month. Okay. The previous one only 19th September last year. Capital goods procured on 12th September, same year. Can we take ITC? Same month? No, because we can take ITC only on 3 PA. What are those 3? Inputs as such held in stock, inputs in the form of WIP held in stock, inputs in the form of finished goods held in stock. Only 3. Got it? Capital goods and all they cannot take. So you are required to compute the net GST payable from electronic cash ledger by Quanto Enterprises. Tell me how much is their liability? CGST 24,000, SGST 24,000. Correct? Now how much is the credit they have? IGST 9,000, CGST 4,500 and 7,500. How much? 12,000. So see this. First they have IGST 9,000. That 9,000 can be utilized for payment of CGST, SGST, any manner, any proportion. So full 9,000 is used for CGST. then 12,000, 12,000 CGST credit, SGST credit is adjusted. So the net GST payable will be 3,000 and 12,000. You know now manner of utilization of credit. First, which credit you need to exhaust? IGST credit. IGST credit should be fully exhausted. That too, first you need to use it for payment of IGST. Thereafter, between CGST, SGST in any manner, any proportion, then only we need to touch CGST credit and SGST credit. Accordingly, we will utilize. So therefore, the net GST payable will be 3,000 and 12,000. Got it? So this is related to this question. Nothing, this much only. Capital goods and all we cannot take as credit. Okay, only inputs held in stock, inputs semi-finished goods, and this 9,000. Okay, look into question number 23. Hema Pesticides Private Limited, registered person under GST law, furnishes the following data for the GST paid by them in the month of February. So these also related to that input tax credit. You are required to determine the quantum of input tax credit available to the above registered supplier for the given month. GST on machinery purchased and used in the factory premises. So machinery is not there in the block credit, and moreover it is used in the course or furtherance of business. So definitely we can take ITC with respect to this. GST on machinery purchased and sent directly to job worker working for the company. Can we still take ITC? Yes, because we have one concept of deemed delivery. Whenever the goods are delivered to a third person on behalf of the registered person, the date on which the third person has received, it is deemed that the recipient, the registered person has received, and they can take ITC. So even though the goods are directly sent to job worker, even then the date on which job worker is received is deemed that the registered person has received, and they can take ITC on this, no issue. Then next one, GST on car purchased used mostly for business purpose, 25% usage estimated for personal use. First of all, car is a blocked credit because it is a motor vehicle, capacity does not exceed 13 and it is not coming under the exceptions. Is it used for further supply? No. Is it in the business of transportation of passengers? No. Imparting driving skills? No. So due to that reason ITC is not available. Then GST on raw material purchased, goods are received in lots or installments and 25% of the material were received in February. Can we take ITC? Right now we are in February month. So February only 25% is received. So we have one provision which says that when goods are received in lots or installments, we can take ITC only on receipt of last lot or installment. So therefore we cannot take ITC on this now. We can take ITC only on receipt of last lot or installment. In the earlier month, GST has been paid on another lot for which 90% delivery has been completed. Then in the current month, balance material were received. GST paid in the earlier month was 1,60,000. Can we take ITC now? Yes, because we would not have taken ITC in the earlier month because earlier month only 90% is received. This month only fully received. So we can take ITC in this month. Then GST on health insurance premium paid for employees working in the factory, providing this is optional, and the company has taken this measure to improve relation with laborers, not because of statutory obligation. So can they take ITC? No. What if the health insurance is taken under a statutory obligation? Then ITC is available. So what is the total? Do the calculation. 92,000 plus 42,000 plus 1,60,000. How much? So that will be taken as the total ITC. Is it clear? Next. Look into question number 24. Messrs XYZ, a registered supplier, supplies the following goods and services for construction of building and complexes. Excavators for required period at per hour rate, manpower for operation of excavators at per day rate, soil testing and seismic evaluation at per sample rate. The excavators are invariably hired out along with operators. Similarly, operators are supplied only when excavator is hired out, means it is naturally bundled. If I am giving excavator, I am supplying operator. If I am giving operator, means I am giving the excavator, means it is naturally bundled. That is the meaning of this. Okay. Now, Messrs XYZ receives the following services: maintenance services for excavators, health insurance for operators of excavators, scientific and technical consultancy for soil testing. For the given month, the receipts of XYZ are as follows. Higher charges for excavators, service charges for manpower for operation of excavators. These two are naturally bundled, correct? And both are taxable. See here, hiring of excavator 12%, manpower is 18%. Both are taxable, naturally bundled in the ordinary course of business. What is the principal supply? Hiring of excavators. If the excavator is not given, this will not come. So therefore, this 18,20,000 will be taxable at what rate? Principal supply rate, that will be 12%. So 18,20,000 into 12%. Do the calculation. 18,20,000 into 12%. 2,63,400. Correct? How much? 2,18,400. Then next one. Next you see service charges for soil testing and seismic evaluation. This is an independent transaction. So it will be taxable at the separate rate. Soil testing and seismic evaluation 18%. So do the calculation. 2,50,000 into 18%. How much? 45,000. So what is the total? 2,63,400. That is their gross liability. Then next one. The GST paid during the said month on the services received by measures XYZ is as follows. Maintenance of excavators 1 lakh. Can they take ITC on this maintenance? Yes. So there is no blocked credit and it is in the course or furtherance of business. So they can take ITC on this. Health insurance. Health insurance is block credit. Just now we discussed. It is block credit, ITC not available. Scientific and technical consultancy for soil testing and seismic evaluation, ITC available. So 1 lakh plus 1 lakh, 2 lakhs is eligible for ITC. So therefore the balance will be 63,400. Got it? So simple question only. Only thing, ITC is connected with composite supply, mixed supply. Okay. And this is also one question. I think somewhere in RTP or some past exam this question is there. Okay. This question is from CMA source only. Then next, question number 25. Suraj Limited, a manufacturing concern in Rajasthan having aggregate turnover of 100 lakhs in financial year 1920 has opted for composition scheme, furnishes you with the following information for financial year 2021. It requires you to determine its composition tax liability and total tax liability. So they have opted for composition scheme. A person who is opting for composition scheme and they are manufacturer or trader. What is it they are? Manufacturer. What is the rate applicable to manufacturer if they are under composition scheme? 1% of total turnover, not taxable turnover, that is for trader. For a trader it is 1% for tax, 1% on taxable turnover, but for a manufacturer it will be 1% on total turnover. Suppose if it is supply of food service provider, then it will be 5% on total turnover. Here manufacturer means 1% on total turnover. That 1% also how they need to pay? 0.5% CGST and 0.5% SGST. Now, what if they have some inward supplies under RCM? On that they need to pay the regular rate. Even though they are under composition scheme, on inward supplies under RCM they need to pay the regular rate of GST. Got it? So see there. First, intrastate supply of goods X chargeable at 5%. Yes, take this. Intrastate supply of goods which are chargeable to nil rate. Take this. Intrastate supply of goods Y. Take this. Intrastate supply of services chargeable with 5%. Take this. On this entire amount, the GST will be payable at 0.5%. Sir, what about interest on fixed deposits? Should not be taken. Should not be taken. Interest on loans, advances, fixed deposits should not be taken into computation for a person opting for composition scheme, both for deciding the eligibility to opt for composition scheme as well as for computation of GST under composition scheme. So accordingly, this 8 lakhs we should not take. Then what about inward supply under RCM? I told you regular rate. For these inward supplies under RCM, we need to take the regular rate of 5%. So do the computation. You do this 30 lakhs plus 18 lakhs plus 30 lakhs plus 6 lakhs. How much total? 84 lakhs on that 84 lakhs into 1%. What is 84 lakhs into 1%? 84,000. And on inward supply under RCM, what is inward supply under RCM? 5 lakhs into 5%, that is 25,000. Got it? So total liability will be 84 and 25,000, 1 lakh 9,000. In the same question, they have given one more line. What will be your answer if that person is a trader? What is your answer? How it will differ? If that person is a trader, we need to pay GST under composition scheme only on taxable turnover. So what is a taxable turnover? 30 lakhs, 30 lakhs and 6 lakhs. Is it clear? Because this 18 lakhs is nil rate, that is exempted turnover. So we need to take only 30 plus 30 plus 6, that is 66 lakhs. 66 lakhs into 1% is how much? 66,000. On inward supply under RCM, the regular rate, that is 25,000. So total 91,000 will be taken as liability. Is it clear? This is a question related to computation of GST under composition scheme. Now see the another question. This is related to eligibility to opt for composition scheme. When a person can opt for composition scheme, there are two composition scheme na, 10.1 and 10.2a. 10.1 composition scheme when applicable, if their aggregate turnover during the previous year does not exceed 1.5 crores, current year they can opt for composition scheme. And for 8 states, it will be 75 lakhs. What are those 8 states? MMTN, SAM, MMTN, Manipur, Mizoram, Tripura, Nagaland, U for Uttarakhand, S for Sikkim, A for Arunachal Pradesh and M for Meghalaya. The limit will be 75 lakhs. Got it? There is another composition scheme called as 10.2a. So when 10.2a composition scheme is applicable, if their aggregate turnover during the previous year does not exceed 50 lakhs, then they can opt for composition scheme during the current year. Got it? Now this question is based on that. Again, this is also CMA past exam question only. In this mighty 50, approximately some 20 to 25 questions are based on your CMA past exam, because those are the questions which can be asked. Not necessary they will repeat, but in those lines they will be. But what I have observed is that there are a number of repeated questions. Yes, which is rarely that will happen in tax exam. Usually costing, financial management, SCM, SFM, SPM, BV, CFR and all, repeated questions will come. But usually DTI, IDT and all, repeated questions rarely will come. But it's good thing that in your exam, CMA final exam, when I am analyzing the past exam question papers, lot of repeated questions are there. I mean, model same, numbers will change. Literally same model, no change in that. Numbers alone will change. So therefore, my suggestion to you is that depend on your past exam questions. Okay, all subjects. That is one other secret, another hack in CMA final exam. Past exam questions. The more and more you solve the past exam questions, the high chances that it will be coming, not necessarily same, but same model will come. Okay, half of the people are surviving only on suggested answers and go for exam, intermediate level and all. Okay, so really they don't know anything. CMA intermediate students and all, they don't know anything. They buy this scanner, Suchita Prakashan scanner, like that one book is there. They will buy that. All past exam question they will sit and by heart, and they go for exam and vomit there, and they will clear. Understood? So that is another hack. Then coming back to this, say this, nothing wrong, at least that art is required now. That art at least required, so they are also preparing. Next, see this, examine whether the suppliers are eligible for composition levy under section 10 in the following independent cases in the beginning of the financial year 22-23. Technology enterprises registered in Jalandhar, Punjab is engaged in manufacturing and supplying computer systems. Its aggregate turnover in the financial year 21-22 is 125 lakhs. For Punjab, what is the applicable limit? 1.5 crores. So whether it exceeds or it does not exceed, it does not exceed. Technology enterprise supplies computer systems manufactured by it within the state of Punjab only. So no problem. if they make interstate supplies, they are disqualified from composition scheme. So there are some disqualifications from composition scheme which you should be knowing. So remember that with a mnemonic S9 RCM, you can see here who cannot opt for composition scheme. Page number 184. Page number 184. Who cannot opt for composition scheme. In that, remember this mnemonic S9 RCM. Section 9 is RCM. Okay, wow. Section 9 is RCM. Yes, 9 RCM. Yes for service provider other than supply of food or beyond 10% limit, they cannot opt for composition scheme. N, non-resident taxable person. I, interstate supplier of goods or services. Then N, non-taxable supplies, a person who is making non-taxable supplies, that is alcoholic liquor for human consumption and petroleum products. Then E, supplier of services through e-commerce operator, but supplier of goods through e-commerce operator can opt for composition scheme. Or purchases from unregistered person, RCM 9 subsection 4. So 9 subsection 4 will come into picture whenever a registered person is making purchases from unregistered person. So then also if they have not paid GST, they cannot go for composition scheme. Then C for casual taxable person. M for manufacturer of certain notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. These are the list of goods. If they are manufacturing, they cannot opt. That's the reason why they gave this line that they are making sale only in Punjab. Because if they make interstate supplies, they are disqualified. Then with a view to expand its business systems, it will also start providing repair services of computer systems in Punjab. Can they provide any other services? Under 10-1 composition scheme, 10-1 composition scheme, they can provide only 3. What are the 3 things that they can provide under 10-1? See page number 180. So a person who is under composition scheme 10-1 can be engaged only in manufacture or supply of goods or supply of food services. Basically, what is their business? Their business is manufacture. So they can go for composition scheme, but they can provide any other services. Yes. To what extent they can provide the services? Respond pa. Up to what extent they can provide the services? See next page, page 181. Up to 10% of turnover during previous year or 5 lakhs, whichever is higher. They can provide service, but what limit? Up to 10% of turnover during previous year or 5 lakhs, whichever is higher. That is the answer you need to write in this case. So can they opt for composition scheme? Yes. Provided they are providing services only up to 12.5 lakhs during the current year. Understood pa? That is what we need to write as the answer for this. Okay. Next, B part. Any doubt in the A part? Clear? B part. Messrs. Siddharth and Sons, registered in Delhi, owns a restaurant Tasty Foods with a turnover of 112 lakhs in the financial year 21-22. In view of growing customer demand, it will also start intrastate trading of juices in Delhi from financial year 22-23. So they are restaurant where in Delhi. They want to supply goods also. Can they do? Yes. There is no restriction. Restaurant and goods they can do. And what is the turnover? 112 lakhs. It does not exceed 150 lakhs. Yes, definitely they can opt for composition scheme. There is no restriction. They can opt for composition scheme. Look into C part. Sitaram Associates, registered in Sikkim, is engaged in running a restaurant chain, Veg Kitchen, in the state. It has a turnover of 73 lakhs in the financial year 21-22. In the financial year 22-23, it decides to shut down the food chain owing to huge losses being incurred in the said business. Instead, it will start providing intrastate architect services from financial year 22-23. Services other than supply of food means which composition scheme? 10-2A composition scheme. So 10-2A composition scheme is applicable to whom? Manufacturer, supply of goods, trader, and supply of any other service. So they can opt for composition scheme. But for 10-2A, what is the limit during the previous year? It should not exceed 50 lakhs. But listen, What is that person's turnover during previous year? 73 lakhs. But not this business. It's okay. Some other business also. But the turnover of that person, not that business, turnover of that person exceeds 50 lakhs. So current year they cannot opt for composition scheme. Is it clear, pa? But sir, they are not doing architect business, sir. Last year some other business. Let it be. But we need to see the turnover for the person. That person's aggregate turnover is what? 73 lakhs. It exceeds 50 lakhs. So current year they cannot opt for composition scheme. Understood? Next, pa. D. Deepti Services Limited, registered in Uttarakhand. Uttarakhand, what is the limit? 10-1, 75 lakhs. Is exclusively providing intrastate hairstyling services. Hairstyling services. Services means definitely 50 lakhs. If their business itself is only services, 10 to a composition scheme. For 10 to a composition scheme, what is the limit? 50 lakhs. It has a turnover of 34 lakhs in the financial year 21-22. So can they opt for composition scheme? Yes. Will your answer be different if Deepti Services also start intrastate supply of beauty products along with hairstyling service? No. The answer will remain the same. They can do trading, they can do service also, but their turnover during the previous year should not exceed 50 lakhs. Is it clear? Then look into question number 27. See, I gave very big detailed answers and all, but in exam you don't have to write that much. You write half of that, that is sufficient. Why I gave that much, sir? Had I given half, you would have written half of that. Okay, that's why I gave little detail. At least when you read it, na. So don't just stop with this. Like today we discussed mighty 50 means okay, happy, jolly, over. No, you have to read once. Read the answers once at your end. So you will know how to present it in the exam, what and all information to be written. Okay. So don't just stop with this discussion. So when you do revision, so at least some 3 hours you sit and you go through the answers. You know the answer, but you go through the answer. Then only you will learn how to present it in exam. Got it? Then, so first learning, you are learning the application, concept, provision, application. Second reading when you are doing, you will refine that, plus you will also learn the presentation. Okay. Agni Limited filed GST return under section 39 for the month of January 2021 on 11th April 2021. Original due date of the said return was 20th February. Details of tax assessed as payable for the said month are given below. Output tax payable 1,80,000, 1,80,000. Tax payable under reverse charge 40,000, 40,000. Input tax credit available for utilization 70,000, 70,000. You tell me how to compute the net GST payable. I already told you. First you need to take gross liability minus ITC. Then we need to add RCM liability. What is the ITC? 70,000. 1,80,000 minus 70,000. Sir, I have one doubt, sir. This 40,000 can be taken as ITC. You said GST paid under RCM can be taken as ITC. Why are we not adding 40 to 70,000? Because in the 70 itself 40 is there. In that 70 itself 40 is there. How, sir? Read what is 70. Read what is 70. Input tax credit available for utilization. Means already they would have considered this 40,000 into that 70,000. Is it clear or not? So 1,80,000 minus 70. How much? 1,10,000 plus RCM liability you add. What is that RCM liability? 40,000. So you will get the net liability. Why should we do net liability? This is a question related to delay in filing 3B. Whenever there is a delay in filing 3B, we need to compute interest on net liability. What if in this question they have given that there is sufficient balance in the cash ledger? This 1,50,000 is there in cash ledger as on the due date, then interest is not payable. That is the latest amendment. Okay. But here they have not given, means we need to compute interest. Which month liability we are talking about? Which month liability? January liability. January liability, what is the due date? 20th of February. But when they are filing GSTR 3B, 11th of April, how many days delay? Count. February how many days? 8 days. Correct? 8 days. February. March 31 days. April 11 days. So total 50 days. For that 50 days, we need to compute interest. How much is the net liability you said? 1,50,000 into 18% into 50 divided by 365. Because February month you considered 8 days only na. So denominator it will be 365. So that is the interest payable. Is it clear pa? So check the answer. First 1,80,000 minus 70 plus 40, 1,50,000. On that we need to compute the interest. Understood? Now see the second part of this question. Assuming the company has an ITC balance of 2,50,000 each under CGST, SGST for the said month. How much ITC they have pa? 2,50,000 means using 2,50,000 we can pay 1,80,000, correct? Yes sir, no? Yes. Sir, even RCM 40 also we can pay using 2,50,000. No. Remember always that input tax credit cannot be used for payment of RCM liability. RCM liability should always be paid through cash ledger. That's why I told you this format. First gross GST under FCM minus ITC. Then only you need to add RCM liability. What is the gross GST under FCM? 1,80,000 minus ITC. Fully 2,50,000 can be utilized. Is it clear? So 1,80,000, 1,80,000. Now gross liability under FCM will become 0. Add RCM liability. What is RCM liability? 40,000. That anyhow you have to pay through cash ledger. So interest will be computed on that 40,000. Is it clear? So the next part is 1,80,000 fully you have utilized. So 40,000 is only payable. And this is the excess ITC that is carried forward, 70,000. So interest will be payable only on 40,000. Understood this question pa? Now this question they may modify to include. So what will be your answer if there is sufficient balance in the cash ledger as on the due date of 3B? Then no interest payable. Or they will tell on this date this much balance is there. Thereafter this much they have deposited, like that. Accordingly you need to compute the interest. Is it clear? Then and I gave some questions on amendments. Okay. So in my website itself you can see some additional questions on amendments. It's not. Here you can see questions based on amendments. I have given some questions. Okay. All these questions are based on the amendments which we have discussed from yesterday and today and all. So these questions also you please go through. Some 26 questions are there. Okay. So these are on amendments so that you know like this type of questions also could be asked. Okay. So mighty 50 you need to do. Thereafter this questions on amendments. Then you ask me some important theory concepts na. So these are some important theory concepts. So these are some important theory questions, okay, which I have listed out, like cases involving cancellation of registration. What is the meaning of contravention of provisions relating to cancellation of registration? What are those contraventions? Like this, these questions could be asked. Okay. So this also I have listed. Go through this. Okay. And apart from this, I will analyze. If there is any extra questions also, I will update in this list. I will update in this list, but it will be available here. You can check that. Okay. Then coming back to this question number 28. Ragini Traders, a registered supplier of Jaipur, is engaged in supply of various goods and services exclusively to government departments, agencies, local authority and persons notified under section 51 of CGST Act. You are required to briefly explain the provisions relating to tax deduction at source under section 51 and also determine the amount of tax, if any, to be deducted from each of the receivables given below, assuming that the payments as per the contract values are made on 31st October. The rates of CGST, SGST and IGST may be assumed to be 6% and 6%, 12% respectively. supply of computer stationery to PSU located and registered in Mumbai, total contract value 2,72,000. While explaining, I told you TDS is applicable only if the value of supply under the contract exceeds 2,50,000. While doing the value of supply under the contract, take out GST. Always while doing value, you need to exclude GST. Only in one place, value includes GST, that is e-way bill. In e-way bill, we do 50,000 computation. There alone, value includes GST. In all other places, when we refer to value, that value excludes GST. Now, how much is the value given here? 2,72,000, including GST, excluding GST? Including GST. Take out the GST. How to take out the GST? What is the GST rate? 12%. So 2,72,000 into 100 by 112. How much 100 by 112? Means 12 by 112 you take out. So remaining part is 100 by 112. How much? 2 lakh? Exceeds 2,50,000 or does not exceed 2,50,000? Does not exceed 2,50,000, which means TDS is not applicable. So that is the answer for the first case. TDS not applicable because the value is 2,42,000. It does not exceed 2,50,000. Then see the second one. Supply of air conditioner to GST department located and registered in Delhi. Total contract value is 2,55,000 excluding GST. Whether the value of supply under the contract exceed 2,50,000? Yes. So TDS will be applicable. Now the intrastate, interstate. Whether it is intrastate or interstate, where is the supplier located? Ragini Traders, Jaipur. And to whom they are supplying? Delhi. So usually ending point will be taken as place of supply. Therefore it is interstate supply, chargeable to IGST. So therefore on this 2,55,000, what is the rate of TDS? 2%. CGST, SGST means 1%, 1%. IGST means 2%. TDS rate is 2%. So do the computation. 2,55,000 into 2%, 5,100. Understood pa? Next. Supply of generator renting service to Municipal Corporation of Jaipur, not exempt under GST law. Total contract value 3,50,000 inclusive of GST. Now take out GST. 3,50,000 into 100 by 112. How much? More than 2,50,000. So TDS is applicable. Yes. And this is what? Renting service means general provision. Location of recipient. What is the location of recipient? Jaipur. What is the location of supplier? Jaipur. Therefore it is intrastate. So 1% CGST and 1% SGST. What is the value you got after excluding GST? 3 lakh. 3,12,500 into 1% towards CGST and 1% towards SGST. Understood pa? So this is one question on TDS. Then look into question number 29. Rajwada Operators Limited ROL is registered under GST in the state of Karnataka as an e-commerce operator. It owns and operates a web portal which supplies various goods and service on behalf of various sellers or service providers to its ultimate customers. Details of supplies undertaken through ROL in the month of October 2023 are as under. Sale of goods worth 1,47,500 including GST by A Limited, registered supplier of Rajasthan, to B Limited, Gujarat. Also goods worth taxable value 1,40,000 sold by A Limited, Rajasthan to B Limited, Gujarat in the month of September 2023 were returned back in the month of October 2023. Now listen carefully. When TCS is applicable, whenever supply of goods or services is made through e-commerce operator, the e-commerce operator will deduct TCS at the rate of 0.5% on the net value of taxable supplies. So first you need to check, is it taxable supply? Check the question. Is it taxable supply? Yes, it is taxable supply. And sir, the 2,50,000 point is there for TCS? No, the 2,50,000 point is only for TDS, not for TCS. So TCS will be applicable always, whatever may be the value, but sales returns will be deducted while computing TCS. What is the sales made during the month? 1,47,500, okay, minus 1,40,000 needs to be reduced. Okay, why 1,40,000 needs to be reduced? Because sales returns needs to be reduced. But 1,47,500 is including GST, but 1,40,000 is excluding GST. So please do the computation. What is this? Always TCS should be computed on value excluding GST. TDS also compute on value excluding GST. While computing TDS and TCS, the GST component should not be included in the value. Is it clear or not? So take out the GST. 1,47,500 into 100 divided by 118, because the rate of GST is given as 18%. So 1,47,500 into 100 by 118, how much? 1,25,000. Sales returns is how much? So it is negative, correct? Negative means TCS will be nil. You got it? Negative means TCS nil. Don't compute TCS and then tell negative TCS, give me refund. You understood? Government and all will not give refund. So value minus sales returns. If it is negative, that's it. We don't have to pay any TCS. Okay. So see the answer. 1,25,000 minus 1,40,000 negative value. So thus TCS to be collected is nil. Sir, I have a question now, sir. Can this 15,000 be carry forward and adjusted? This is not MAT credit. Understood? Or it is not set off and carry forward of losses. We don't have such provision. Sir, then it is loss na, sir. Correct. Ask your customer not to return that much. You understood? Ask your customer not to return that much. That's the only way you can do. But law wise, there is no benefit given. Got it? Next, second point. Value of services provided from 21st October to 30th October by way of transportation of passengers by motor vehicles by X Limited registered under GST in Karnataka to Z Limited registered under GST in Karnataka amounting to 5,50,000. It includes 1,50,000 against transportation services provided by omnibus. Now please listen, there is one very important point here. Generally, transportation of passengers through e-commerce operator, section 9(5) will come. When section 9(5) comes, e-commerce operator only will pay GST. Again I am repeating, whenever there is transportation of passengers through e-commerce operator, okay, 9(5) will come. So liability to pay GST is on e-commerce operator. So 9(5) when applicable, TCS will not be applicable. Section 9(5) and TCS section 52 are mutually exclusive. So e-commerce operator will pay GST on the transportation service. But sir, supplier is registered, that is irrelevant. In case of transportation service, whether the supplier is registered or unregistered, always e-commerce operator will pay GST on that. However, if it is transportation of passengers through omnibus by a company, 9(5) will not be applicable. When 9(5) is not applicable, TCS will be applicable. Is it clear, pa? So, is the supplier a company? Check the question. Is the supplier a company? Yes, X Limited. And are they transporting passengers through omnibus? Yes. How much? 1,50,000. So, on that 1,50,000 only TCS will be applicable. On remaining amount TCS will not be applicable. So, 1,50,000 only TCS applicable. That too, what is the rate of TCS? 0.25% CGST and 0.25% SGST. Is it clear? Next. Look into third one. Miss Zara of Mumbai books a room for 3 days and 2 nights in Rajnivas Palace, Jodhpur, Rajasthan through Maharaja Resorts Limited, MRL, also an e-commerce operator registered under GST. So Miss Zara is the guest. She is booking through MRL, one e-commerce operator. Okay, MRL is integrated with ROL, who has an agreement with Rajnivas Palace. Actually, there are 2 e-commerce operators here. Who are the 2 e-commerce operators? ROL and MRL. 2 e-commerce operators are there. Rajnivas Palace is registered under GST in Rajasthan and raises invoice for rupees 1,50,000 to Miss Zara and receives 1,45,000 from ROL for the same. Okay. Now, in this case, what should be taken? Like, who will deduct the TCS? First question. Who will deduct TCS? Supplier side e-commerce operator, recipient side e-commerce operator. Which e-commerce operator will deduct TCS? Remember, whenever there are two e-commerce operators, multiple e-commerce operators, the supplier side e-commerce operator will deduct the TCS. Who is the supplier side e-commerce operator? ROL. So ROL only will deduct the TCS. Is it clear? Next, second question. The TCS will be computed on what? Is it computed on 1,45,000 or 1,50,000? TCS will be computed on 1,50,000. Okay, that is total value, not on payment made. Total value. What is the total value? 1,50,000. So who will be deducting TCS? ROL. Being supplier side e-commerce operator is liable to deduct TCS. Is it clear, pa? So remember one point. What is that? When there are multiple e-commerce operators, which e-commerce operator will deduct TCS? Supplier side e-commerce operator will deduct TCS. Got it? So this is a very good question on TCS application because lot of points are covered here. Okay. Then question number 30. Mr. Gauri Shiva, a registered person in Punjab, supplies goods taxable at 12% in the state of Punjab and Haryana. He has furnished the following details in relation to independent supplies made by him in June. Supply number 1, Mr. A, B, C, like that it is given. Discuss the manner in which details of above supplies are required to be furnished in GSTR 1. This is also one amendment. You can just update this amendment in your book, point number 55. Point number 55. How invoices should be reported in GSTR 1. So previously we have a different format. Now they are giving how invoices needs to be reported in GSTR 1. How invoices needs to be reported in GSTR 1. First you need to see whether it is B2B or B2C. First you need to check whether it is B2B invoices. What is B2B invoices means? Sale to registered person. B2B invoices always invoice wise. Invoice wise. Okay, invoice wise, always. Always we need to report it invoice wise. Suppose if it is B2C invoices. Suppose if it is B2C invoices, that again divide into two. Interstate and intrastate. If it is intrastate, always we do consolidation. Consolidated details. What is the meaning of consolidated details? We will not report invoice wise. We will do the total and we will put it there. You understood? For example, 10 invoice also is there. 10 invoices total we will do and the total amount only we will put. That is intrastate B2C. Suppose if it is interstate B2C, then check the value of invoice. Value of invoice exceeds 1 lakh. Value of invoice exceed 1 lakh per invoice, or value of invoice less than or equals to 1 lakh per invoice. If the value of invoice exceeds 1 lakh per invoice, then also we need to give invoice wise details. Suppose if the value of invoice does not exceed 1 lakh per invoice, then we need to do state wise consolidation. State wise consolidation. Clear? State wise means that particular state wise you need to do the total. Okay. So only in two places we need to report invoice wise. What are the two places? Number one, B2B. Number 2, B2C, interstate, where the value of invoice exceeds 1 lakh. Now, based on that, how a question may get, you can see this. You finish now writing that. See this. First one, B2B or B2C? Or B2B. So invoice wise, correct? So invoice wise, invoice wise. Next one, B2B or B2C? So invoice wise. Next one, B2C, intrastate, interstate. So consolidation, correct? Next one, B2B or B2C? B2C, intrastate, so consolidation. Then B2B or B2C? B2C, interstate, invoice value exceeds 1 lakh, so invoice wise. You got it? Next one, B2C, interstate, invoice value does not exceed 1 lakh, so state wise consolidation, state wise consolidation. Next, B2C, interstate, 75,000, it does not exceed 1 lakh, so state wise consolidation. Then B2C, interstate, 2 lakh 80, more than 1 lakh, so invoice wise. B2B, so definitely it will be invoice wise. So that's what I have given. So all these invoices, first 2 invoices will be invoice wise, then third and fourth one will be consolidated, correct? Then also it will be invoice wise, and 6th and 7th will be state wise consolidation, okay? Like that we need to prepare a table and present it, simple question only, okay? Then look into question number 31, that is related to refunds. Kailash Global Private Limited supplies various goods in domestic and international market. It is engaged in both manufacturing and trading of goods. The company is registered under GST in the state of Karnataka. The company exports goods without payment of tax under letter of undertaking in accordance with the provisions of section 16(3)(a) of IGST Act. Sir, B2C large limit is 2.5 lakhs. No, that is an amendment. Previously it was 2,50,000. Just now we discussed, they have reduced it to 1 lakh. Okay. Previously, wherever this 1 lakh we saw, in this place, this 1 lakh was there, previously it was 2,50,000, now they reduced it to 1 lakh. Okay. Now, coming back to this, Kailash Global Private Limited supplies various goods in domestic and international market. It is engaged in both manufacturing and trading of goods. The company is registered under GST in the state of Karnataka. The company exports goods without payment of tax under letter of undertaking. So how they are making? Exporting goods without payment of tax under LUT. So second option means they will get refund of ITC. In accordance with the provisions of section 16(3) of IGST Act, the company has made the following supplies during a tax period. This is a very good question, consolidated question that covers all types of refunds. So please concentrate. Little bit concept also we need to understand here. First one, export of product A to UK for $10,000, assessable value under customs in Indian rupees. Export duty is levied on product A at the time of export. So whenever export is upon payment of customs duty, we will not get refund under option 2. We will get the refund only under option 1. Is it clear? Again I am repeating. Whenever we are making exports or supplies to SEZ, there are 2 options. Option 1, pay IGST, get refund of that IGST. Option number 2, don't pay IGST and export it under bond or LUT, or supply to SEZ under bond or LUT and get refund of ITC. But whenever we are making export of goods upon payment of customs duty, we will not get refund under option 2, disqualified. Only possibility is option 1. But in this question, option 1 also not possible, because they wanted to go for without payment of IGST, which means in the first transaction there is no refund. Is it clear, pa? Understood or not? Again I am repeating, they are making export of product A to UK 10,000. and they are paying export duty. When they are paying export duty, they will not get refund under option 2. Okay sir, but they will get option 1 na sir. Correct, but that option 1 also not possible. Okay, why? Because they are going for without payment of tax under letter of undertaking. Now, related to this, there is one amendment that has happened. Okay, what is that? The moment you are exporting goods upon payment of customs duty, latest amendment is that neither option 1 nor option 2. Is it clear pa? So therefore that is another amendment. You can write down point number 56. Export of goods, export of goods upon payment of what? Upon payment of customs duty. Export of goods upon payment of customs duty. No refund, no refund under option 1 or option 2. No refund under option 1 or option 2. What is option 1, option 2? Option 1, pay IGST and get refund of gross IGST. Option 2, don't pay IGST and get refund of ITC with respect to inputs and input services. Get refund of ITC with respect to inputs and input services. Sir, previously we were getting only option 1. Now the latest amendment is that for your exam, neither option 1 nor option 2. Okay. Clear? So see this. So this is that section 16. Hope it is visible for you. This is an amendment which is there in your supplement. Zero rated supply means any of the following supplies, namely export of goods or supply of goods or services for authorized operations. And see this subsection 3. A registered person making zero rated supply shall be eligible to claim refund of unutilized ITC on supply of goods or service or both without payment of tax under bond or LUT, provided that the registered person making supply shall, in case of non-realization of proceeds, I think somewhere it is given, notwithstanding anything contained in subsection 3 or subsection 4, no refund of unutilized ITC on account of zero rated supply of goods or integrated tax paid on account of zero rated supply shall be allowed, where such zero rated supply of goods are subject to export duty. Is it clear? So you don't have to read everything, just that is the line, that's what I have given. So whenever you are exporting goods upon payment of customs duty, export duty means customs duty, no refund under option 1 or option 2. So neither option 1 nor option 2. So that's where in this question, whether we will get any benefit? No, you will not get any refund. Is it clear pa? Got the clarity? Then look into the next one. domestic supply of taxable product B during the period excluding tax at the rate of 5%. So to whom we are supplying? Domestic. What is the tax rate? 5%. Now read further. Inputs used in manufacturing such goods are taxable at 18%. Will it come under inverted tax structure? Yes. The tax rate on input is 18. The tax rate on output is 5. That is called as inverted. The tax rate on output is less than the tax rate on input is called as inverted rate structure. In case of inverted rate structure, we will get the refund. Okay. So therefore, refund is available. Refund of ITC. Refund of ITC on account of inverted tax structure we will get. Next, supply of goods to EOU. Whenever we are making supply of goods to EOU, that is called as deemed exports. In case of deemed exports, either supplier can claim refund or recipient can claim refund. Carefully listen. Whenever we are making sale to advance authorization holder, or whenever we are making sale to EPCG holder, or whenever we are making sale to EOU, that is called as deemed exports under GST. In case of deemed exports, there are two options. What are the two options? Either supplier can claim the refund, that is, I will make sale to you, I will not charge any GST from you, whatever GST I pay to government, that I will get as a refund. Okay. Option 2, the recipient will claim refund, means I will charge GST from you, so you will claim the refund. Is it clear? So what are the two options in case of zero rated supply? Check your book, I have given there. So go to refunds chapter. You can see there page number 238. First, zero rated supply, two options you know na. Zero rated supply, two options you understood na. What are the two options for zero rated supply? Pay IGST and get refund of gross IGST. And second option, don't pay IGST, get refund of ITC on inputs and input services. Clear? Now look into this. This is in case of deemed exports. In case of deemed exports also there are two options. What are considered as deemed exports? Same page, page number 238. Page number 238. See on the top of that page. What are considered as deemed exports? Supply of goods against advance authorization. Supply of capital goods against EPCG. Supply of goods by a registered person to EOU. These transactions are treated as deemed exports. Come below. What is alternative one? There is a supplier who is making supply of goods to the recipient, and from the recipient they will collect only sale price. GST not collected by the supplier, which means who will claim the refund? Supplier will claim the refund. First supplier will pay GST to government, and from government they will get the refund. Is it clear, pa? So this is one alternative. Who is claiming refund? Supplier is claiming refund. Now second alternative you see, alternative 2, supplier will collect the sale price plus GST from the recipient. Got it? Now recipient will take the ITC and supplier paid GST to government. So who will get the refund of ITC? Recipient. So there are two alternatives in deemed exports. Alternative 1, supplier will claim refund. Alternative 2, recipient will claim refund. Is it clear or not? Now read this question. Sir, is this deemed exports? Yes. Supply of goods to EOU is deemed exports. ITC has been claimed by recipient, means who will claim the refund? Yo, I charged GST from you, you took the ITC, means you are only going to claim the refund, correct or not? See this pa? Alternative 1, first of all, I am not charging GST to you. Then how can you take ITC? Correct? Alternative 1, I am supplier, you are EOU. Carefully listen. I am Kailash Global, you are EOU. I am not charging any GST to you. How will you take ITC? You cannot take ITC. Means if you have taken ITC, means I have charged GST. If I have charged GST, then it is not alternative 1, it will be alternative 2. In alternative 2, who will claim refund? Recipient will claim refund. Means EOU will claim refund, but this Kailash Global will not claim refund. Are you understanding this? So therefore, no refund. No refund. Then next, fourth case, export of exempted supplies of goods. Even though the product is exempted, the moment it is exported, it will become zero rated. Okay, generally the product is exempted, but when it is exported, its character will change to zero rated. And whether it is with payment of GST or without payment of GST, they wanted to go for without payment of GST, which means will they get the refund? Yes, yes, refund of ITC. Option 2, option 2. Option 1 will not be possible, option 2. What are the two options for zero rated? Pay IGST, get refund. They are not paying IGST. So, export without payment of IGST and get refund of ITC. Clear? So, there are two refunds. One is on account of zero rated, that is exports. Another is on account of inverted rate structure. Now, we need to do the answer. So, we will do the answer together. You take your notebook, one rough page you take. One rough page you take. Tell me which refund we will do first. Which refund? There are two refunds. You decide as your wish. Audience poll. Inverted or zero rated? Zero rated we will try first. Write down. Refund of ITC on account of zero rated supplies. Give the side heading. Refund of ITC on account of zero rated supplies. Refund of ITC on account of zero rated supplies. Refund of ITC on account of zero rated supplies. What is the formula for refund? Write down. Maximum refund equals to, first write down the formula. Maximum refund equals to net ITC into, maximum refund equals to net ITC into zero rated turnover. Maximum refund equals to net ITC into zero rated turnover divided by adjusted total turnover. Zero rated turnover divided by adjusted total turnover. Okay. Next line. Net ITC equals to, net ITC equals to ITC on inputs and input services. ITC on inputs and input service. Capital goods ITC you should not take. Okay. Only inputs and input services. Now see the data here. How much is the ITC on inputs? 3,50,000, including 50,000 on export of exempt supplies. Can we take? Yes. Why? Generally the product is exempted. For example, this product is exempted. So generally we cannot take ITC for this product. But the moment this product is exported, it will become zero rated. So we can enjoy the ITC. So 3,50,000 right there, 3,50,000. Net ITC equals to ITC on inputs and input services, that equals to 3,50,000 plus input services how much? Input service how much pa? See there, 2 lakhs plus 2 lakhs plus 2 lakhs. But in the 2 lakhs, 18,000 rupees is outdoor catering. Outdoor catering is a blocked credit, means we cannot take ITC. So minus 18,000. 3,50,000 plus 2 lakh minus 18,000 equal to 5,32,000. This is net ITC. Are you understanding the way in which we need to arrive at the answer? First formula you need to remember. What is the formula? Net ITC into zero rated turnover divided by adjusted total turnover. What is net ITC? Net ITC is ITC on inputs and input services. So inputs 3 lakh 50, input service 2 lakhs, but blocked credit we should not take, okay. Then zero rated supply, next line, zero rated turnover, zero rated turnover, but which zero rated you should take? Only without payment of IGST, whichever refund you are claiming. So there are two zero rated turnovers, 7 lakhs also there, 6 lakhs also there. Which one you should take? Which one you should take? For which you are claiming refund? For this first one you are claiming refund, last one you are claiming refund, last one. So that only should be taken. But that should be compared with 1.5 times the similar goods sold in the local market, whichever is lower. Okay. So write down, zero rated turnover equals to 6 lakhs or 5 lakhs into 1.5, because usually what will happen, we will inflate the value, so we will claim more refund. That's why they have brought this. They are telling you compare with the domestic market value into 1.5, whichever is lower. So 6 lakhs or 5 lakhs into 1.5, whichever is lower, that is 6 lakhs, correct? Because 5 lakhs into 1.5 will be 7 lakh 50,000 na. So therefore whichever is lower will be 6 lakhs. Okay pa? So we got zero rated turnover. What is the next we need in the formula? Adjusted total turnover. Write down, adjusted total turnover. Adjusted total turnover. Okay. So what we need to do, we need to first take first turnover 7 lakhs, next 10 lakhs, that is also turnover only na. Then 5 lakhs, that is also your turnover. All turnovers pa, all turnovers, zero rated, non-zero rated, everything you should take except exempted supplies. Anything is exempted in this? No, everything is taxable only, take everything. So 7 lakhs plus 10 lakhs plus 5 lakhs plus 6 lakhs, that equals to 28 lakhs. 28 lakhs. Generally in adjusted total turnover, exempted turnover will not come, because if it is exempted turnover, you cannot take ITC na. But sir, there is export exempted, that is taxable only. For ITC purpose, export of exempted goods is treated as zero rated. Zero rated means we can enjoy ITC. I am not talking about that. Normally within India, is there any exempted turnover given in the question? No. Okay. So now do the formula. Refund equals to, all numbers you know, refund equals to 5,32,000 into 6 divided by 28. That equals to 1 lakh. So that is the answer pa, 1,14,000. You understood how we got this 1,14,000? This is one refund we have computed so far. Which refund? Zero rated. Now we are going to do inverted tax structure. Okay, write down. Refund of ITC on account of inverted tax structure. Refund of ITC on account of inverted tax structure. Refund of ITC on account of inverted tax structure. How to calculate refund of ITC on account of inverted tax structure? I will tell you the easy way. Okay, formula and all, don't break your head. I will tell you the easy way. 5 points we need, 5 numbers. Okay, what are those 5 numbers? Write down. Number 1, net ITC. Number 1, net ITC. Net ITC is only inputs. ITC only on inputs. ITC only on inputs. Now see the data. What is the ITC only on inputs? 3,50,000 equal to 3,50,000. But we need 5 numbers pa. If you get 5 numbers, easily you will get the refund formula. Okay. First one is net ITC. Second one is inverted turnover. Inverted turnover. inverted turnover. Which one is inverted turnover? 10 lakhs. Correct? For that only now we are claiming refund. Inverted turnover is 10 lakhs. Why it is called as inverted turnover? Because the rate of GST on output is less than the rate of GST on input. That's why it is called as inverted turnover 10 lakhs. Okay. Next, number 3. Adjusted total turnover. You will take everything same as previous. What is that? 28 lakhs. Adjusted total turnover 28 lakhs. Same as previous. Everything except exempted turnover 28 lakhs. You got these 3. Next, number 4. Tax on inverted turnover. First, net ITC. Second, inverted turnover. Third, adjusted total turnover. 4, tax on inverted turnover. What is the tax on inverted turnover? Inverted turnover already you know 10 lakhs pa. What is the rate of GST on that? 5%. So 10 lakhs into 5%. 50,000. 50,000. Next one. ITC on inputs and input services. ITC on inputs and input services. How much is the ITC on inputs and input services? See here. 5,32,000. Already you did. Previous sum. Previous computation. 5,32,000. How 5,32,000? 3,50,000 plus 2 lakh minus 1,80,000 minus 18,000. That is 5,32,000. You got the 5 numbers. What are the 5 numbers you got? Net ITC, inverted turnover, adjusted total turnover, tax on inverted turnover, and ITC on inputs and input services. Now write down the formula. Refund equals to 1 into 2 by 3. 1 into 2 by 3 minus 1 into 4 by 5. 1 into 2 by 3 minus 1 into 4 by 5. Easy appa. Can you remember like this? Formula and all, very big formula. That big formula you cannot remember. That's why I am telling you 5 points you remember. 1 into 2 by 3 minus 1 into 4 by 5. What is that? 1, 2, 3, 4, 5. Already you know the numbers. You just put it there. Okay. 1 into 2 by 3 minus 1 into 4 by 5. What is 1? 3,50,000 into 2 by 3. What is 2? 10 lakhs. What is 3? 28 lakhs. 3,50,000 into 10 by 28 minus again 1 into, see this is one computation, separate computation. 1 into 2 by 3 is one computation minus 1 into 4 by 5 is another computation. 1 into, that is 3,50,000 into 4 by 5. What is 4? 50,000 divided by total ITC on inputs and input service 5,32,000. Now you do the computation, you will get one answer. $92,105. See this? 92,105 is the answer. So you learnt both the refunds, how to compute. Okay? And this question covers everything. All refund points are covered in this question. It's a very good comprehensive question. Now, look into question number 32. So this is on inverted tax structure. Separately also they can give a question like this. See this. Ever Young Manufacturers LLP, a registered supplier under GST. But refunds chapter is there for you in syllabus. You know that? You know na? Beginning itself they gave. Somewhere like 4th chapter, 5th chapter itself, they have given refunds, exports, deemed exports, everything is there. Ever Young Manufacturers LLP, a registered supplier under GST, is engaged in manufacturing of Ayurvedic cosmetic products within the state of Gujarat. It provides the following information for the month of January 2023. Particulars of the month of January 2023, outward supply of skincare products 2.5, outward supply of skincare products 6%. So they have two outward supplies, one is at 2.5, another is at 6%, and they have 3 inward supplies. Inward supply of input 6%, inward supply of input service 2.5%, Inward supply of capital goods 9%. Will it come under inverted turnover or not? Yes, because one outward is less than the inward. You should see inputs pa, you should see inputs. What is called as inverted tax structure? The rate of GST on output is less than the rate of GST on input, then it is called as invert. Here, what is the rate of GST on input? 6%. What is the rate of GST on output? 2.5%. Definitely it is inverted. But there is another skincare product which is 6% only, that is non-inverted. You understood? In this question, there is both inverted turnover as well as non-inverted turnover. Is it clear, pa? Now, all other information, ITC in respect of all types of invert supply as given above was claimed in the relevant GSTR 3B and same was also reflected in 2B, and all other conditions are complied. No refund was claimed in the month of January. You are asked to compute the maximum refund amount. Can we do this? Come on. What are the 5 numbers that we need? Net ITC. Start. Number 1, net ITC. What is net ITC? Only inputs are, both inputs, input services are, or inputs, input service and capital goods are. Only inputs. What is the inputs related credit? Check the question. The inputs related credit is 35 lakhs into, you do total 12%. 35 lakhs into 12%. 4 lakh 20,000. 4 lakh 20,000. 35 lakhs into 12%, 4 lakh 20,000. Number 1 over. What is number 2? Inverted turnover. Write down. Inverted turnover. Out of these 2 turnovers, which is inverted turnover? First one. That is 50 lakhs. Right there. 50 lakhs. 50 lakhs. Next, adjusted total turnover. So total, what is adjusted total turnover? 50 lakh 50,000. Correct? Both are outward only. 50 lakh 50,000. Next, number 3. What is number 3? Tax on inverted turnover. Tax on inverted turnover. What is the tax on inverted turnover? 50 lakhs into 5%, that is 2 lakh 50,000. Next, number 5, ITC on inputs and input services. ITC on inputs and input services. What is that ITC on inputs and input services? Huh? 35 lakhs into 12% plus 5 lakhs into 5%. 35 lakhs into 12% plus 5 lakhs into 5%. How much? 4 lakh 45,000. So you got all the numbers. Now do the computation. 1 into refund equals to 1 into 2 by 3 minus 1 into 4 by 5. Come on. One lakh 79,887. Check the answer screen. 1,79,887. Easy pa? Respond here. Everyone got this? Okay. Then see this question number 33. This is an independent question on refund on account of zero rated. The previous question what we did is inverted. This is on zero rated. First question what we did is both, everything is there. Next independent question on inverted. This is independent question on zero rated. See this question number 33. Bhagwan manufacturers, and 1 minute pa, I don't think so we will be able to complete remaining questions and all, because already it is 6 o'clock and even few points in supplementary notes is there. can I take half day extra? Okay only, na? So even if you are unable to come also, it's fine. You can attend in YouTube online live also. So I'll take it on Tuesday. Tomorrow I am not available. So Tuesday I'll take morning itself. So morning to afternoon, if you are able to come, you come. Otherwise also don't worry, you can watch it in YouTube at a later point of time also if you are having office or etc. and all. In few days exam, still you are in office means you are great only, and you can watch later also, it's up to you. But if you can come, you can come, okay. So that the remaining some 17 questions, this 33 we will discuss. The remaining some 17 questions and plus that few points in the supplementary that we will complete. Just some 3-4 hours if I have, that is sufficient for me, okay, done. So see this, question number 33, I thought of completing but you are only, I am not wasting time, but that much is there that you are listening as if you are learning for the first time. I don't know whether you are really learning for the first time or it is an entertainment for you that you are making me explain everything or not, but no reaction from your side. So that's why I am explaining everything, okay. Say this, Bhagwan Manufacturers and Exporters Company BMEC is registered under GST in the state of Rajasthan and supplies various goods in domestic as well as in international market. It is engaged in both manufacturing and trading of goods. It exports goods without payment of tax under bond or LUT in accordance with the provisions of section 16(3) of IGST Act. BMEC provides the following information in relation to various supplies made by it during October 2023. Now, taxable value of goods supplied within India, this is local sales 14 lakhs. Taxable value of goods exported without payment of tax under letter of undertaking 10 lakhs. So we will get the refund, correct? Refund of ITC, refund of ITC. However, taxable value of such goods when supplied domestically in similar quantities is 6 lakhs. So how much should be taken as value? 6 lakhs into 1.5, that is 9 lakhs or 10 lakhs, whichever is lower, that will be 9 lakhs. Next one, taxable value of goods exported without payment of tax under bond. However, taxable value of such goods when supplied domestically is 1,50,000. So here also we will get refund of ITC. How much? What is the turnover? 2 lakhs or 1,50,000 into 1.5. What is 1,50,000 into 1.5? 2,25,000 or 2 lakh, whichever is lower is only 2 lakhs. Okay. Then the input tax credit availed for the above tax period is capital goods, inputs and input services. Now, can we do the computation? So write down maximum refund equals to, first write down the formula. What is the formula? Maximum refund equals to net ITC into zero rated turnover divided by adjusted total turnover. Net ITC into zero rated turnover divided by adjusted total turnover. What is net ITC? What is that? ITC on inputs and input services. See the question. 3 lakh plus 1,50,000, 4,50,000. Write down. Net ITC equals to 3 lakh plus 1,50,000, that equals to 4,50,000. Next line, zero rated turnover equals to this 10 lakhs or 6 lakhs into 1.5, whichever is lower, that is 9 lakhs. So take 9 lakhs plus 2 lakhs or 1,50,000 into 1.5, whichever is lower, 2 lakhs. So 9 lakhs plus 2 lakhs, that equals to 11 lakhs. Next line, adjusted total turnover. How much is the adjusted total turnover? How much? 20? Wrong answer. You know what is a mistake you did? You took the given information, but you have computed na now. That only should be taken in denominator. Whatever is there in numerator, that should only be there in denominator na. In this place 14 lakhs correct pa. In this place 10 lakhs is wrong. How much you took? 9 lakhs. In this place you are taking 2 lakhs. Okay. So therefore what is adjusted total turnover? 14 plus 9 plus 2. What is that? 25 lakhs. 14 lakhs plus 9 lakhs plus 2 lakhs. Sir, why 9 lakhs, sir? Because we took whichever is lower. 9 lakhs only we took in numerator. That's why. Got it? 14 lakhs plus 9 lakhs plus 2 lakhs. That equals to 25 lakhs. Now, do the formula computation. Maximum refund equals to 4,50,000 into 11 divided by 25. How much? 1,98,000. You got it? Now there is one important point here. This much you will not get as refund. This is subject to balance in ITC. Yes, you are eligible for 1,98,000, but that much balance should be there in your ITC ledger. You got it? Suppose if the balance what you have is only 1,50,000, then that 1,50,000 only they will be giving it to you. Simple logic pa. You can withdraw 10,000 rupees using your debit card. So you go to the ATM, but 10,000 is not coming. Why? You got it? If the balance is 100 rupees, how 10,000 will come? So whatever is there in account, that much only you will get. Like that, you are eligible for 1,98,000. But what is the ITC balance that you have? That much only you will get as refund. So you see what is the ITC balance. See there. BMEC also provided the following additional information. The balance in credit ledger at the time of filing refund application is 1,50,000. The balance in credit ledger at the end of October is 3,25,000. So what is the refund? 1,98,000. Whichever is lower. So 1,50,000 only you will get as refund. Is it clear pa? First refund as per formula 1,98,000. Balance in ITC at the time when you make the refund application 1,50,000. Balance in ITC pertaining to the month for which you are filing refund, that is 3,50,000. So whichever is lower, so you will get only 1,50,000. You see this. Refundable amount is least of the following. Refund as per formula 1,98,000. Balance in credit ledger at the time of filing refund application 1,50,000. Balance in credit ledger for the month for which you are filing refund application 3,25,000. Whichever is lower is 1,50,000. So you will get only 1,50,000 as the refund. So continuation to the previous day 2. So we are left with few questions. Let's complete those questions so that this mighty 50 gets over. Look into question number 34. In question number 34, this is a question related to assessment under GST. The wheat trader obtained permission for provisional assessment and supplied 3 consignments of furniture on 28 April 2021. The tax payment on provisional basis was made in respect of all the 3 consignments on 20th May 2021. Consequent to the final assessment order passed by the Assistant Commissioner on 21st June 2021, a tax of 1,20,000 and 1,50,000 became refundable on first and third consignments. So actually what happened in case of provisional assessment, first we will be unable to compute the GST payable. As we are unable to compute the GST payable, we request the department to compute the GST payable. That is called as provisional assessment. So officer will specify, okay, you have to pay some amount, and again there will be finalization of assessment. So when finalization of assessment happens, 3 things could happen. Number 1, maybe the final assessment amount is more than the provisional assessment amount, or the final assessment amount equal to provisional assessment amount, or the final assessment amount may be less than the provisional assessment amount. Suppose if the final assessment amount is more than provisional assessment amount, the differential amount we need to pay. Suppose if it is equal, we don't have to pay anything. Suppose if it is less, if the final assessment amount is less than provisional assessment amount means we have excess paid, so that we will get as a refund. This is the story. So here, with respect to consignment number 1, consequent to the final assessment order, second paragraph you read, consequent to the final assessment order passed by the Assistant Commissioner on 21st June 2021, a tax of 1,20,000 and 1,50,000 became refundable. Okay, so which means final assessment amount is less than provisional assessment amount on first and third consignment, whereas a tax of 1,20,000 became due on second consignment. The trader applies for the refund of the tax on first and third consignments on 12th July and pays the tax due on second consignment on the same day. But with respect to second consignment, what happened? With respect to second consignment, the differential amount is payable. Okay, tax was actually refunded to it of first consignment on 8 September, whereas third consignment on 18 September. Customers of the trader who purchase the consignments have not taken ITC. Determine the interest payable and receivable, if any, under CGST Act by the trader. So this is interest computation in case of provisional assessment. So whenever we need to get the refund, so we should get the refund within 60 days from the date we are making application for refund. So final assessment over. When final assessment over, we need to make application for refund. So we made application for refund. What is the time limit within which we need to get the refund? 60 days. Please check the question as to when are we making application for refund. Which date we made application for refund? Divi traders apply for the refund of the tax of first and third consignment on 12th July 2021. So 12th July 2021 is the date of application. And when the refund they got for first consignment? 8 September. Is it within 60 days or beyond 60 days? You count from 12th July 60 days. So 12th July, in July, take your calculator. 31 minus 12. 31 minus 12. So what is the number of days? 19 days in July. Then August, 31 days. August, 31 days. And September, 8. September, 8. So how many days? 50. So within 60 days the refund is given. So whether any interest is receivable? No. Interest is not receivable in this case. Is it clear? So that is the answer. So for the first consignment, date of supply, so 25, refund is given. So number of days for which interest is payable will be nil, as refund is granted within 60 days from the date of application. Is it clear? Then next, with respect to third consignment, again third consignment, what is the date of provisional assessment got finalized and we made application? So again same day, 12th July only we make application for refund. And for third consignment, when are we getting the refund? 18 September. Now you count again from the beginning, number of days. So 31 minus 12, 19 days in July, then 31 days in August, then September, 18 days. How many days total? 68 days. But what is the delay? 8 days. They should have given refund within 60 days, but they are giving refund beyond 60 days, for which they need to give us a interest. What is the rate of interest? 6% per annum. Remember, whenever we are paying interest to government, it will be 18% per annum in GST. Whereas whenever government is giving refund, it will be 6% per annum. In customs, whenever we are paying interest to government, it is 15%. Whenever government is giving refund, it will be 6%. Okay, so you remember this. Whenever we pay interest to government, in GST it is 18%. In customs it will be, whenever we pay interest to customs department, what is the rate of interest? 15%, not 18%, it is 15%. Whenever government is giving refund to us, let it be GST or let it be customs, the rate of GST will be, the rate of interest will be 6%. Okay, so here what should be taken as the rate of interest? 6%. For how many days interest will be computed? 8 days. Why 8 days? Because the delay beyond 60 days is 8 days. Now, how much is the refund? Check the question. The refund amount is 1,50,000. So 1,50,000 into 6%. 1,50,000 into 6% into 8 by 365. What is the amount that you have got? 197.26. That is rounded off to 197. Are you understanding this? Then next one pa. Second case. Second consignment. For second consignment, payable or refundable? Payable. Because we need to pay the differential amount. When we need to pay the differential amount, we need to compute interest at what rate? 18% per annum. From when? Not from the date we make application, etc. and all. This is payable. When it is payable, we should check the due date. We should check the due date. The second consignment pertains to which month? See there. So, consequent to the final assessment order, Divi Trader supplied 28th April na. All three consignments are supplied on 28th April. First paragraph it is there. All three consignments are supplied on 28th April. 28th April if the transaction happens, what is the due date pa? 28th April if the transaction happens, in GST what is the due date? Next month 20th. Next month 20th. So 20th of September. Now you count from that date, due date. So September, how many days? 10 days. Okay. And when are we paying the differential amount? 10 days. Because don't count 20th. 20th is the due date. So don't count 20th. The next day we need to count. So 10 days in September. And when are we paying the differential amount? See there. And pays the tax due on the second consignment on the same day. That is 12th July. Now count. September it will be, April, May, 20th May, 20th May. So 28th April means 20th May will be taken. So in May 11 days, correct. So I took September. So 11 days in May, take that. 11 days in May, 30 days in June and 12 days in July. How many days? 53 days. For 53 days we need to compute interest at 18% on what? Differential liability payable. What is the differential liability that is payable? 1,20,000. So do the computation. 1,20,000 into 18% into 53 divided by 365. 3,136. Easy, understood? So whenever you get a question on provisional assessment like this it will be. So just interest computation you remember how to compute. Then look into question number 35. Examine whether the offences committed in each of the following independent cases are bailable. Further, determine the quantum of punishment on prosecution under the CGST Act in each of these cases. So prosecution means imprisonment. Prosecution means imprisonment. So we need to discuss about the imprisonment provisions and also we need to discuss about the bailability provisions, etc. Okay. So first we will see the situation, then I will explain you the provision. Situation number 1, Homigaba collects 240 lakhs as tax from its clients and deposits 150 lakh with the central government. So generally whenever an amount is collected as tax but not paid within 3 months. What is the meaning of amount collected as tax? You are not supposed to collect the tax but you collected the tax. You are not supposed to collect tax but you collected the tax. That is called as amount collected as tax but not paid within 3 months. Then it is an offence. It is an offence that leads to imprisonment. And what is the imprisonment period? Depends on the tax involved in the offence. Minimum there should be 2 crores tax involved in the offence. So see there, how much is the offence? 240 collected, 150 deposited. So the tax amount is only 90 lakhs, correct? So it does not exceed 2 crores. So imprisonment will not be applicable. Is it clear? Imprisonment will not be applicable in this case. And when imprisonment is not there, will it lead to arrest? No, arrest also 2 crore is the limit. So therefore arrest also does not arise in this case. As there is no arrest, the question of bailability does not arise. Continue further. Greater than 2 crores. Greater than 2 crores. Okay. Next. Continue further. It is found that he has falsified financial records and has not maintained proper records to evade the tax. So falsified financial records means what default? Books of accounts default. Okay. So total there are some 6 offences that leads to imprisonment. That is ICEBID. I's bid. You remember this? I's bid. I for invoice default. C for collected an amount as tax and not paid within 3 months. Okay. Then E for erroneous refund. B for books of accounts default, I for ITC default, and D for dealing in goods liable for confiscation. So these are the list of offences. Okay, so you can see your book. What are the offences that leads to imprisonment? Page number 264. Page number 264 you can see. Page number 264. Okay, so see this. I's bid. I for invoice default. What is invoice default? Supply without invoice or invoice without supply. C for collect an amount as tax and not paid within 3 months. E for erroneous refund. B for books of accounts default. Books of accounts default means what? Not maintaining proper books of accounts or fake books of accounts, etc. Then I for ITC default. ITC default means you are not supposed to collect, like you are not supposed to avail ITC, but you have availed ITC like that. All ITC related defaults. Then D, dealing in goods liable for confiscation. These offences plus attempt to commit or abetting commission of I's bid. What is that? Attempt to commit. Sir, murder, attempt to murder, both are same. You understood? So you tried the offence, but you have not committed the offence. Same as if you have committed the offence. Abetting to commit an offence means supporting. You are doing an offence, I am supporting you, or I am planning that offence. That is called as attempt to commit or abetting commission. That is also an offence that leads to imprisonment. For example, usually in murder cases and all, say 3 people together did the murder. Not 3 people will kill the person. One person will hold the hands, another person will hold the mouth, yet another person will stab. You understood? But all 3 are culprits, correct? Now A1, accused number 1 is the one who stabbed. Accused number 2 is the one who closed his mouth. Accused number 3 is the one who holded the hands. So a committed offence is the one who stabbed, and who attempted to commit. Who is that attempt to commit? The one who holds is not murdering, but he is attempting. Na? You understood or not? Like that. Or some other mastermind who made a plan. Night time you go, at this time you do, like this. He is also coming under accused. Is it clear? That's what they are telling. Attempt to commit or abetting commission of offence also attracts imprisonment. Okay. Then here collected an amount as tax and not paid within 3 months. Sir, what is the imprisonment, sir? You can see here imprisonment, if it is books of accounts default, then up to 6 months or fine or both. That is the imprisonment. Books of accounts default always up to, this is first time, up to 6 months or fine or both. Invoice default. Invoice default. Which invoice default? Issuing invoice without supply, not both. There are 2 invoice defaults. One is supply without invoice, invoice without supply. But this is invoice without supply. It exceeds 1 crore but does not exceed 2 crore. Then it will be up to 1 year. It is up to 1 year and fine. Okay. It is up to 1 year and fine. Suppose if it is other offences where the amount involved exceeds 5 crores. When it exceeds 5 crores, it is up to 5 years and fine. When it exceeds 2 crores, up to 3 years and fine. Okay, slight change here, the order changed. So you remember it like greater than 1 crore means up to 1 year, greater than 2 crores means up to 3 years, greater than 5 crores means up to 5 years. Okay, so this is for first time. What if it is subsequent imprisonment? Subsequent imprisonment always it will be up to 5 years plus fine. Okay, so you can see here. Now coming back to this question, it is found that he has falsified the financial records and has not maintained proper records to evade the tax. So falsification of financial records means what will be the books of accounts default? What is the imprisonment? Up to 6 months or fine or both. Okay, and will it lead to arrest? No. What are the 3 offences that leads to arrest? Only 3. IIC, same page, page 265 you can see. What are the 3 offences that leads to arrest? IIC. What is IIC? Invoice default, ITC default, collect an amount as tax not paid within 3 months, and that too amount should exceed how much? 2 crores. Only then arrest will be applicable. Okay. And next, what are cognizable and non-bailable offences? Same IIC. If it exceeds 2 crore but does not exceed 5 crore, it is non-cognizable and bailable, means we will get a bail. Suppose if it exceeds 5 crores, it is cognizable and non-bailable offences, means we will not get the bail. You understood? Yeah, first 3 offences leads to arrest. What are they? IIC. If it exceeds 2 crore, definitely arrest will be there. If it exceeds 2 but does not exceed 5, then we will get a bail. So it is non-cognizable and bailable. What is the meaning of cognizable? A person can be arrested without the warrant is known as cognizable. What is non-cognizable? A person can be arrested only with a warrant, court warrant. That is called as non-cognizable. Okay. So therefore, amount exceed 2 but does not exceed 5 means, okay, it is non-cognizable. Even bail also will be granted. If it exceeds 5, it's a severe offence. So due to that reason, it is cognizable plus non-bailable offence. Okay. Now, is books of account default given in this list? No. As books of account default not given in this list. What is the list? IIC. Books of account not there. So therefore, there is no question of bailability for this. Is it clear here? Understood? Next, look into another question. Datukeshwar Dutt collects 630 lakhs as tax from its clients. Again, it is amount collected as tax, but deposits only 120 lakh with central government. 630 minus 120 is how much? 510. 510 means it exceeds 5 crores. It exceeds 5 crores. What is the imprisonment? Up to 5 years. I told you imprisonment. What is an imprisonment? Greater than 1 crore means that to invoice default 1 year. Greater than 2 crores means 3 years. 125, 135. You remember like this. 125, 135. 1 crore, 1 year, 1 crore, 1 crore, 2 crore, 5 crore. 1 year, 3 years, 5 years. Okay. So more than 5 crores means 5 years. And as it exceeds 5 crore, will it be leading to arrest? Yes. And will it come under bailable or non-bailable? Non-bailable. Cognizable plus non-bailable. Are you understanding this? So therefore, balance amount. What will be the implications if Homi Gaba and Datukeshwar repeat the offences? If they repeat, always if they repeat, whatever may be the offence. In the ice bid, whatever may be the offence, if they repeat, always it will be up to 5 years plus fine. Okay. That is the answer we need to write for this. This is a question on offences. Yes, one more 5 years. That is like he became senior now. Every time he commit the mistake, already he suffered. First time, okay. So 2 crores, so 3 years, 1 crore, 1 year we have given. Again he is repeating, means how dare he is to do. So 5 years he should serve the imprisonment. And what is the minimum imprisonment? See, this is up to 5 years. What is the minimum imprisonment? 6 months. Means between 6 months to 5 years, any period can be imposed as imprisonment. Okay. Next, question number 36. So the previous question is on offences, imprisonment, arrest related to that provisions. Okay. Then question 36. Nirmal Private Limited, registered in Vasi, Maharashtra, is engaged in supply of taxable goods and services. In the month of April, it sold goods worth rupees 5 lakh, excluding GST, to Suraksha Enterprises and collected tax at 28% on the said goods from the buyer. However, the actual rate of tax applicable in the given case was 18%. Nirmal Private Limited deposited the tax at 18% on these goods to the government on the due date and retained the remaining tax collected. Determine the amount of penalty, if any, that may be imposed on Nirmal Private Limited in the month of October in the given case, ignoring the interest payable. So we have penalty provisions. In that, the major penalty provision is section 122 subsection 1. They have listed out some big list of penalties. So you can see that in page number 262. Page number 262, you can see the list of penalties. Bio discredits TFT. What is that? B for books of accounts default. Books of accounts default means not maintaining the books of accounts or maintaining false books of accounts or fake books of accounts, that is known as books of accounts default. Then I for invoice default. Invoice default means invoice without supply or supply without invoice. O for obstructing an officer from doing his duty, stopping an officer. Then D for dealing in goods liable for confiscation. So you know that the goods are liable for confiscation and you are dealing in those goods liable for confiscation. I for ISD default, input service distributor default. Then S for supply with GSTIN of another person. You are making supply with the GSTIN of another person. So actually you should supply with your GSTIN, but you are supplying with some other person's GSTIN. Then collected an amount as tax and not deposited within 3 months, or collected tax not deposited within 3 months, both. What is the difference between these two? You are supposed to collect tax, you collected, but you have not paid within 3 months. And the other one is you are not supposed to collect the tax, but you collected and not paid within 3 months. Then registration related default. What is registration related default? Not getting registered or giving false information for registration. E for erroneous refund. Erroneous refund means, so like wrongfully you have claimed the refund. Bio discredits. D, disposal of goods while detention or seizure is operational. That is, officer is seizing the goods, but you are trying to break that and you are taking the goods. Then I for ITC default. You are not supposed to take the credit, but you took the credit. Then T, tampering with material evidence. So material evidence, documents and all is there now that you have torn. Okay. Next, yes, suppression of turnover. T for TDS TCS default. F, failure to furnish document. T, transportation related default. Now you need to remember this list of offences. For these offences, what will be the penalty? 10,000 rupees or 100% of tax, whichever is higher. Now coming back to this question. Now what is the offence here? Read the question carefully. Actually they are supposed to collect 18%, but they collected 28%, means 10% collected in excess, correct? Means by representing as tax they collected some amount, means collected an amount as tax and not paid within 3 months. So therefore in this case what will be the penalty? 100% of tax or 10,000, whichever is higher. What is the tax? 5 lakhs into 10%. What is 5 lakhs into 10%? 50,000. So 50,000 or 10,000, whichever is higher, how much will be taken as a penalty? 50,000. Is it clear? Next, look into second. Not like that. Here, anyhow you are supposed to pay 18. You collected it. That you paid also. But 28, that extra 10, you are not supposed to collect. So offense is only for the 10% now. I collected 28 from you, but in that 18 only I paid, which means remaining 10 I am putting in my pocket, means that is cheating. So fraud is in that place only. So that's why that much we are paying. Suppose we have not paid full 28%, then entire 28% will be the penalty. You got it? Next, look into second one. Bindusar, Chief Executive Officer of Ashoka Solutions Limited, is issued a summons to appear before the officer to produce the books of accounts of Ashoka Solutions Limited in an inquiry conducted on the said company. Determine the amount of penalty, if any, that may be imposed on Bindusar. See, actually, he is not the taxpayer. Who is the taxpayer? Company is the taxpayer, but he is working in the company. And officer is asking him to produce some documents. Summons means asking him to appear. That is summons. If he is not appearing, then there is a penalty under 122 subsection 3. You can see that. 122 subsection 3, same page. Offences where the person is not directly involved in any evasion, but may be a party to evasion, or if he does not attend summons or produce documents, then the penalty will be up to 25,000. Is it clear? So that's how we need to compute the penalty, up to 25,000. So in this case, a summons were issued, he did not appear. So what will be the penalty? Up to 25,000. Usually in your CMA exams, CMA final exams, they ask only penalty. You write this penalty. You don't bother about CGST Act, SGST Act, etc. and all. Mainly for CA exams, they will specify CGST Act, IGST Act like that. That's where we need to, do the computation separately for CGST and then multiply by 2 for IGST. But for your CMA final exam, just they will ask penalty, you do this computation like this, that is sufficient. Okay. Next. So we need to discuss this question number 37, which is related to that 74A. Now that we have got a new section, 73 and 74 got merged into 74A. So let's complete that discussion related to 74A, and then we will solve the question in terms of 74A. I gave the question in terms of 74, but for you 74A is applicable for that reason. So I'm just showing you that information. Yes, insertion of new section 74A. So this 74A, previously we had total 5 offences. Already I told you that. What are those 5 offences? Non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC, and erroneous refund. If it is on account of fraud, means intention, then it was fraud or collusion, misrepresentation or intention to evade, then it was 74. If it is error, so by mistake it happened, then it was 73. And 73, 74, 2 sections, lot of people used to make a debate. This will come under 73, this will come under 74. Lot of cases, litigations were there in the court. To avoid those litigations only, so they have brought 74A, one section merging both 73 as well as 74. So therefore, for your June 2025 exams, 74A provisions will be applicable. Okay, so that's what we are trying to read, and we will make note of this. Say this: after section 74 of CGST Act, the following section shall be inserted, namely 74A, determination of tax not paid or short paid or erroneously refunded or ITC wrongly availed or utilized. So same offences are. So what are the offences? You can parallelly make note here. So this is 57th point. 57th point. Demand and recovery. Demand and recovery. Demand and recovery, section 74 capital A. So when this section will be applicable? So this is omitting the previous 2 sections. When this section will be applicable? What are the offences? Non-payment of tax. Non-payment of tax means what? Non-payment of GST. You are supposed to pay tax, but you have not paid. That is non-payment of tax. Then short payment of tax. Short payment of tax. Then next, wrong availment of ITC. Wrong availment of ITC. Then wrong utilization of ITC. Wrong utilization of ITC or erroneous refund. Erroneous refund means you are not supposed to get the refund, but you got the refund. Okay. Non-payment of GST, short payment of tax, this GST. Short payment means you are not supposed, like you are collecting but paid less. Okay. Then wrong availment of ITC, wrong utilization of ITC, erroneous refund. Here also we have again a difference. See, just the section they merged, but the concept they retained the same. You understood? The concept they retained the same, just the section they merged. So say this, continue. You understood the 5 offences? So what is it they are telling? Where it appears to the proper officer that the tax has not been paid or short paid or erroneously refunded or ITC wrongly availed or utilized, he shall serve notice on the person chargeable with tax which has not been so paid or which has been short paid, to whom refund is erroneously made or is wrongly availed or utilized, requiring him to show cause why he has not paid the amount specified in the notice along with interest, okay, provided that no notice shall be issued if the tax has been paid, etc., is less than 1000 rupees. So less than 1000 rupees, there won't be any notice, otherwise notice will be given. Got it? And next, the proper officer shall issue notice under subsection 1 within 42 months from the due date of furnishing annual return for the relevant financial year. So what is the due date of furnishing annual return for the relevant financial year? For example, financial year 25, 26 or 24, 25 you take. So 31st December 2025. From there 42 months. Remember, 42 months. Okay. So to which tax is not paid or short paid, or 42 months from the date of erroneous refund. Okay. Usually if it is first 4 offences, what are the first 4 offences? Non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC, then it is 42 months from the due date of filing annual return. If it is erroneous refund, 42 months from the date of refund. Okay. Then next one, where the notice has been issued for any period under subsection 1, the proper officer may serve a statement, means supplementary notice. What is this supplementary notice? Already notice is issued for one financial year. Now another financial year also same offence they have committed. Rather than giving a new notice, they can give a supplementary notice. Okay. So for such periods other than those covered under subsection 1, on the person chargeable with tax. Okay. So may serve means it is not mandatory, it is optional. If they want to give supplementary notice, they can give, or a fresh notice also can be given. Okay. Then next, the service of such statement shall be deemed to be service of notice on such person, subject to the condition that the grounds relied upon, okay, are same. So when they can give supplementary notice, suppose if the original notice is for short payment of tax, supplementary notice is also on account of short payment of tax. If original notice is on account of wrong availment of ITC, supplementary notice is also on account of wrong availment of ITC. Is it clear? So same grounds it should be. Then the penalty in case where any tax which has not been paid or short paid or erroneously refunded or ITC wrongly availed or utilized for any reason other than the reason of fraud or willful misstatement or suppression of facts to evade shall be equal to 10% of the tax due from such person, or 10,000 rupees, whichever is higher. Same, no change. Previously also same. So 10% of tax or 10,000, whichever is higher. If it is fraud or willful misstatement or suppression of facts to evade tax, shall be equal to tax due from such person. Okay. So this place there is a difference. Remaining and all it will be the same now. So first this on account of what? On account of fraud. On account of fraud. What are the words used there? Fraud, willful misstatement or suppression of facts. Fraud or willful misstatement or suppression of facts. Suppression of facts to evade GST, correct? Then what will be the penalty in that case? What will be the penalty in that case? 10,000 rupees or 100% of tax or ITC or refund, correct? Depends, whichever offence, whichever is higher. If the offence has tax, then tax. If the offence is ITC, then ITC or refund, whichever is higher. This will be taken. If it is other cases, then what will be taken as the penalty? Other cases means what? Other than fraud. What will be the penalty? The penalty will be 10,000 rupees or 10% of tax or ITC or refund, whichever is higher. Whichever is higher. 10,000 rupees or 10% of tax or ITC or refund, whichever is higher, this will be taken as the penalty. Okay. So there is no change in that. Previously also it was same. Now also it is the same. Okay. They have not changed. Shall be equal to the tax due from such person. But here if you see, here they gave 10,000 rupees, whichever is higher. But here they did not use the word. So means it will be what? It will be only 100%. You just strike off this. Previously we had 10,000 rupees or 100% of tax, whichever is higher. Now they removed that 10,000 and they are just telling what? They are just telling the tax due from such person. Tax due from such person means only 100% of tax or ITC or refund. Okay. So why you are writing and striking off? Because writing whatever you have written was old provision. So this is the updated one. There is no 10,000 comparison. Just 100% of tax or ITC or refund. Is it clear? Then the proper officer shall, after considering the representation, if any, made by the person chargeable with tax, determine the amount of tax, interest, penalty due from such person and issue an order. The proper officer shall issue the order within 12 months from the date of issuance of notice. So from the notice, what is the time limit within which the order should be passed? 12 months. Previously, we used to determine the order time limit and 6 months before or 3 months before the notice date was. But now it is not like that. First notice due date, thereafter 12 months will be order due date. Okay. Then provided where the proper officer is not able to issue order within the specified period, the commissioner, okay, so officer authorized by commissioner in rank may, having regard to the reasons for delay, so to be recorded in writing before the expiry of the specified period, extend the set period by a further by maximum of 6 months. This point was not there earlier. Now they have given 12 months plus it can be extended for a further period of 6 months. Okay, understood up to this? Next, all these are common now, whether it is fraud or non-fraud, this is common. There is no difference in the time limits. Okay, then the person chargeable with tax where any tax has not been paid, etc. So may before service of notice pay the amount of tax along with interest payable under section 50 on the basis of his own ascertainment or the tax ascertained by the proper officer, and inform in writing, okay, so that he shall not be served any notice under subsection 1 or the statement under subsection 3 as the case may be, and the penalty payable under this act will not be payable. What is that? Before notice itself, if you know that you have not paid, if you have paid, then you don't have to pay any penalty, fully waived off. Is it clear? Before notice, then pay the said tax along with interest within 60 days of show cause notice, and on doing so, no penalty shall be payable and all proceedings shall be concluded. So before notice also no penalty, or after notice within 60 days also there is no penalty. Are you understanding this? Then the person chargeable with tax where any tax has not been paid or short paid or erroneously refunded on account of fraud, willful misstatement, suppression of facts. So far whatever we have seen is other cases. In other cases, what is the waiver? Come on. What is the waiver? Tell me. Reduced penalty. Paid before show cause notice. Paid before show cause notice. What is your answer? If it is paid before show cause notice, penalty or no penalty? No penalty. There is no penalty if it is paid before show cause notice. If it is paid after show cause notice within 30 days, what is paid? Tax and interest. Okay. So 1 second, I'll just make this as a tax, okay, or interest paid before show cause notice. Paid before show cause notice. This is tax or interest means in the sense like tax and interest, because tax, when there is a delay, interest also payable. Paid before show cause notice, then there is no penalty, no penalty. Suppose if it is after show cause notice, tax and interest after show cause notice, but within 60 days, then also no penalty. Other cases, otherwise normal penalty, whatever penalty that we have computed, that normal penalty is payable. Clear? Interest is different, penalty is different. Interest, no. For calculating interest will not include penalty and all. Interest is always on tax. Interest is not on penalty. Okay. Tax amount, yes, that's what. 10% of tax or ITC or refund. Whatever is due. For example, if some amount is already paid, on that interest will not come. Penalty also will not come. So penalty will be only on the due amount. Okay. Next. Here, now we are discussing in this place. In this place, what is the discount that we have? So look into this. In case of fraud, before notice if the person has paid, how much will be the penalty payable? Penalty equivalent to 15% of such tax. Got it? 15% of such tax. Suppose if it is paid within 60 days from notice, penalty will be 25% of such tax. Is it clear? Suppose if it is paid thereafter within 30 days from order, then penalty equals to 50%. That is 60 days from order, penalty equals to 50%. And in other cases, otherwise it will be normal penalty. Okay. So 3 discounts we have, whereas in the other case we have only 2 discounts. Before notice if you pay, no penalty. Within 60 days from notice also if you pay, there is no penalty. But in this case you see, so tax and interest paid before show cause notice, how much will be the penalty payable before show cause notice? 15% of penalty. Whatever is the penalty on that 15%. Okay. Suppose if you pay within 60 days from show cause notice, correct? Within 60 days from show cause notice, then within 60 days from show cause notice, then how much we need to pay? 25% of penalty. Suppose if it is within 60 days from order, then it will be 50% of penalty, and in other cases, otherwise it will be normal penalty. Is it clear? Otherwise it will be normal penalty. If the tax and interest paid before show cause notice, 15% of penalty. Within 60 days from show cause notice, 25% of penalty. Within 60 days from order, 50% of penalty. Otherwise it will be normal penalty. Okay. Otherwise means after the 60 days from order. It's like, see here. First what happens, it is like, first there will be notice, show cause notice. First there will be show cause notice, and after show cause notice they will pass an order. Okay. Now after order you are making the payment. If you pay at this stage This is other than, suppose if it is fraud, you take fraud case. If you pay before show cause notice, if you are paying, suppose if you pay at this stage, okay, if you pay at this stage, what you need to pay? Tax anyhow you need to pay because you have evaded a tax or ITC, or refund you need to pay, and thereafter you need to pay interest also you need to pay, plus you need to pay what? 15% of original penalty. What is the original penalty? 100%. See this, 100% of tax is the original penalty. In that 100%, what is 15% means 15 rupees. You understood? Tax 100 pa, 100 we have to pay as penalty. In that 100, how much we will pay? Only 15 rupees we will pay as penalty. That is the meaning. Suppose after show cause notice, but how many days? After show cause notice, 60 days. After show cause notice, 60 days. In this stage, if you pay, then what and all you need to pay in this stage if you pay? In this stage, if you pay, then also you need to pay tax. Same tax, ITC, refund that you need to pay, plus you need to pay interest also, plus you need to pay 25% of original penalty. Suppose if the original penalty is 100 rupees, how much you need to pay? 25 rupees you need to pay. Suppose if it is after 60 days, this is after 60 days from the show cause notice, okay, this is exactly 60 days. After 60 days from show cause notice or after 60 days from order, at this stage if you pay, then you understood, after 60 days from show cause notice, but within 60 days from order, at this stage if you pay, then tax, ITC or refund that you need to pay, plus no doubt interest also you need to pay, plus how much you need to pay? 50%. If the original penalty is 100 rupees, you need to pay only 50 rupees. 50% of original penalty. And suppose if it is beyond 60 days from order, then at this stage if you pay, so if you pay here, it is like this. If you pay here beyond 60 days from order, then tax, ITC or refund plus interest plus original penalty. What is original penalty? 100% of tax, ITC or refund. Understood? Clear? Got the clarity? So this is in case of fraud. This is in fraud cases. Fraud cases. Okay. So this is what you need to remember, because if at all they wanted to ask a question, they can make a question on this related to penalty computation under 74A. Okay. Now what we are discussing, these are all the differential provisions. Now what we are discussing is the common procedure. What is the procedure? What is the procedure for section 74A? First, what will happen? If it is non-payment of tax, non-payment of GST, non-payment of GST or short payment of GST, short payment of GST or wrong availment of ITC, wrong availment of ITC or wrong utilization of ITC, okay. In these cases, non-payment of GST, short payment of GST, wrong availment, wrong utilization, okay. In these cases, first we need to see the financial year. First we need to see the financial year for which this happened. Say financial year is 2025-26. Financial year is 2025-26. For this financial year 2025-26, what is the time limit within which the notice to be given? First, for this, we need to find out the due date of annual return. Due date of GSTR 9. What is the due date of GSTR 9? 31st December 2026. From 31st December 2026, what is the time limit within which the notice to be given? From here, show cause notice. Show cause notice. In short, SCN. Okay. What is the time limit? Respond within 42 months. 42 months. Any extension? No extension, boss. No extension here. 42 months. After show cause notice, what is the time limit within which the order will be passed? Demand order. Demand order. What is the time limit within which demand order will be passed? 12 months plus it can be extended for a further period of 6 months. Okay. So this is the procedure for section 74A, which is common. And some students who, like, I don't know, student or someone else, they posted, all this is waste of time, don't read this, so read some revision, some other video they were telling, read some revision and go for exam. Promise pa, no one has covered all these things. In the entire YouTube, no one has covered this supplementary study material because they thought these are all not applicable for exam. You understood? And no one will sit and read and understand, na? So therefore they have not given. But trust me, these are all very much applicable for your exam. Otherwise, why they have given a supplementary paper? You understood? So they will know. When they will know? On the date of exam, when they see the question paper, they will know the pain of it. Okay? So that's why I request you to please enlighten your known circle that this is relevant. Whatever I am discussing is really relevant. And while discussing Mighty 50 also, I am not wasting your time. I am connecting the concept. I am discussing the concept and I am explaining from there. At least those concepts, if you learn, the same question, if it is coming, you will be able to answer. Little bit, if they tweak also, you will be able to answer. That's the objective. Okay. And those who are watching in online also or recorder also, please put the comment that it is relevant, so that the others will get benefit out of it. Okay, fine. Now, if it is erroneous refund, same story. If it is erroneous refund, then what we need to do? If it is erroneous refund, we don't have to check the due date of annual return. Directly from the date of erroneous refund, the show cause notice. Directly from this show cause notice, and then demand order. Directly from the show cause notice and then demand order. What is the time limit within which it should be given? Same, 42 months. Difference enapa? What is the difference? In the previous case, we need to see the due date of annual return from their 42 months, but here we need to see just the date of erroneous refund from their 42 months. That is the difference. Okay, and here it will be 12 months. And this can be extended for a further period of 6 months. Okay. Next, so all these points we have discussed, we have covered this. Next, you look into this 9. 9th also we discussed, 10, subsection 10. Where the proper officer is of the opinion that amount paid under clause 1 of subsection 8 or 1 of 9 falls short of the amount actually payable, he shall proceed to issue the notice in respect of such amount which falls short. You ask me one doubt. What if some amount is partially paid? Now the notice and order is only for the differential amount. That is simple, logical, correct? Already I paid some amount, but the difference amount only now they will give notice. Next, notwithstanding anything contained in clause 1 or clause 2 of subsection A, penalty under clause 1 of subsection 5 shall be payable where any amount of self-assessed tax or any amount of as collected as tax has not paid within a period of 30 days from the due date of payment of tax. It's amazing point. Here we have a discount offer now. Here we have a discount offer. This discount offer is not applicable. This discount offer is not applicable. When this discount offer is not applicable? When this discount offer is not applicable? If self-assessed tax or amount collected as tax not paid within 30 days. Is it clear? What is self-assessed tax? Self-assessed tax means that tax which is reported in GSTR 1 but not paid in 3B is known as self-assessed tax. I am reporting in 1 but I have not paid in 3B, and amount collected as tax. In these two cases we will not get this benefit. Okay, so you write down that last. Benefit of reduced penalty as above. Benefit of reduced penalty as above. Reduced penalty as above is not applicable. Benefit of reduced penalty as above is not applicable in case of self-assessed tax not paid, self-assessed tax not paid. What is self-assessed tax means? Tax reported in GSTR 1 but not paid in 3B. But not paid in 3B, GSTR 3B. So benefit of reduced penalty as above is not applicable in case of self-assessed tax not paid or collected an amount as tax, collected an amount as tax and not paid within how many days? Within 30 days from due date. From due date. Within 30 days from due date, if you are not paying, then the benefit of reduced penalty is not applicable. Okay. Means you have to pay original penalty, whatever we have computed. Don't apply there before notice, within 30 days from notice, within 60 days from order, 60 days from notice. This table you don't have to apply. This table you don't have to apply. You have to go by the normal penalty. Whatever is a normal penalty, that is only payable. Okay. Done. Then next, say this. So the provisions of this section will be applicable for determination of tax for the financial year 24-25 onwards. Okay. Then all the proceedings in respect of the said notice, etc. and all these things we have seen. This they have explained in detail. We discussed all these things. They have explained in detail with some numbers. Okay. So but we can understand that there is nothing great in this. So now we will solve this question using 74A. Okay, this question we will solve using 74A, and the answer for this question I have given as per 74. You kindly update it based on 74A. Okay, so say this. Discuss the amount of tax and penalty to be paid, if any, in the following independent cases where show cause notice are issued under section 74A, under section 74A of CGST Act 2017. Date on which credit was wrongly availed is 31st January 2019. Amount of input tax credit taken wrongly 200. Adjudication order passed on 26th July demanding the entire amount of credit with interest and imposing an amount equal to credit as penalty. In all cases, ASSI want to pay the amount on 29/2021. Order passed, order not passed? Order passed. When order is passed, okay, so entire amount of credit, what is the time limit within which they have to pay? 60 days, correct? Is it 60 days? 26th July to 29, is it 60 days? Yes, July, August, September. So you count 26 July. In July we have only 5 days. August we have 31 days. September we have 20 days. So total how many days? So it is within 60 days, correct? Now, is it on account of fraud or is it on account of other than fraud? So here nothing is given, which means it is on account of other than fraud. If it is fraud, they would have specified. If it is other than fraud, what is the provision we learned? Within 60 days from order, we don't have. So see this. Within 60 days from order, but actually it should be paid within 60 days from notice. Then only there is no penalty, otherwise we need to pay the original penalty, correct? So therefore this particular question you kindly make note in your notebook, okay, somewhere. We will do the same question as per other than fraud as well as fraud, okay. So answer to question number 37. Answer to question number 37 in Mighty 50. So this question we will do under both. We will do under both the cases. What is that both the cases? Fraud as well as non-fraud, okay. So on account of fraud, not on account of fraud, okay. So this question actually they have given a clue that it is on account of fraud. How you know? Penalty something they have given, na? Entire amount of credit, an amount equal to, imposing an amount equal to credit as penalty, like that, but we are answering as per both, just to understand, okay. Now tell me in the first case, when the payment is made, in the first case, when the payment is made in the first case, within 60 days from order, correct? So first case, amount to be paid within 60 days from order. If it is on account of fraud, how much will be the penalty? 50% of, you check the table and answer, 50% of original penalty. What is the original penalty? So 50% of original penalty, so that is 200 lakhs into 50%, that will come to 100 lakhs. Penalty, only penalty. If it is not on account of fraud, so penalty payable, full penalty payable, normal penalty payable. What is it? Normal penalty payable. Normal penalty payable So what is the ITC evaded? 200 lakhs. 200 lakhs into 10%. That will come to 20 lakhs. Next. See the second situation. What is the second situation? 30th June 2019, adjudication order passed on 26th August 2021 demanding the entire amount of credit with interest and imposing an amount equal to credit as penalty. Order date 26th August. When are they making the payment? 20th of September. Is it within 60 days? Yes, definitely within 60 days. So because August few days and September 20 days only, again it is within 60 days. So same as above. Same as above. Second case, amount to be paid within 60 days from order. Amount to be paid within 60 days from order on account of fraud. How much? 50% of original penalty. 50% of original penalty. What is the original penalty? 250 lakhs. 250 lakhs into 50%, that will come to 125 lakhs. Whereas here, normal penalty payable. See, the benefit is not there for other than fraud. Other than fraud, only 2 points. Before notice, within 60 days from notice. So, normal penalty payable. What is it? Normal penalty payable, that will be 250 lakhs into 10%, that will come to 25 lakhs. Then third situation, 30th October is the ITC avail. Show cause notice has been issued on 5th September demanding the entire amount of credit with interest and proposing penalty equals to 100% of credit taken. Now 5th September, 20th September, so they are making payment within 60 days from show cause notice, correct? So then in other than fraud, there is no penalty, correct? They are paying within 60 days from show cause notice. Check the table, check the table. They are paying within 60 days from show cause notice. In case of other than fraud, there is no penalty. Got it? If it is fraud, 60 days from show cause notice, how much they need to pay as penalty? 60 days from notice, 25%, correct? So therefore, third case, it is amount to be paid. Amount to be paid, because in all these cases they wanted to pay accordingly, correct? On one date they have given amount to be paid within 60 days, within 60 days from show cause notice. If it is fraud case, if it is fraud on account of fraud, 25% of original penalty. We need to pay 25% of original penalty. What is the original penalty? Total amount is how much? 120 lakhs into 25%. How much it comes to? 30 lakhs. Whereas here, no penalty. No penalty, because the payment is made within 60 days from show cause notice. Previously it was 30 days. Now they have modified it to 60 days. Okay. Then next situation. Next situation is that 30th January, 50 lakhs. Statement of managing director has been recorded on 6th September, wherein he has admitted the non-receipt of the inputs and availing the credit wrongly, which means no notice. No notice, no notice. So before notice itself they are paying, correct? Notice is not given, no notice. Before notice itself they paid. If it is fraud case, how much we need to pay? 15%. If it is other than fraud case, no penalty. Okay. So fourth situation, amount to be paid before notice. Amount to be paid before show cause notice. Amount to be paid before show cause notice. How much will be the penalty? In this case, 15% of original penalty. What is 15% of original penalty? Total 50 lakhs. 50 lakhs into 15%, that is 7.5 lakhs. If it is this case, there is no penalty. Very, very important question, pa. This is purely on the table. Okay. So there is a chance of asking this type of question. Completely 73, 74, both places they revised to 60 days. Everywhere. This is what I have written. Maybe you have not listened to that. Fully they have changed. So fully the process is now merged to one. 74A. In that time limits and all they have changed. And this 60 days time limit is now common. So for 73 cases, 74 cases. There is no 73, 74 now. Okay. Next. Understood, Napa? Can I proceed? So for this question alone, I have given the updated answer. That updated answer I will modify in this and I will upload the file again. Okay. But anyhow, you have written for others. Then next one, and even this working PDF also I will share today. Today I will share, because all the concepts I am writing in the same PDF. Everything gets over, I will share with you. Okay. Then look into question number 38. Adinath Private Limited, registered under GST in the state of Uttar Pradesh, instructed Ashok Transporters to deliver certain taxable goods to Mahavir Enterprises in Uttar Pradesh on 10 January 2022. The value of the goods is 6,80,000, which are chargeable to CGST and SGST at 9% each. While the goods were in transit, proper officer intercepted the goods and the truck in which the goods were being transported under section 68. So this is proper officer under section 68 can intercept the vehicle which is in the transit. However, the driver of the truck failed to tender any document in relation to the goods in movement. The proper officer, after conducting the physical verification of the goods on the truck, decided to seize the goods and the truck and issued a notice under section 129 specifying the penalty payable. Yes. So penalty will be payable under 129. So they will first do the seizure and thereafter they will give a notice for levying the penalty, and within 7 days they will be levying the penalty order. After penalty order, within 15 days if you pay the penalty, the goods and the truck will be released. Okay. So specifying the penalty payable by Adinath Private Limited after giving it an opportunity of being heard. You are required to determine the amount of penalty payable under CGST Act if Adinath Private Limited does not come forward for payment of penalty. Further discuss the suitable course of action for Ashok Transporters if it intends to get the truck released. So we will see the relevant provision for this. So kindly look into page 258 in your book. Kindly look into page 258 in your book. Okay. And so this book, actually I already told you that if any of your friends wanted this book, they can come to our office and they can collect this book free of cost, because next attempt there we are publishing a new book. There are a lot of amendments. So this book, rather than throwing away, I just wanted to give it for those who wanted to make use of it for that purpose. Okay. And suppose if you are in online etc and all, you can just contact our office, just the courier charges alone you pay, they will send the book. Then see this. Now that is the disadvantage with IDT, every 6 months it will change. Okay. Then see this. Interception of conveyance by the proper officer. There are two things: goods with documents and goods without documents. If there are some goods with documents, there is no seizure. If there are goods without documents, then seizure of goods and conveyance. Seizure will be under section 68. Within 7 days, when they seize, they have to give a notice for levying penalty. After they give notice for levying penalty, within 7 days, they need to pass a penalty order. And how much is the penalty that is payable? Now depends on goods and on conveyance. First for goods you see, how much is the penalty payable for goods? Whether the owner is coming forward or the owner is not coming forward to pay the penalty. The owner of such goods is coming forward. If the owner of such goods is not coming forward to pay penalty, then who is coming forward to pay penalty? The transporter is coming forward to pay the penalty. Is it clear? Now, how much will be the penalty if the owner is coming forward? If owner is coming forward, 200% of tax is the penalty. See there. If owner is coming forward, 200% of tax will be payable as a penalty. What if owner is not coming forward? If owner is not coming forward, 200% of tax or 50% of value, whichever is higher, will be taken as the penalty. This is for taxable goods. What if it is exempted goods? If it is exempted goods, 2% of the value or 25,000, whichever is lower. So 2% of value or 25,000, whichever is lower, if the owner is coming forward. If the owner is not coming forward, 5% of value or 25,000, whichever is lower. So the maximum amount is only 25,000 if it is exempted goods. Sir, for exempted goods also documents are required. Yes, bill of supply and other documents are required even for exempted goods. Okay, then what is the penalty payable for the conveyance, to release the conveyance? Whatever penalty that is payable for release of goods or 1 lakh, whichever is lower. So therefore, what is the maximum penalty for release of conveyance? Only 1 lakh. Only 1 lakh. Now, applying this chart, we are going to solve this question. Now, look into the question. Whether owner is coming forward or owner is not coming forward, last paragraph it is given. If Adinath Private Limited does not come forward for payment of penalty, then how much will be the penalty payable? 200% of tax. What is 200% of tax? 6,80,000 into 6,80,000 into 9%. First we will do as per CGST, because I have given CGST as GST separately. So CGST we will take 6,80,000 into 9% into 200% or 50% of value. What is 50% of value? 6,80,000 half, that is 3,40,000, whichever is higher. Which is higher? Definitely 3,40,000 is only higher. This is the penalty under CGST Act. The same penalty will be payable under SGST Act also. Okay, but you do in exam only computation for CGST Act. That is sufficient. I told you, CMA final exam, they are asking only computation of CGST Act. You do only as per CGST Act. Suppose if they ask IGST Act, multiply by 2. Whatever penalty you got, if they ask IGST, multiply by 2, but they are not asking. They are asking only as per CGST Act. You do as per CGST Act, 3,40,000. So 3,40,000 is the penalty payable for release of goods. What is the penalty for release of conveyance? Whatever penalty for release of goods, 3,40,000 or 1 lakh, whichever is lower. So maximum penalty for release of conveyance will be 1 lakh. So hence, Ashok Transporters can get its truck released upon payment of 1 lakh. Got it? Next. Question number 39. In an order passed dated 1st April 2023. So this is related to pre-deposit. For pre-deposit also there is some amendment, I think. So 1 second, let's see this. So pre-deposit, previously there was a different provision and now they have modified little bit. Okay, so look into the pre-deposit provision first. As per section 106, no appeal shall be filed unless the appellant has paid in full such amount of tax, interest, fine. Whenever we are going for appeal, why we go for appeal? So the department officer passed an order and you are of the opinion that you don't have to pay, but you wanted to prove that you don't have to pay. So you go for the appeal to the first appeal authority. When you go for the first appeal authority, so you have to pay a pre-deposit. How much is that pre-deposit? If you have any admitted due, pay the admitted due full. What is admitted due? For example, department is asking you to pay 100 lakhs as tax and applicable interest and penalty. According to you, you have to pay only 30 lakhs. According to you. So pay that 30 lakhs plus its interest plus its penalty. What is the disputed tax? 70 lakhs. 100 lakhs, 30 lakhs is admitted. What is disputed? 70 lakhs. In that 70 lakhs, we need to pay 10%. Okay. In that, we need to pay 10%. What is 70 lakhs into 10%? 7 lakhs. This 7 lakhs is subject to maximum. Previously 25 crores. Now they have reduced it to 20 crores. Got it? They have reduced it to 20 crores. So therefore, if we take, say for example, 400 crores is the order on which you go for appeal. What is the disputed tax? Entire 400 crores. 400 crores into 10%, 40 crores. But maximum is how much? 20 crores only. So 20 crores only you need to pay as pre-deposit. Is it clear, pa? Understood? Sir, is this 20 crore under CGST or total? Under CGST means again under SGST we need to pay 20 crores. Okay. There are 3 places where you need to do the computation separately. Penalty. So far we saw a penalty computation. Number 2, late fee. So usually late fee computation also will be there. That late fee and pre-deposit. These 3 places we need to do the computation separately. For CGST, separately for SGST, and total and write if it is IGST. Otherwise just the CGST provisions you need to write. Okay. Now this is for the first appeal, pa. What is the pre-deposit for second appeal? Pre-deposit for the second appeal, previously, second appeal is to whom? GST-80, Appellate Tribunal. Previously it was 20%, now they reduced it to 10%. Now first appeal also 10%, second appeal also 10%. First appeal, what is the maximum? 20 crores, and second appeal they are telling that the maximum is only 20 crores. You understood? So therefore they have changed this 50 crore. Previously it was 50, now they have modified it to 20 crores. Is it clear? So therefore 40 crore will be in total, 20 under CGST, 20 under SGST. Okay. So this is what you need to remember. Now there is no difference in the pre-deposit for first appeal and second appeal. Both the cases the pre-deposit will be same. Okay. So maximum 40 crores. So write down, this is another amendment. Amendment number 58. This time the number of amendments for CMA is more than CA. For CA it was hardly 41 or 42 amendments. See, we are touching 58. Okay. Then see this. That's mainly because of that 1 month gap. Okay. Pre-deposit in case of first appeal to commissioner appeals, first appeal to commissioner appeals, and second appeal to GST-80. Pre-deposit in case of first appeal to commissioner appeals and second appeal to GST-80. What is the pre-deposit? 100% of admitted due. 100% of admitted due. This is always payable, pa. 100% of admitted due. What is admitted due? That is tax plus interest plus penalty. TIP. Tax, interest, penalty. That you have to pay anyhow. And second, 10% of disputed tax, not due, disputed tax, only tax. Okay. But this 10% of disputed tax is subject to maximum, how much? 20 crore under CGST. If it is IGST, 40 crore under IGST. but this 10% component only subject to maximum 20 crores. Okay. SGST they will not ask. They will ask only CGST. If they ask IGST, whatever you do for CGST, multiply by 2. Okay. CGST. If the question is silent, always CGST. Always CGST. That's what I told. For CMA final exam, they will never ask CGST also. They will just ask penalty. You do as per CGST only. They will never mention the act. They will mention how much is the penalty payable. You write only CGST provisions. Okay. And from this attempt onwards, I am planning to put the suggested answers also. Like once the exam get over, send me in Telegram group a question paper. I will do the suggested answer and let the suggested answer be forwarded to the examination department. Okay, so that they will know, okay, what are all the assumptions which are possible. So far I have not done, seriously I have not done. I thought why should I think, etc. and all. Then I saw many mistakes in the suggested answers. So I thought, okay, someone should highlight this. Okay. Now look into this question, question number 39. You understood now that pre-deposit amendment. In an order passed dated 1st April 2023 issued to Sitaram Private Limited, the Commission of Central Tax being Revision Authority has confirmed IGST demand of 1400 crore, penalty of 200 crore and interest of 20 crore. Sitaram Private Limited admits the tax liability, penalty and interest to the extent of 200 crore, 20 crore and 10 crore respectively, but wishes to litigate the balance amount of demand, and thus Sitaram Private Limited deposits the required amount of pre-deposit on 12th April and files an appeal with GST 80. So how much will be the pre-deposit? Total how much per IGST? Here they gave IGST. Total how much? 1400, 200 and 20. In that how much they are admitting? 200 crore. Means accordingly the applicable penalty, interest also they need to pay. Correct? How much is the admitted due? 230 crores. What is the disputed tax? Disputed tax 1400 minus 200. How much? 1200. 1200 into 10% is how much? 120. But maximum will be only 40 because it is IGST. Because it is IGST, subject to maximum 40. See the answer. The amount of pre-deposit to be made. First one no change, 230. Then next one it will be 10% of the remaining tax in dispute. That is 10% of 1200 crore, 120 crore subject to maximum 40 crores. So therefore we need to pay a pre-deposit of only 40 crores. Only 40 crores will be the pre-deposit. We are answering the question as per the updated provision. It was an old exam question. Old exam question, if they give today, what should we do? We are writing as per the latest amendment. Year and all don't see there, don't bother about year. We are writing the question like, see, I have not created a question now. Already some past exam question, it's a past exam question. We are answering as per latest amendment. Okay. Next. Here there is one more. GST 80 decides the appeal in favor of Sitaram Private Limited on 12th June. Sitaram Private Limited submits an application seeking refund of pre-deposit along with applicable interest on 2nd July 2023, and the department acknowledges the application on the same day. The amount of pre-deposit is refunded to Sitaram Private Limited on 15th October. Listen, whenever we deposit the money, pre-deposit, and we win the case, that 40 crore we deposited, now that we should get as a refund. What is the rate of interest in this case? 9%. Generally refund interest rate is 6%, but in this case of pre-deposit the refund interest rate is 9%. That too from when to when it will be computed? Not 60 days from the date of application. Usually refund is first we need to make application, then 60 days, but in this case not like that. From the date we made the pre-deposit till the date we are getting the pre-deposit, for every day we get the interest. What is the date on which we deposited? See there, what is the date on which we deposited? Pre-deposit on 12th April 2023. 12th April 2023. Now take your calculator. Count from 13th. Don't count 12th. That is the date you deposited. Immediately thereafter it will start. So the next day. So in April, 30 minus 12. 30 minus 12. Plus May 31 days. June 30 days. July 31 days. August 31 days. September 30 days. October 15 days. How many days? 186 days. See the answer here. Interest will be 40 crores into 9%. 9% is the rate of interest into 186 divided by 366. How much? Sir, but on this 230 crore, why there is no interest, sir? Ayya, that 230 crore anyhow you have to pay. Dispute only you will win. 230, anyhow you admitted that you have to pay, that is your liability. Dispute is only on 1200. For that only, whatever pre-deposit you made, that you will get as a refund. Is it clear? So, please do the computation. 40 crores into 9% into 186 by 366. Why 366 I have taken? So, like 365 itself we can take. Maybe if it is given in 2024, you can take it as 366, otherwise it's 365. Please do the computation. 40 crore into 9% into 186 by 365. How much? Hmm? 1,83,45,205. Okay. So this is the answer. 1,83,45,205. Done. Next. Next we are moving on to advanced ruling, question number 40. Ranjan intends to start selling goods in Delhi. However, he is not able to determine the classification of goods proposed to be supplied by him, as the classification of the said goods have been continuous, and the place of supply if we supply the said goods from Delhi to buyers in US. So advanced ruling, there are certain questions on which we can seek advanced ruling. What are those questions? All questions starting from supply chapter to registration chapter. Just open your book, see the index, supply chapter to registration chapter. Okay, tell me once, what are the headings? Supply, next levy and collection under CGST, levy and collection under IGST, then exemptions, time of supply, place of supply, value of supply, input tax credit, composition scheme. Next, no, up to composition scheme, including registration. Up to composition scheme including registration, but excluding place of supply. Is it clear? So for registration you don't have in syllabus, but for registration we can go for advanced ruling. Is it clear? All chapters what you have up to composition scheme. Registration also you can go for advanced ruling. But out of these chapters, on which chapter you cannot go for advanced ruling? Place of supply. Okay, come back to this. Classification of goods. Is it a question for advanced ruling? Yes. Classification means what? Classifying intrastate or interstate or supply of goods or supply of service, etc. So supply of goods or supply of service classification, we can definitely go for advanced ruling, but place of supply we cannot go for advanced ruling. Strictly not allowed. Ranjan's tax advisor has advised him to apply for advanced ruling in respect of these issues. He told Ranjan that the advanced ruling would bring him certainty and transparency in respect of the said issues and would avoid litigation later. Ranjan agreed with his view but has some apprehensions. In view of the information given above, you are required to advise Ranjan with respect to the following. The tax advisor asked Ranjan to get registered under GST before applying for the advanced ruling, as only registered person can apply for the same. False pa. Any person can go for advanced ruling. Advanced ruling is whenever you have a doubt and you need a clarity about it, you can ask the department. There is authority called as advanced ruling authority. Whether the said transaction is supply or not a supply, can I take ITC or not, like that, you can ask the questions to them. That can be asked by any person, whether a registered person or an unregistered person who is desirous of obtaining registration, any person. Then, number 2, Ranjan is apprehensive that if at all advanced ruling is permitted to be sought, he has to seek it every year. Whether Ranjan's apprehension is correct? No, no. Advance ruling once obtained will be valid till the time there is a change in the change in that section, change in the provision of that section. Okay. For example, section 7 is supply. You got the advance ruling. Now, if section 7 is not amended, till the time there is no amendment in section 7, the advance ruling will be valid. If there is any change in section 7, means amendment has taken place, then only we need to go for new advance ruling. Otherwise, the advance ruling obtained will be valid till the time there is no change in law. Got it? Next. The tax advisor is of the view that the order of advance ruling is final and not appealable. Whether the tax advisor view is correct? No. Authority for advance ruling can be appealed to appellate authority for advance ruling. We have WR and RRR. WR is authority for advance ruling. RRR is appellate authority for advance ruling. Definitely we can go for appellate authority for advance ruling. Okay. Next. Shambhav, Ranjan's friend, is a supplier registered in Delhi. He is engaged in supply of goods which Ranjan proposes to supply at the same commercial level that Ranjan proposes to adopt. He intends to apply the classification of the goods as decided in the advance ruling to be obtained by Ranjan to the goods supplied by him in Delhi. Whether Shambhav can do so? No, because advance ruling obtained is binding only on the applicant and the department, not on any other person. Even though the facts of the case is same, so even though in this case Shambhav's facts of the case is same as Ranjan, but Shambhav cannot rely upon the advance ruling obtained by Ranjan. Even Ranjan cannot use the same advance ruling in another state. He cannot use it in another state because advance ruling obtained in a state will be valid in that state. He cannot use it in another state, and another person cannot use in this state itself. Got it? So because it is binding only on applicant in that state plus department. Okay. Subject to state and applicant, yes, that's what, binding only on them. So advance ruling is binding only on the applicant who sought it and the concerned officer or the jurisdictional officer. This implies that advance ruling is not applicable to similarly placed another taxable person in the state. It is only limited to the person who has applied for an advance ruling. Okay, but this is the mistake what your CMA study material has. In your CMA study material, they have given lot of advance rulings, which is of no use, because those advance rulings are applicable only to those people. I don't know why they have given. They lost this simple logic. In your study material, they gave a number of advance rulings. You know that? Your study material, once you scroll through, lot of advance rulings they have given. But unfortunately, those advance rulings are binding only on those companies for which it is given. It is not applicable for others. Thus, those are not case laws. Those are not like High Court judgments or Supreme Court judgments and all. So unnecessarily they give, because of which the book size has increased. Okay, maybe they would have offered to one person to prepare a study material. They would have paid per page 10 rupees. We will give you. You prepare and give study material. Whatever is available in Google, everything has put, and they have given. Okay, but advance rulings are not applicable for you actually. Now with this, we completed GST related mighty 50 questions. So in that 40 questions are related to GST, and we are now moving on to customs related questions. The remaining 10 questions is on customs. Have a look into question number 41, and for you, we don't you don't have the basic concepts. So you have mainly valuation, as I told you, valuation, procedures, and then warehousing. These kind of topics are there. So that's why I have taken from there only. In valuation mainly, there is one rule called as computed value method and another rule, deductive value method. These are the two methods which is important at CMA final level. Okay, so this is one question based on computed value method. What is the difference between computed value method and deductive value method? First we will discuss that, and then we will come back to this question. You take your book. In your book, you can see at the end I have given the customs portion. Check page number 306. Check page number 306. You can find deductive value method. What is this deductive value method means? Usually we take the price in India. See, we should ascertain the price at the time of import. That price at the time of import will be taken as the value for payment of customs duty. And in that we have various methods when buyer and seller are related and price is not the sole consideration. So we have various methods. All these methods you can remember with TIS DCR. T for first transaction value. That is, if buyer and seller are related, that is importer and exporter are not related and price is the sole consideration, then we go by transaction value. Otherwise we determine the value as per rules. In that ISDCR, I for identical goods and S for similar goods, D for deductive value, C for computed value, R for residual value. You can see that information of TIS DCR in page number 303. I have given there. So first we need to take the transaction value. If the transaction value fails, we need to determine the value of identical goods. If that identical goods also fails, then we need to take similar goods. If that similar goods also fails, then deductive value and then computed value and then residual value. But between deductive value and computed value, you can choose anything. Okay, so not necessary that first we need to apply deductive value, then only computed value, not like that. Between deductive value and computed value, the importer can choose. These are the different methods of valuation in case of imports. In that we are discussing now what is deductive value. Logic simple. I need the price prevailing at the time of importation. So I see the selling price in India after importation. I have imported and the price is, product is being sold. So I take the selling price and do the back working. I do the reverse working, go back and arrive at the price at the time of import. For example, I am an importer who is importing from USA and these goods are coming to India, and in India I kept the goods in a warehouse and thereafter I am selling the goods in the from the warehouse at say 7,000 rupees. What is the price at which goods are sold after import? What is the price at which goods are sold after import? First level after importation, 7,000. Take that 7,000. That 7,000 is already excluding GST. If that 7,000 is including GST, take out that because it is post import. From this 7,000, all post import expenses you need to reduce. All post import expenses. Now, is commission post import? Yes. Is general expenses post import? Yes. Profit also post import. Even storage charges also post import. Customs duty also post import. But insurance is pre-import. Okay, so you exclude. Take your calculator. 7,000 minus 500 minus 100 minus 80 minus 20. Now you will get one value, 6,250. That 6,250 will be taken as the deductive value. This is one way, deductive value method. Whereas another one is there, computed value method. What is that computed value method? Computed value method is like top-down approach. That is, we see the cost data. Cost of material, cost of labor, cost of expenses, overheads, etc. Then transportation cost, profit, then finally we arrive at the value. Got it? So you can see here, computed value. In computed value, we'll take raw material cost, processing cost, usual profit and general expenses, and transportation cost from where to where? From there to here. So finally we get the computed value. That computed value will be 1,500 plus 500, 2,000 plus 200, 2,200. This is about computed value method. Is it clear, pa? So there are two methods, either deductive value method or computed value method. Now you can see this question. Mr. X imported certain goods from a related person, Mr. Paul of US, and the transaction value has been rejected. Rule 4 and Rule 5 of import valuation rules are found inapplicable as no similar identical goods are imported in India. Mr. X furnishes cost related data of imports and requests customs authorities to determine the value accordingly as per Rule 8. The relevant data are as under. So now we need to do the computed value method. Okay. First, cost of materials incurred by Mr. Paul. So that will be taken. Then fabrication charges also cost. Other chargeable expenses 400. Other indirect cost and freight, loading. Normal net profit margin is 20% of FOB. If it is FOB sale price, 20% on sale price means on cost how much? 25%. Whatever they have given is 20% on sale price pa. If it is on cost, it will be 25%. Okay. Then air freight. Air freight, we have one point. What is that? Actual or 20% of FOB, whichever is lower should be taken. Insurance, if actually is ascertainable, we will take actuals. Exchange rate given is 65 rupees per dollar. Now, we will do computed value method. So, first we will take 2000, 1000, 400, 250, 250, 100. You add everything. You will get one cost. What is the cost that you have got? $4,000 you will get. Check. 2000 plus 1000, 3000 plus 400, 250, 250, 100. $4,000 is the cost. Now, what is the profit? 20% of FOB. So, that can be taken to 25% of cost. How, sir? Let FOB 100 and profit will be 20. Then cost will be 80. So, if cost is 80 and profit is 20, what is 20 by 80? 20 by 80 will be 25%. Is it clear? So, therefore, 25% on cost. Now, what is the cost? $4,000. $4,000 into 25% is what? 1000. So, therefore, profit will be 1000. Now, when you add this, you will get FOB. So, FOB will be $5,000. Now, what is the air freight? Air freight is how much? Actuals 1500 or 20% of FOB. 5000 into 20%, whichever is lower will be 1000. Now, for CA final exam, one adjustment needs to be done. That adjustment is not applicable for you. CMA final, you do normally. What is that normal? Actual or 20% of FOB, whichever is lower will be 1000. So, just take that 1000. Air freight 1000. Air freight will be 1000. And insurance, what will be the insurance in this case? 50. Insurance will be 50. So, 5000 plus 1000, 6000. So, plus 50. 6050 will be taken as the assessable value. Is it clear? Understood? 6050 will be taken as assessable value in this case. So, here it is given as 5070 because I told you na that CA adjustment. So, we should not do this adjustment for CMA final. We should just take whichever is lower, that whichever is lower is 1000. So, therefore, the answer will be 6050. 6050 into 65. 6050 into 65. How much 6050 into 65? 3,93,250 will be taken. Okay. Kindly make the correction. So, 1000 should be added. This adjustment we should not make. We should just take whichever is lower. Okay. Just take whichever is lower. This minus already considered in FOB, that adjustment not required. So, only 1000 will be taken. Insurance actual ascertainable, we will take actuals. So, assessable value will be 6050. Assessable value as per rule 8 will be like Indian rupees. So, 3,93,250. Okay. And they have given one paragraph. Have a look into that paragraph. The customs authorities are of the opinion that since the value as per rule 7 can be determined at 4 lakh, there is no need to apply rule 8. Can the request of X be legally acceptable? Rule 7 is deductive value. As per deductive value, 4 lakhs is there. Computed value is 3,93,250. Which is lower? 3,93,250. So, can they choose 3,93,250? Yes. Not necessary that they need to go for deductive value. I told you between deductive value and computed value, they can choose. Okay. So, that is up to this. We'll take a break and then we will see the remaining questions. Okay. More means we will go for deductive value itself. Suppose if deductive value is only 3,50,000, we go for deductive value 3,50,000. Between these two, computed value, deductive value, we can choose. But before applying these two, identical goods and similar goods should not be satisfied. Then only we will come here. So, that is what in question itself they have given. Rule 4 and rule 5 are inapplicable. Rule 4 is identical goods, rule 5 is similar goods. Okay. Look into question number 42. Mission Life, an NGO from Indore, Madhya Pradesh, has imported 800 metric tons of food products from Australia for free distribution to needy people in backward area of Sagar, Madhya Pradesh, under a central government scheme. Exporter from Australia has charged only $20 per metric ton to cover cost towards freight, insurance, etc., and none towards cost of food products. So Customs Department found that at or about the same time of importation, following import of said food products of Australian origin have been made. So whenever we are importing goods from a particular country, and if the price is not ascertainable, then we go for identical goods. What is identical goods? Identical goods are also imported goods at or about the same time, and it should be same to same in all physical features and characteristics, imported from the same country and same producer preferably. Same producer is not mandatory, same producer preferably. So that is the meaning of identical goods. You can see here, identical goods means it is in page number 304. In your book you can see identical goods means imported goods having the same physical features, having the same physical features and quality, imported from the same country of production, same producer preferably, then it will be called as identical goods. If it is identical goods, so then we will take the value of that identical goods, and if we have more than one identical goods, we see the lowest of such value, okay. But while doing the identical goods, the least quantities and all should not be taken, because comparable quantity should be more or less the same. But if it is like completely meager, small quantities, that should not be taken into account. So coming back to this, here how many metric tons we imported? 800 metric tons. Compared to 800 metric tons, this 40 metric tons and 100 metric tons are too less. So therefore we take only this, and here we have more than one identical goods. We have total 4 identical goods. But if you have more than one identical goods, which should be taken? The lowest should be taken. What is the lowest? 160. So 160 should be taken as the answer in this case. So 800 metric tons into $160 will be taken as the value. Is it clear? Got the clarity? That is in case of identical goods. Then question number 43. Paramjit Limited imported a machine from Oliver Equipments UK. The FOB price of the machine was settled at 6,000 UK pounds. The machine was shipped on 1/10/2023. Meanwhile, Paramjit Limited renegotiated the price of the machine with Oliver Equipments, which agrees on the reduced price of 5,000 UK pounds on 10/10/2023. The machine arrived in India on 18/10/2023. All other details pertaining to the machine are as under. So what is the negotiated price? What is the negotiated price? 5,000 UK pounds. Even though the initial price was 6,000, but renegotiated, what is the price prevailing at the time and place of importation? 5,000. Even though it was 6,000 in invoice, but he is going to pay only $5,000. So therefore 5,000 pounds. So 5,000 UK pounds will be taken as the FOB price. Then to this FOB price, we need to make certain adjustments. See this. License fee that the buyer was required to pay in UK as a condition of sale. So all pre-import expenses should be added to the value. It's a pre-import expense because it is payable by buyer to the seller before import itself. So therefore this 500 UK pounds should be added. Buying commission, no, buying commission will not come. Only selling commission will come, that too paid by the importer on behalf of exporter. Buying commission is a commission paid by the importer to his agent. That will not be included in the value. Only selling commission will come. Due to deep drought at the port, machine was not taken to the jetty in the port, but was unloaded at an outer anchorage. The charges incurred for such unloading and transportation of machine from outer anchorage to the jetty in barges, that is small boats, were rupees 50,000. So that 50,000 will be taken as the transportation cost, okay, freight cost. Date of presentation of bill of entry was 15/10, and the rate of exchange notified by CBIC on this date was 100 rupees per pound, and date of entry inwards was 18/10, and the rate of exchange notified by CBIC on this date was 105. Rate of basic customs duty 15%. Tell me which rate should be taken. For exchange rate, always it is date of bill of entry. Bill of entry date only should be taken for exchange rate. What is the bill of entry date? 15/10. So as on 15/10, what is the exchange rate? 100 rupees per pound, that should be taken. But for rate of duty, date of presentation of bill of entry or entry inwards, whichever is later. So here bill of entry is 1510 and entry inwards is 1810. Whichever is later is 1810. So therefore 15% should be taken as the rate of customs duty in this case. Then insurance premium details were not ascertainable. When insurance is not ascertainable, we need to take 1.125% of FOB. Okay, and nowhere in the question it is given that freight is not ascertainable. If the question says freight is not ascertainable, then we need to take 20% of FOB. But here they gave freight. What is that freight? Only 50,000 rupees will be taken as the freight, because light rate charges, bar charges, all cost incurred up to the port of importation will be part of freight. Okay, so now in this case 5,000 pounds into 100 rupees per pound, so that will be taken as the value. So 5,000 into 100 is how much? 5 lakhs. Same way this 500 UK pounds into 100, 50,000. So 5 lakh 50,000. Understood? Then buying commission will not come, and barge charges, that is transportation cost. Insurance will be 1.125% of 5,50,000. If you add, you will get the assessable value. On the assessable value, what is the basic customs duty to be taken? 15%. So 15% will be taken as the basic customs duty on that. Okay. And suppose if they give social welfare surcharge, that also should be added. If they give IGST, while doing IGST, everything we should add: assessable value, basic customs duty, social welfare surcharge. Finally, we need to compute IGST. Next. Look into the another question, question number 44. Calculate the assessable value rounded off to nearest to 1 rupee under the Customs Act 1962 with appropriate working notes from the following particulars related to import of a machine by sea by Daksh Industries from USA in the month of October 2023. Cost of machine at the port of exportation, that is FOB price. What is the FOB price? $8,200. Freight from exporter's port to port of import 1,800. What freight? Sea freight or air freight? Sea freight. We will take actuals. If it is air freight only, we will compare with actual or 20% FOB, whichever is lower. So it is actuals, we will take actuals. Daksh Industries has paid to seller the cost for packing, not as a condition of sale, but including the cost of mission. So cost of packing will definitely be added. Okay. Then actual selling commission paid by Daksh Industries to local agent of exporter, local agent commission. That local agent commission also will be included, because who is local agent? Exporter's agent. Actually, who should pay? Exporter should pay, but importer is paying, means it's an indirect consideration to the exporter. Then actual insurance charges paid are not ascertainable. Not ascertainable means we need to take 1.125% of FOB. But which FOB? Revised FOB. First we need to see the FOB given, make the adjustments and get the revised FOB. On that we need to compute freight and insurance. Okay. Then ship demurrage charges paid by Daksh Industries at port of importation, that is also part of freight. There are two types of demurrage charges: ship demurrage charges and demurrage charges. Ship demurrage charges will be paid by the person in charge of the conveyance for anchoring the ship at an outer jetty. Okay. Whereas normal demurrage charges will be payable by the importer for not clearing the goods within the permissible time. As demurrage charges are payable after importation, it will not be included in value, but ship demurrage charges will be included in the value because it will be paid before importation. Is it clear? Then, so this will be part of freight. Engineering charges paid by Daksh Industries to consultancy firm in Mumbai as a condition of sale. Generally, all expenses paid outside India only will be included. If any expenditure is paid in India, that will not be included in the value. Got it? Then accordingly, first we need to take 8,200. 8,200 into, so we have exchange rate 80. So 8,200 into 80 is how much? 6,56,000. And then add local agents commission. What is the local agents commission? 20,000. Why this packing cost will not be included? Because it is already included. See, it is to be included in the question. It is in the given price. It is already included. So that's why we are not adding anything. So except freight and insurance, everything you make the adjustment. Okay. So this we have adjusted. This also we have adjusted, and engineering charges will not be included. So now you will get the revised FOB. So what is the revised FOB or FOB as per customs? 6,76,000 on that freight. In freight, we need to take 1,800 pounds or $1,800 into 80 plus even ship demurrage charges also will be part of freight, and then insurance will take 1.15% of 6,76,000. So you get the assessable value. Understood? Why engineering charges will not be included? See, if there is any intangibles which are procured in India, that will not be included. Okay, if it is procured outside India and used in imported goods, then only it will be included. That is with respect to this. So then look into question number 45. Mr. X, a chemical manufacturer, imports a machine from Germany on 12 January 2019 for rupees 20 lakhs. Mr. X is eligible for concessional rate of customs duty on capital goods imported by him, subject to the condition that he follows customs import of goods at concessional rate of duty rules. We have these rules. So these rules are there in your syllabus. Import of goods at concessional rate of duty rules, and as per these rules, if any capital goods are imported either without payment of customs duty or at concessional rate, and if it is sold in India after usage, depending upon the depreciable value, we need to pay the customs duty along with interest. What is the depreciable value? While doing the depreciation, we need to follow a different method. That is, for every quarter or part thereof in the first year, it will be 4%. For every quarter or part thereof in the second year and third year, it will be 3%. For every quarter or part thereof in the fourth and fifth year, it will be 2.5%. For every quarter or part thereof, thereafter, it will be 2%. We need to reduce, okay, and we get the depreciable value. Now, if you observe here, when the machinery is put to use, 1st February 2019, means from 1st February 2019, we need to count the depreciation, okay. On 5th April 2022, Mr. X wants to clear the machine for home consumption. Means, what is the number of years for which we need to compute? First, in the year 2019, all 4 quarters are covered up. All 4 quarters, that is February, Jan, Feb, March. So quarter or part thereof, calendar quarter we need to take. So first year is 2019. So for every quarter or part thereof in the first year, it will be 4%. Second year and third year, it will be 3%. Fourth and fifth year, it will be 2.5%, and thereafter it will be 2%. First year 2019, 4 quarters into 4, that is 16%. Then again 2020, because up to 2022, 2020 is second year, 21 is third year, 22 is only fourth year. Okay, so see this: first year, second year, third year, fourth year. For second year also, third year also same, 3%, 3%. So 12 and 12. For fourth year, up to April. Up to April means what? Jan, Feb, March and April, 2 quarters. For the 2 quarters, we need to compute 2.5, that is 5%. Now you do the total of this. 16 plus 12 plus 12 plus 5. How much it will come to? 45%. So this 45% will be taken as the total depreciation. Is it clear? So what we need to do is that first we need to see the value of the capital goods. What is the value of the capital goods imported? 20 lakhs. What is its depreciable value? Minus 45%. See, 45% is depreciation. You reduce it. So therefore 20 lakhs minus 45%. How much it comes to? 9 lakhs will be taken as the depreciable value. No. Minus 45% pa. 20 lakhs minus 45%. What is 20 lakhs minus 45%? Minus 45% means in calculator minus 45% you should do. Balance you need to tell. What is the balance? 11 lakhs. So 11 lakhs will be taken as the depreciable value. Are you understanding? Now on this 11 lakhs we need to pay customs duty. How much customs duty we need to pay? What is the rate at which we have got basic customs duty? 20%. 11 lakhs into 20% is how much? 2,20,000. But what was the concessional duty which you have already paid at the time of import? 5% you have already paid on 20 lakhs. So the differential amount we need to pay now. So that is 11 lakhs into 20%, 2,20,000 minus at the time of import 20 lakhs into 5%, that will be 1 lakh. So remaining 1,20,000 we need to pay. Got it? And on the top of this we need to pay interest, but here they are asking us to ignore interest computation, otherwise we need to pay the interest. What is the rate at which we need to pay interest? 15% per annum we need to pay the interest. And the information related to this, import of goods at concessional rate of duty rules I have given. So you can see this in page number 327 of your book, page number 327, 328 and 329. You can see in 4 pages I have given, and this is given as a separate chapter in your study material. So therefore please go through this, and the revision video related to this is available in the CA final chapter 5's revision. So you can see those revision videos, there it is available. Okay, so you can just keep this book and you can do the revision video, so it will definitely be helpful, whichever chapter you feel like. But this is one chapter which you should definitely read, because it's a separate chapter in study material. You may get a question similar to this. This is one question related to import of goods at concessional rate of duty. Then look into question number 46. This question number 46 is related to baggage. After staying abroad for 16 months, Mr. Vasudev shifted his residence to India from Sydney to Kolkata on 12/10/2021. At the time of landing at Kolkata, he brought the following items: gold bars 30 grams valued at 90,000 rupees. So basically, in case of gold bars and all, we don't have the concessional rate. What is a baggage rate that is applicable? 38.5% is a baggage rate. But there are 3 goods for which 110% baggage rate will be applicable. What are those 3 goods? Firearms, cartridges of firearms exceeding 50, then cigarettes exceeding 100, cigars exceeding 25, and tobacco exceeding 125 grams. For these 3 list of goods, the rate will be 110%. Okay, and next, for gold bars, whether we get the rate 38.5 or 110%, 38.5, but we will not get the general free allowance. There are 6 goods for which general free allowance is not available. What are those 6 goods? These 3 goods: firearms, cartridges of firearms, cigarettes, that. Plus, next we have liquor, alcoholic liquor in excess of 2 liters, LED, LCD, plasma TV, then gold or silver in any form other than ornaments. Okay, for this general free allowance is not available. You can just look into your book related to this information on baggage. So what are the goods for which we will not get general free allowance? Annexure 1 items, page number 340. Page number 340, Annexure 1 items, there won't be any general free allowance. What are they? Firearms, cartridges of firearms exceeding 50, cigarettes exceeding 100, cigars exceeding 25, tobacco exceeding 125 grams, then alcoholic liquor in excess of 2 liters, gold or silver in any form other than ornaments. For ornaments, general free allowance is available, but for gold or silver in any other form, that is gold bars, gold biscuits, etc. Then we have LED, LCD, plasma TV. These are the 6 goods for which general free allowance not available, means always baggage duty is payable. And in this also, for the first 3, the rate of duty applicable is 110%, and the next 3, the rate of duty will be 38.5%. Next, what is the general free allowance? What is the general free allowance? Simple pa. You remember it in 4 points. Point number 1, if the passenger is coming from other than Nepal, Bhutan, Myanmar, and if they are tourists of foreign origin, then it will be up to 15,000. In other cases, it will be up to 50,000. Okay, if they are coming from other than Nepal, Bhutan, Myanmar, tourist of foreign origin, up to 15,000. If they are other than tourist of foreign origin, it will be up to 50,000. Okay, this is the general free allowance. If they are coming from other than Nepal, Bhutan, Myanmar, if they are coming from Nepal, Bhutan, Myanmar, if they are coming by land route, there is no general free allowance. Other cases, up to 15,000 is the general free allowance. Now, coming back to this question, where is this person coming from? He is coming from Sydney, means other than Nepal, Bhutan, Myanmar, correct? Is he a tourist of foreign origin? No, he is an Indian. So therefore, what will be the general free allowance? Up to 50,000. So in this case, up to 50,000 will be general free allowance. And in the first case, GFA available or GFA not available? GFA not available. Then alcoholic liquor 4 liter valued at 10,000. So which case general free allowance is available? 2 liters general free allowance are available. Remaining 2 liters general free allowance is not available. 20 boxes of cigarettes, each box consisting 10 numbers. So 20 into 10 means 200 numbers. In that again 100 cigarettes general free allowance available, beyond 100. Because if you see annexure 1, only exceeding 100 not available, but up to 100 is available. And next, one notebook computer, one laptop, we have an exemption. Used personal effects is always exempted, and one laptop for a person more than 18 years of age is exempted. Okay, so one laptop is exempted, notebook or laptop computer is exempted. Then one PC meant for personal use. So personal computer is not exempted, that will be dutiable. And hand pistol will also be dutiable, and general free allowance is not available. Whenever we get a question like this related to baggage, you need to prepare it in a particular format. Okay, so you can just write down in your notebook as to how to present it. Okay, first you need to see particulars, and then eligible for GFA, next not eligible for GFA. When it is not eligible for general free allowance, again it is divided into at the rate of 38.5%, at the rate of 110%. But eligible for GFA, always the rate will be 38.5%. You need to present it like this, so that when you divide everything accordingly, it will become easy for you while arriving at the answer. Okay, particulars, eligible for GFA will always be at 38.5%, not eligible for GFA we have 2. What are the 6 articles not eligible for GFA? That annexure 1, but in that first 3 will be 110, remaining will be 38.5, that's why. Now, what is the first article given in the question? Gold bars. Gold bars, is that gold bars eligible for GFA or not eligible for GFA? Not eligible for GFA. So it should go to not eligible for GFA column. In that again, what will be the rate at which we need to take? 38.5%. So what is the amount of gold bars? 90,000. You need to put it in this second column, 90,000. What is the next product? Alcoholic liquor. Alcoholic liquor, how much is eligible for GFA? 2 liters. Total how much is the value? Question, total how much is the value? 10,000. For 10,000 is for 4 liters. 2 liters eligible for GFA. So 5,000 rupees, you keep it under eligible for GFA. 5,000 rupees, you keep it under not eligible for GFA at 38.5%. Okay, next. What's next? 20 boxes of cigarettes. So cigarettes, how many cigarettes we are bringing? 200 cigarettes. What is the total value? Cigarettes value, 4,000. In that 2,000 eligible for GFA, remaining 2,000 not eligible for GFA, but the rate will be 110%, not 38.5%. Cigarettes beyond 100, the rate will be 110%. Then what's next? Notebook computer. So notebook computer is exempted. Notebook computer is exempted. Then next, PC computer, that is dutiable. What is the value? 40,000, but that is eligible for GFA. Next. Hand pistol, eligible or not eligible for GFA? Not eligible for GFA. So it should come in the last column. How much? 50,000. 80,000. 83,000. Okay. That's it, no? Anything else? Now you do the total of these 3 columns. 5,000, 2,000 and 40,000, that is 47,000, 95,000, 85,000. Now minus general free allowance up to 50,000. So general free allowance, here nothing. So what will be the dutiable value? What will be the dutiable value? So the dutiable value, if you see, here it is 0, minus only na, whereas here it is 95,000, here it is 85,000, and at 38.5%, sorry, that is baggage duty. Baggage duty. What is the baggage duty payable? What is the baggage duty that is payable? In this case, nothing. Next case, 95,000 into 38.5%. 95,000 into 38.5%. How much? 36,575. And then this 85,000 into 110%. 85,000 into 110%. 93,500. So this will be the answer for that question. Got it? You follow this presentation so that you will get the correct answer. You will not make any mistake. This is one past CMA final question only, exam question only. Next, say this, question number 47. Mr. Noddy, aged 40 years and a citizen of Australia, is on a solo trip to India for 1 month to meet his Indian friend residing in Mumbai. He carries with him following articles as a part of baggage. Used personal effects 80,000, other articles. So what is the answer for used personal effects? Exempted. Used personal effect is exempted. And this will be dutiable. Other articles, 65 cartridges of firearms at 1,000 rupees per cartridge. How many cartridges will come under general free allowance? 50. Remaining will come under beyond 50. So general free allowance not available, and 110% is the rate. Then 150 grams of tobacco. How many grams is eligible? 125 grams. Remaining 25 grams will be 110%. Mobile phone dutiable. Sir, one mobile phone come under personal effect? No, because if mobile phone is given separate, which means that it's a new one. So then 50 cigars. How many cigars are eligible? 25 cigars. So remaining 25 not eligible. Used personal effects of his infant children for donation. Is the infant coming? No. When infant is not coming, you will not get the general free allowance of infant. Means this used personal effects will become dutiable. Generally used personal effects is exempted if the passenger is coming. Infant is not coming. Due to that reason, this 10,000 rupees will become dutiable. And he is a citizen of Australia, means tourist of foreign origin. How much will be taken as a general free allowance? Up to 15,000. Up to 15,000. Now, this question also we need to do it in the same format. So we will prepare it like this. Particulars. Particulars. Eligible for GFA, and eligible for GFA rate will be 38.5%. Then not eligible for GFA, we have two rates, 38.5% and 110%. What is the first article that you can see there? Personal effects. Used personal effects. Used personal effects, that will be exempted. Then what is the next article? Other dutiable articles. Other dutiable articles 1 lakh. So that will be eligible for GFA, 38.5%. Next, 65 cartridges. So in cartridges, how many cartridges total? No, value. 65,000. How many cartridges? 65. How much will come under eligible for GFA? 50. So 50,000. Remaining 15,000 will come under not eligible for GFA, and that will be at 110%. Then next, tobacco. So what is the total value of tobacco? 1,500 is the total value. That will be 150 grams. How much is eligible? 125 grams. So 1,000 250, whereas remaining 250 will go to 110%. Next, mobile phone. Mobile phone is eligible for GFA. How much is that? 50,000. Next, cigars. And what is the value of cigars? 5,000 divided by 50 cigars. 25 is eligible. So 2,500. Remaining 2,500 will go to not eligible for GFA. Next, anything else? Personal effect of infant. Personal effects of infant. How much? 10,000. That is dutiable. Now, if you see the total dutiable value, 1 lakh plus 50, so plus 50, 2 lakhs, 2 lakhs plus 2,500, 12,500 and 2 lakh, 13,250, 13,750, correct? Check. 1 lakh, 50,000, 1,250, 50, 2,500, 10,000. How 163? 1 lakh plus 50, 50 are 2 lakhs. 1 lakh plus, correct? 2 lakh 13,750. Here 0. And here it is 15,000 plus 2,500 plus 250, that is 17,750. Minus GFA. General relevance is only 15,000. So here there is no general relevance. So the dutiable value, if you see, the dutiable value will be here 2,13,750 minus 15,000. 1,98,250, 750, here 0, 17,750 and the baggage duty. In this case 1,98,750 into 38.5%. 76,590. 590, here 0, here 519, here 110%. 17,750 into 110%. 19,525. Okay. Next, can I proceed? So this is the answer. Duty payable 76,519. Okay, and the other things that is on 50 etc. and all chargeable at 110%, like that it is given. Now look into question number 48. This is on warehousing provisions. Look into the question. Vipul imported certain goods in May. An into-bond bill of entry was presented on 14th May and goods were cleared from the port for warehousing. Assessable value on that date was $1 lakh. The order permitting the deposit of goods in the warehouse for 4 months was issued on 21st May. Vipul deposited the goods in warehouse on the same day but did not clear the imported goods even after the warehousing period got over on 21st September. So what is the date on which they have deposited the goods? That is order of deposit. The order of deposit is 21st May. What is the period for which goods are deposited in warehouse? Should be deposited in warehouse 4 months. Generally, what is the time limit for deposit of goods in the warehouse without payment of customs duty? 1 year we can deposit the goods in warehouse, but that 1 year, considering the nature of goods, can be reduced. Accordingly, they reduced it to 4 months. So 21st May, 4 months means, so 21st June, July, August, September. By 21st September itself, 4 months is over. But this person has not cleared the goods even on expiry of 21st September. In this regard, what is the consequences? There is one Supreme Court case, Kesoram Rayan case, which says that if the goods deposited in warehouse is not cleared within the permissible warehousing period. On expiry of that permissible warehousing period, the goods are deemed to have been cleared. That date is considered as the date on which goods are cleared for payment of customs duty. Got it? Even though the goods are actually cleared at a later point of time. So read this case. Read this case. So what does this case says? Goods which are not removed within the permissible period are deemed to be improperly removed in terms of section 72 on the day they should have been removed as per Kesoram Rayan case. So when the goods are deemed to have been removed on 21st September itself, then a notice was issued under section 72 of the Customs Act demanding duty and interest. People cleared the goods on 14th October, even though the goods are actually cleared on 14th October, but for the purpose of computation of customs duty, the goods are deemed to be cleared on the date of expiry of warehousing period, that is 21st September itself. Okay, so which rate should be taken? Whether the rate prevailing at the time of deposit should be taken? No, this 15% is irrelevant, because always for the computation of customs duty on warehoused goods, we need to take the rate of duty prevailing at the time of ex-bond bill of entry. But ex-bond bill of entry is filed later, the time limit for clearance is already over, so therefore it is deemed that the goods are cleared. So whatever is the rate applicable at the time of expiry of warehousing period, that is the 10% only should be taken in this case. And what is the value of the goods? US dollar 1 lakh, on that 10% will be taken as a customs duty. Next. Here we need to compute the interest also. See the question. Demanding duty and interest, Vipul cleared the goods on 14th October, compute the amount of duty and interest payable by Vipul while removing the goods on the basis of the following information. Sir, which exchange rate to be taken? Exchange rate prevailing at the time of warehouse order, that is into bond bill of entry. We present in bond bill of entry for depository of goods in warehouse, that date exchange rate should be taken. Now, what is the assessable value of the goods? $1 lakh. 1 lakh into 65.2, 65 lakh 20,000. On that the customs duty will be 10%, that is 6 lakh 52, plus social welfare surcharge 65,200. But they are asking us to ignore IGST because IGST is exempted. So therefore we don't have to bother about IGST. What is the total customs duty payable? 7 lakh 17,200 is the total customs duty payable. Understood? Why are we not taking 12%, but why are we taking 10%? Generally we should take 12% only, but if the goods are not cleared within the permissible warehousing period, on expiry of that warehousing period, whatever rate is there, that only should be taken for computation of customs duty. But interest should be computed till the time you pay the customs duty. But interest will be from which date to which date? First 90 days there is no interest. From the warehousing order, first 90 days there is no interest. For remaining days only we need to pay interest. Now what you need to do? From the warehousing order till the date of payment of customs duty, you need to see how many days. What is the date of warehousing order? 21st May. From 21st May till the date they are making payment of duty. When are they paying the duty? 14th October. Till that date you count number of days from 21st May. In May, so 31 minus 21, 10 days in May. And June 10 days, July 31 days, okay. So May 10 days here, June 30 days, July 31 days, August 31 days, September 30 days, October 14 days. Total how many days? Minus 90 days, because 90 days you don't have to pay interest. Minus 90 days, what is that? For 56 days we need to compute interest. Is it clear? And at what rate? This is customs. We are paying to government. What rate? 15%. So take 7,17,200 into 15% into 56 by 365. 16,505 will be taken as the interest payable. Is it clear? Then can I proceed? Look into question number 49. With reference to the provisions of FTP, discuss giving reasons whether the following statements are true or false. This is one past exam question. If any doubt arises in respect of interpretation of any provision of FTP, the said doubt should be forwarded to CBIC, whose decision thereon would be final and binding. No, for FTP, which is the correct authority, DGFT, Directorate General of Foreign Trade, it is not CBIC. So therefore the given statement is false. So we need to refer to DGFT, Directorate General of Foreign Trade. Then authorization once claimed by an importer cannot be refused by DGFT. No, authorization is like license, and once the license is given to a person to import without payment of customs duty, the license will have a validity. After that, when he applies, DGFT may refuse. It does not mean that, always it should be given to that person. So DGFT may refuse to grant the license or renew the license. Okay, next, number 3, IEC is a unique 12-digit permanent account number based alphanumeric code allotted to a person for undertaking any export or import activities. False. IEC is a 10-digit permanent account number, not a 12-digit. So it is a 10-digit, nothing but the permanent account number only. Then number 4, waste generated during manufacture in an SEZ unit can be freely disposed in DTA on payment of applicable customs duty without any authorization. False. First, any waste and scrap which is generated or imported into India or generated in SEZ and cleared to DTA is deemed to be import into India. So if waste and scrap is imported into India, that is import. From SEZ when you buy anything, that is deemed import. If waste and scrap is either imported or deemed imported, we need to get a license, because in the form of waste and scrap, some other goods should not enter into India. For that reason, authorization is required. Okay. So any waste and scrap or remnant, including any form of metallic waste and scrap generated during manufacturing or processing activities, are allowed to be disposed in DTA freely without any authorization, even before fulfillment of export obligation, subject to payment of applicable customs duty. Got it? Then look into question number 50, the last question. X Limited imported a machine from USA under EPCG scheme with 0 customs duty in the financial year 23-24 for production of product P. Customs duty otherwise payable is rupees 20 lakhs. Find the specific export obligation and average export obligation. Export of finished goods P in the preceding 5 licensing years are as follows. Particulars FOB. Generally what happens is that whenever you are getting EPCG license, export promotion capital goods license, you have to achieve 6 times the duty saved as an export obligation. Means whatever is the duty saved into 6 times, that much you should have made the exports. What is the duty saved? 20 lakhs. Correct? 20 into 6 is 120 lakhs. You should achieve an export obligation of 120 lakhs. Okay. So then only this EPCG license will be valid. And even you should also achieve the average export obligation. What is average export obligation? You need to maintain the average of the last 3 financial years, and beyond that anything achieved is only towards specific export obligation. Now take the first year, and this you should achieve in how many years pa? 6 years. So we have date of 6 years. First year 30 lakhs. What is average? 0. Why? Because we don't have any previous year data. So average is 0. Means entire 30 lakhs will be towards specific export obligation. Can you see the table below? Clear? Next one. Next one. What is this next year export 30? What is the average? Average of the preceding 3 years 30. Why? 1 year data means that itself is the average. Na? So means you have achieved the average export obligation. Anything towards specific export obligation? No. 0. Then third year 40 lakhs. What is your average? Last 2 years 30 plus 30 divided by 2, 30. And 40 minus 30, 10 lakhs will be towards specific export obligation. Then fourth year 35 lakhs. What is your average? 30 plus 40 divided by 3. How much? 33.33 lakhs. 35 minus 33.33 lakhs. So 1.67 lakhs will be towards specific export obligation. Then 45 lakhs is the FOB value of exports. Now what is the average? 35 plus 40 plus 30. What is that? 35 plus 40 plus 30? 35. So 45 minus 35 will be coming to 10 lakhs. That will be towards specific export obligation. Then 60. So therefore you see the average of preceding 3 years. 45 plus 35 plus 40 divided by 3, 40. 60 minus 40, 20 lakhs will be towards specific export obligation. In every year you achieved average export obligation, plus beyond that you have achieved specific export obligation, but not sufficient. Why not sufficient? How much you should have achieved? 120, but you achieved only 71.67. You should have achieved 120. So therefore EPCG license granted will be recovered. Whatever benefit granted will be recovered. Why? Because they have not achieved the export obligation. Is it clear? Got it? So like this also you may get a question related to EPCG. So with this we completed mighty 50 questions. I covered every chapter that is applicable for you. Offences, appeals, FTP, every topic I have covered. Okay, and these 50 questions are really sufficient for the overall revision. Now what you need to do is that this one day before exam revision you do na, this 50 questions you should be thorough with, plus the amendments you should be thorough with. Already we discussed the amendments. You should be thorough with the amendments plus this 50 questions, and you need to see the monetary limits and time limits which is there. If time permits, watch the revision videos, otherwise go for the exam. Definitely you will be able to cope up. Okay.